Good morning to the ones who are watching this session recorded. Welcome back to CA Foundation Marathon Revision. In yesterday's class, we have two sessions. So in two sessions together, we finished chapter 1, chapter 2, chapter 3. That is theoretical framework, accounting process, bank reconciliation statement. After which, we didn't do valuation of inventories, but we finished consignment. In today's class, let's start with chapter 4, then do depreciation. Then we'll continue with remaining units in chapter 6, 7, 8, 9, 10. We can change the order a little bit here and there also. So today's session will divide into three parts, not two parts like yesterday. Today I'll give one break around 11 o'clock, 11:15 times. Not a 5 minutes break, but enjoy a 10 or 15 minutes break. And then the next break will be lunch break and we'll have a last session. So last session will end at 5 o'clock. 5 o'clock dot is when our class for the day will end. And at 1 o'clock will be your lunch break. You can plan your calls or meeting people at that time. And humble request, please don't use phone in the class or don't wear earphone during the class sessions. Humble request and wouldn't be tolerated if you do. With a smile on my face, I'll throw you out of the class. Okay, so let's get started. We are now going to discuss chapter 4 of our syllabus, valuation of inventory. This is again a unit what you can't skip for a reason because this chapter will have significant impact not just in this chapter, but this is a feeder chapter for your chapter of consignment also. Lot of things are common between this chapter and consignment chapter, and there is a possibility of questions from this chapter not being asked isolated way, but it can be asked in line with the chapter of rectification, meaning there need not be a chapter exclusively on valuation of inventories. You would have to know the chapter of rectification and valuation of inventory to answer some questions, and some questions from this chapter valuation of inventory are connected with goods sent on return or approval. Without knowing goods sent on return or approval, you can't answer valuation of inventory. So what we'll do is we'll start with valuation of inventory, and after that we'll also do goods sent on return or approval immediately. Class may also will not discuss this topic in detail, no, goods sent on return or approval. So we'll do that today and then go to depreciation. Depreciation will be done. Tell you. You will feel angry. You don't get angry. Depreciation will be done. Okay. Come on. Valuation of inventory is the name of the topic. So as we use the word valuation, what we mean is representation in terms of money. After you write your examination, your paper will be valued. For every answer that you return, they tell one number, amount of marks that you will get for that answer. Similarly, for every unit of inventory that's lying in the industry, we will assign some monetary value to it. What is the value of it? Representation in terms of numbers. That's what we mean when we say valuation. What are we trying to represent in terms of money? The thing that we're going to represent in terms of money here is inventory. Inventory includes three variants: raw material, work in progress, as well as finished goods. What do we mean by raw material? What do we mean by work in progress? And what do we mean by finished goods? Stock that is kept for sale in the ordinary course of operation is finished goods. Product that will be readily sold to the customers is finished goods. Product that is purchased, which will be later converted to finished goods, is raw material. Thing which is in the process of conversion but not yet completely converted to finished goods is work in progress. For example, if we are dealing with inventory as shirts or garments, somewhat like this, then to manufacture this shirt, ಕಲರ್ ಸ್ವಲ್ಪ ಡಿಫ್ರೆಂಟ್ ಇದೆ ಪ್ರೊಜೆಕ್ಟ್ ಪ್ರಾಬ್ಲಮ್ ಇದೆಯಾ ಅದೇ ತರ ಬರೋದಾ that is a pink color shirt. Dora, you know it, I guess. So that's a shirt that we're trying to sell. So we're selling this particular shirt. To make this shirt, we would need cotton as raw material. Using the cotton, the cloth will be work in progress. So work in progress will be in a semi-finished state. That is like thread or cloth. And thread is made out of cotton. Such cotton will be our raw material. Did you get this? So raw material is cotton. Work in progress is thread or cloth. Finished goods is shirt. So raw material is 0% processed. Finished goods is 100% processed. Work in progress is not 50%. Anything between 0 and 100. 1% processed is also work in progress. 99% processed is also work in progress. Because if it is 0, it is raw material. If it is 100, it is finished goods. Anything between these two will become. Okay, I hope you guys understood. Valuation of all the three variants of inventory is there in the syllabus, not just of CA Foundation, but syllabus of CA as a whole. But here in our focus, we are not going to deal with manufacturing entities. In CA Foundation, we are not going to learn manufacturing entities. We are going to deal with only trading entities. What is the difference between manufacturing and trading? Manufacturing entities will buy cotton, sell shirt. Trading entities will buy shirt, sell shirt. So what are we trying to deal in the case of CA Foundation valuation of inventory syllabus? Only trading entity, which will buy the same product and sell the same product. They won't process the product. Are you getting it? The valuation of raw material, work in progress, and finished goods are different. They're very different. What you have in your syllabus is only finished goods valuation. In CA Foundation, you have only finished goods valuation. In CA Intermediate, you will learn how to value raw material also, how to value work in progress also. I hope you guys got this. Now, why should we value inventory? Why should we value? The reason is inventory valuation is not part of regular accounting process. When we identify the transactions, pass journal entry, prepare ledger account for the same, then go down to prepare trial balance, after which we'll prepare final accounts, what we're going to learn today. In this process, inventory won't come. Reason being, inventory, as I told you in yesterday's class, it is an event. It is not a transaction. Inventory is an event, not a transaction. Can be identified and recorded. Event has to be measured in terms of money separately. Purchases, we know it by way of a transaction. Sales, we know it by way of a transaction. Closing stock is the result of purchase and sales. It is not part of journal entry. Whenever you write closing stock, where do you write it? You write it in trading account. Have you ever noticed writing trading account make closing stock account? No, you don't write just you write only closing stock. You write only opening stock. Why? There is no journal entry for closing stock. There is no journal entry for opening stock. It is event. It is valued at the end of the period. And that is again the reason why whenever the question comes on final accounts in your exam, they give trial balance and they give closing stock below trial balance. They won't give closing stock inside trial balance because it is an off trial balance item. There is no journal entry for it. It is not part of a regular accounting process. So it will give an outside trial balance, and that's the reason. And we learned actually how to incorporate it into trial balance also. So, sir, it is not a transaction. Why don't we skip closing stock? If you skip closing stock, your profit will be wrong. And your balance sheet financial portion also will be wrong. Why? For example, I purchased 10 units at rupees 10 each. I purchased 10 units at rupees. Value will become how much? 10 into 10. 100. I sold 8 units at rupees 15 each. How many units did I sell? At rupees? Can I say 8 into 15 is 120? Check ಮಾಡಿ ಒಂದ್ಸತಿ calculator. 8 tens are 80, 8 5s are 40, 80 plus 40, 90, 100, 110, 120. 120. Purchase is 100, sales is 120. Can I say 20 rupees profit? No. Why? Closing stock. Still 20 units are there with you. You purchased 10, you sold 8, still 2 units are left with you. So each of those 8 units that you sold, you purchased at 10. You sold it at 15. So how much is the profit per unit? 5. 5 into 8. 40 rupees is profit. 40 rupees is purchase price 100. Selling price 120. Profit is 40. Closing stock is 20. Imagine trading account. Debit side will write purchases 10 into 10 100. GP 40. 140 aita debit side total. Credit side sales 120. Closing stock 20. 2 units into 10 rupees each. If you don't write this closing stock, GP will become more. How can you record profit when you have not sold those units? Are you getting what I'm trying to tell? So closing stock is very important. If you don't trade closing stock, you will not be able to find profit. The reason is purchase might be for different number of units. Sales will be for different number of units. Units are not matching. Matching concept also since no match current year expense with current year income. When you write purchase of 10 units, sale should be 10 units. If sale is 8 units, remaining 2 units you should write here. If you don't write 2 units on credit side in trading account, you are matching 10 units cost with 8 units sale price. How can you find profit? It is incorrect. So 10 units are purchased, 8 units are sold. Remaining 2 units cost I would have to remove in trading account credit side. Only then I'll get correct profit. So it is very important. And if you don't value inventory and you don't write it in balance sheet, assets will become less. Inventory is purchased by paying cash. It is your asset. No? You should write all the assets in balance sheet. If you don't write all the assets in balance sheet, then your balance sheet financial portion will be wrong. We're in a time zone where people are writing assets which are not there in balance sheet. Assets which doesn't exist, only they're writing in balance sheet. Every other scam that's happening that you see around it, that's the point. No? Now, which is the latest scam that you heard? ED is also probing into this matter. Why, Ravindra? Why you didn't hear? The case is that they are recorded assets which are not assets. They have recorded things which are not assets, so that the company's value will be much more than usual. So they show assets more than what is usual. Why would you show lesser assets than usual? I don't know. So that's not the point. So we need to identify value of inventory to determine correct financial position and correct financial performance. Where? In financial statements. Come on, let's see the first point. Significance of inventory. First one, to determine income. Like I just mentioned, if you don't write closing stock correctly, your profit will be incorrect. Your profit will be, come on, let's quickly see how will it impact the profit. So the first example, we know that GP is sales minus cost of goods sold. Sales minus cost price is GP. Okay. In this formula, COGS is opening stock plus purchase plus direct expense minus closing stock. If I change my closing stock, my COGS will change. If my COGS changes, my GP will change. What is the formula for COGS? Opening stock plus purchases plus direct expense minus. Whenever my closing stock changes, it is wrongly written or it is not written or it is written at a higher value. What would happen? COGS will change. Whenever COGS will change, GP will change. Did you understand the fact that closing stock will impact profit? Wrong closing stock, wrong profit. No closing stock, profit will be wrong. So that's the point that I was trying to. Or this can be understood little differently with the help of trading account also. I can show this to you. Observe. Opening stock, purchases, sales, you write like this. You write closing stock, take the total on the credit side, write the same total on the debit side. Then you find GP as balance and figure. If this closing stock changes, this total year changes. If this closing stock changes, the total year changes. If the total year changes, this total changes. If this total will change, GP also will change. So ultimately, I'm trying to tell you only one single point. With the change in closing stock or with the change in opening stock, profit will change. It will determine our income or it will have impact on our income. I hope you guys understand. Very good. Let's see what sort of impact does it have. What sort of impact does closing stock has on profit? Let us see a case where this is the example and closing stock is 25. What is the total on the credit side? 125. Same total I'll write on the debit side. 125 minus 40, 50, 55. How much will be our GP? 70,000. Now, if in case I go to increase my closing stock from 25 to 30, shall I increase my closing stock from 25 to 30? If we increase from closing stock from 25 to 30, total on the credit side will no more be 1 lakh 25. How much will become our total? 1 lakh 30. Total on the debit side also will become 1 lakh 30. If total is 1 lakh 30 and the other item is 5 plus 40 plus 10, 55. How much will be our GP? 75. So with increase of 5,000, close the door correctly. With increase of 5,000 in closing stock, there is increase of GP by 5,000. Do you agree with me? 5,000 increase in closing stock will result in 5,000 increase in gross profit. Let us see the other way around. What would happen if I decrease my closing stock to 20,000? Total on the credit side will become 1 lakh 20. Total on the debit side will become 1 lakh 20. GP will become 65. So the logic is very simple. With increase in closing stock, profit will increase. With decrease in closing stock, profit will agreed. Very good. So this is something that you should remember. And opposite works with opening stocks. What works with opposite? What works with opening stock? Okay, I'll give you a small moment to have a look at this so that you can ask doubt also if you have any. Concentrate on this. If you can understand this, then ignore all of this. Can you understand this? What will happen with increase in closing stock? With decrease in closing stock? Come. Very good. Shall we now go to see opening stock impact? Am I going too fast? Very good. Let's see the impact of opening stock. The reason why we see the impact of opening stock is if you are having breakfast as Chitrana this morning, it is because last night there was Tanglana left over. So last night's dinner will end up becoming this morning's breakfast. So last year's closing stock will become this year's opening stock. So in the previous year, if closing stock is overvalued, in the current year, opening stock will be overvalued. In the previous year, if closing stock is undervalued, in the current year, opening stock will be undervalued. And I told you in the previous year, when the closing stock is increased, profit would have increased. Correct. In the current year, opening stock would have increased, because of which profit will decrease. So increasing in stock will not give you permanent profit. If you increase the stock value in 1 year, profit of this year will increase. It will decrease the profit of next year. So next year's profit you are booking now. It is against conservatism. Are you getting it? Let us see that with the help of our example. Same numbers I'll take. Old numbers. 1 lakh 25 is the total on the credit. I'll write 1 lakh 25 on the debit. If I find the balance in figure, 70,000 will become our GP. Now I will not touch my closing stock. Instead, I'll touch my opening stock. Instead of 10, I'll make my opening stock 15. Shall I? Come, let's increase our closing stock to 15. If I increase my closing stock to 15, my GP will no longer be 70. It is 1,25,000 minus 45 minus 50. 55 plus 1, 60. 65,000. So what happened with increase in opening stock by 5,000, closing the GP will be decreasing by 5,000. Why? Previous year my closing stock increased by 5,000, because of which profit increased by 5,000. Such 5,000 extra profit that was booked in last year will be decreased by current year's GP. Too fast? Too much? Understandable? Very good. Then the next point is, if in case instead of 15, if I take it as 5, then what would happen? 5 plus 40, 45. 45 plus 5, 50. 50 minus 1,25,000 is 75. My GP will become 75. When I decrease my opening stock, my GP will increase by 5,000. So the logic is, when opening stock increases, what will happen to profit? Decreases. What will happen when opening stock decreases? Profit increases. What this? This is exactly opposite of what we did with regard to closing stock. Understood? This is a concept based on which small 2 marker can come, or this can become part of your bigger question. Later we'll do no stock reconciliation at the end. Looks like your BRS kind of questions. In those kind of questions, this can be a small part that is put into it. Or in final accounts question also, they can ask you a small adjustment. Stock was overvalued, stock was undervalued. Such adjustment can come. You should be able to figure it out. And we've done similar ones in our rectification of errors chapter also. Rectification of errors may they tell no error. One of the error identified is stock was overvalued by 10,000. Got it? So we should be aware of this. So this is one part which is there in this chapter, but based on this, questions can come in any of the chapters. Got it? And this extension is there in CA Inter. This we will learn in several instances in CA Inter again. Several in CA Inter, when you do insurance claim chapter, or when you do single entry chapter, when you do partnership chapter, again, or when you start learning accounting standards, this concept will come all again. So not something that you should forget at foundation, but something that should carry forward to intermediate. Okay, great. So this can be understood with the help of a movie logic. I usually teach this in regular class, but now we don't have time. It's simple thing. You've seen this movie Om Shanti Om. In that, this specific song is there, no? In which every 10 seconds people go on coming. Every 10 seconds one new actor will come. So Om Shanti Om. People go on adding. When so many people come, you need to pay more money to those people. Profit will decrease. Correct or not? So Om Shanti Om. Opening stock overvalued. Profits will decrease. And opposite, opening stock undervalued, profits will increase, and then one item, if you go on changing, it will become ulta. So that we usually learn in a regular class, but I think you people would have already done one set of reading, so you would have found your own logic. Whatever logic you have found, please do follow the same. There is no enforcement of concept of Om Shanti Om. Got that? But this is a funny way of learning. Let's go forward. On this, we would have to usually solve question, but today let's go forward. Next, we have ascertaining financial position. I told you this will impact profit as well as balance sheet position. In the preparation of balance sheet, we need to value the inventory. Valuation of inventory is to be done according to accounting standard. Should be done as per accounting standard. As per accounting standard 2, there is one paragraph called paragraph 5. Paragraph which will tell how to value inventory. Valuation of inventory, like I mentioned to you before, it is different for raw material, different for work in progress, different for finished. What are we learning in CA Foundation? Finished goods valuation. What are we learning? So this you remember, because all of you will go to CA intermediate. All of you will go to CA intermediate. When you go to CA intermediate, there, when it will be taught to you like raw material valuation like this, you're like, no, you have only thought, sir, raw material is finished, sorry, inventory should be valued at cost or NRV, whichever is less. That is only for finished goods. Raw material should be valued at cost. Should be valued at cost only. Work in progress should be valued at cost plus conversion cost. That you don't have here. You learn it only there. But remember, what you're learning here is only finished goods. Okay. So as per para 5 of accounting standard 2, it says that it is mandatory to be complying this. It is not optional. Okay. As per para 5 of accounting standard 2, we need to value the inventory at cost or net realizable value, whichever is less. Whichever is, the reason is conservatism. The reason is you purchased one unit for 10 rupees. You should record it at 10. Or market may the price of it has dropped to 9 rupees. So whether you sell or you don't sell, either ways you make loss. Irrespective of the fact whether you sell it or not, you make loss. So you should record it at 9 rupees. Or if the market may price is 12 rupees, will you record profit of 2? No. You'll record profit of 2 only when you sell it. Let me repeat, you purchase one stock unit for 10 rupees. Market may the price of it drop to 9. So you bought it for 10. The price dropped to 9. So when you sell, you'll make loss of 1 rupees. Expected loss, you should record it right now. However, if the price goes up to 12, 2 rupees profit if you sell. So we'll record it when you sell, not right. Why? Conservatism. What is it? Fantastic. This is an accounting policy. What is it? Is it an accounting estimate or accounting policy? Accounting estimate or accounting policy? Accounting policy. Yesterday when we discussed accounting policy, there I gave example as valuation of inventory. What are the ways in which inventory can be valued? There are multiple methods, no? LIFO, SAM, that's point. So as per para 5 of phase 2, it should be valued at cost or NRV, whichever is less. Whichever is and whichever is less, this part, one place where everyone do mistakes, in spite of knowing that it should be valued at whichever is less, is you need to apply cost or NRV, whichever is less, item wise, not in total. If they give 5 items, cost, 5 items NRV, and you need to do. Don't take total cost of 5 items, total NRV of 5 items, and then total you'll check. No. To do it item wise. Item A, item B, item C, item D, item E. Item A, compare cost and NRV. Take whichever is less. Item B, take cost and NRV, whichever is less. And then whichever is less you take or no, that you should take total to arrive at closing inventory. Not the total cost and total NRV comparison. Got this? Yeah, you might have done some problems on that. Remember this part. What I'm trying to tell? I'm trying to tell that cost or NRV should be applied item. And what and all will cost include? Purchase price that you pay after deducting trade discount. If there is any trade discount given to you, should we write it before trade discount? No, we should write it after trade discount andre bargaining. When you bargain and then arrive at one price, they will tell how much is the units. They will tell 1000 rupees. We'll say 100 rupees. They will say, sir, 900 kodi, sir. We'll say 150 final. They'll say, sir, no, sir. Give at least 800. We'll say, okay, fine, 200 rupees back money. Time illa, bega, bega. So they agreed for 200 rupees. They packed it and gave it to you. 800 rupees is trade discount. 800 rupees is cost of the goods is 1000 or 200. 200. Cost of the goods is, if your friend asks what is the value of those goods, what will you tell? 2000. No, no, you should tell 200. You should tell 200. You will tell 1000 rupees you will purchase. Your friend asks, hey, this is expensive. My uncle went to Dubai. No, there he got it. 2000 it seems. 2000, and then you say 2000. No, 2000 dirhams. Hange. If the friend is more innocent, $2000. Okay. So cost will include purchase price after removing trade discount. Are you getting this? Should we include GST? If there is any GST, should it be included in the cost or not included in the cost? Depends. If you have input tax credit, if you have input tax, then you should not include. If you don't have input tax credit, you should include it. For example, assume that I bought a flight ticket for 5000 rupees flight ticket plus GST of let's say 500 rupees. Now, what is the cost of the flight ticket for me? 5000 or 5500? Depends. If I claim GST input of 500 rupees, now I will give service to one client. I'll charge client one fees of 1 lakh rupees. Some client for whom I have given some tax consultancy or some proprietary consultancy. On that 1 lakh, I will charge 10,000 rupees GST. 10,000 rupees I collect from the client. 1 lakh 10,000 I'll write on the bill for the client. 1 lakh is mine. 10,000 rupees I should pay to GST department. What I will do is, I would have paid 5,500 rupees for the ticket. No, that 500 is already paid. So 10,000 what I should pay GST, what I've collected from my client. I will deduct 500 and I'll pay only 9,500 to the government. If I pay only 9,500 to GST department, that means 500 rupees what I paid on flight ticket, I'm taking it as input. If I take that 500 rupees as input, my cost of flight ticket is 5,000. In my P&L account debit side, I should write only 5,000. For example, I can't claim that input. I booked one hotel room for 5,000. On that 500 rupees GST is there. It becomes 5,500. Input is not available. Input is, or I ate food for 5,000 rupees. 5,000 plus 500 GST, 5,500 is the bill. For the food and all, there is no GST input available. Then my expense will be 5,500. I would have to pay entire 10,000 to GST department. I can't claim that input tax. Are you getting what I'm trying to tell? Same is the case with regard to units also. For example, you incur expense on petrol, or certain items or buy car and all input you can't take. GST in credit cannot be taken. Then that entire GST part will become cost of the in cost of that item or cost of that asset. If GST input is taken, excluding GST part, you will treat it as a value. So what you need to check is whether input tax credit is available or not available. This will be given to you in the question. Touch wood, so far never ever has GST based questions come in CA or sales tax based questions. It has not come. Either in our sales book, purchase book concept, there also it's not come, or in our cost computation for PP also here also it's not come. It has been tested only in CA intermediate. CA intermediate mein when the question comes on AS2 valuation of inventory, there they ask tax part. But foundation mein they don't ask. But however we put it in our material. When we do the questions, we do it with the GST because practically you should know. You guys are saying that you are doing foundation, but your parents will be saying that your son or daughter is doing CA. And your uncle, auntie, neighbors, they will ask, oh, CA ಮಾಡ್ತಿದ್ದೆ, tell me how is GST treated. You can't say, I don't know, I'm still doing depreciation, SLM, WTV. They expect you to know a lot of things. Chalo. So let's get going. So what and all is included in cost? Cost of purchase. Second one is cost of conversion. After you buy the raw material, expense that you incur to convert that raw material to finished goods. Any expenditure you incur. But whereas in our case, we'll be doing what? Trading entity. We're not dealing with manufacturing entity. If it was manufacturing entity, from raw material to finished goods journey, mein any expenditure incurred is part of cost. Lastly, any other expenditure incurred which is directly attributable to the product, which is incurred till the time the goods will reach its present location and condition. We usually do a detailed 1.5 hour discussion on just these three items. And I torture you people and then make you rate other cost, may normal loss, abnormal loss, advertising, rice, wine, whiskey and all you discuss. You remember wine, that and all. It's not going to be part of in our marathon. We'll not do that one. But here I've told you, taxes you need to adjust and then freight inwards and trade discount part. Cost of conversion is from raw material to finished goods journey. Any expenditure incurred should be included. And lastly, cost of conversion, may we have certain items to be included, certain items not to be included. So this is theoretical. So you can skip that part. You would already know what is to be. But right now, I can't. If I start discussing like that valuation of inventory only, I'll take 10 hours entire today. How much time did you take for valuation of inventory? 3 days, 4 days we did? Today, 3.5 days. Today, one day, we need to finish valuation of inventory, depreciation, partnership, NPO, company accounts, final accounts, then goods and returnable, average weighted account current, bills of exchange. Another miss aita? First, so much to do, ma. Next step. Let's go forward. So you understood how to compute cost. Then comes net realizable value. In yesterday's class, we understood realizable value. What do we mean when we say realizable value? If you convert it into cash, what do we get is realizable value. It should be taken net. Net means what? To convert it into cash, you might have to incur some expense. What expense you incur to convert into cash should be deducted. For example, I want to sell this product. I want to convert this into cash. If I sell this product, let's say I'll realize 1,000 rupees. 1,000 rupees is realizable value. But to sell this for 1,000, I don't know customers. I appoint one agent who will sell this on my behalf. For that agent, I need to give commission of 100. So to sell this for 1,000, I need to incur 100 rupees commission. So 1,000 rupees realizable value, 100 rupees selling expenses. 1,000 minus 100 selling expense, 900 is net realizable value. Meaning what is the net money that will be left in my hand to sell the product after selling the product. Sometimes customer will say they will buy the product provided I give some kind of specification. Customer will say, you give me one kind of nice hand grip to hold this remote so that even if I open the fist, it will not fall. Now I know how did this break. On the same example I was giving. And then I opened this fist and then it fell down and then it broke into that. ಈಗ ನಾನು ಬ್ಯಾಂಡೇಜ್ ಹಾಕಿದ್ದೀನಿ ಅದಕ್ಕೆ you see, this wrapper, that's a bandage. So that kind of a detailing customer will ask. He says, I will buy it for 1,000 rupees provided you give me such hand grip. To give such hand grip, I'll incur 200 rupees. So 1,000 rupees is realizable value. 200 rupees is expense to recover realizable value. So 200 rupees if I incur, I'll get 1,000 rupees. What is net realizable value? 800. So inventory should be recorded at cost or NRV, whichever is here. Selling price minus selling expense. It is different for each of them. For finished goods, it is selling price minus selling expense. And I made you write how to find NRV for work in progress and raw material. We discussed in the regular class. This is not part of foundation syllabus. It's part of inter syllabus. But it's good to know. It's good to know. Whoever is already rated, good. Don't forget. Sir is saying it's not part of syllabus. Delete. File delete. By mistake, You have 10 photos. You need to keep one, delete 9. By mistake, if you delete that one photo in which there is no shaking, there is no blurring, and it's all perfect. So what you do? Safer side, you keep all the 10. You know, recently deleted a lirata. Oh, you will have that thing also, no? When you take your friend's phone, you check what is the photos that they haven't recently deleted. Fine. ನಾನಾಗೆಲ್ಲ ಮಾಡಲ್ಲಪ್ಪ. Okay. So what am I trying to tell you people should remember that this cost R and RV, whichever is less, should be applied item wise and not in. Very good. So this is one part that you should remember. And after this, the last part is liquidity analysis. And now let's identify how to determine the value of inventory. There are multiple methods. Multiple methods. First type of methods, considering historical, sorry, yeah, it depends upon the type of inventory. Inventory can be ordinarily interchangeable and not ordinarily interchangeable. Ordinarily interchangeable means one product can be replaced with another product without any hesitation. For example, if you say this bottle, there are hundreds of bottles that they make like this. This bottle also same price, one more bottle like this also same price. Exactly same model, same quantity, there will be hundreds of bottles available, thousands of bottles available. Are you getting this? However, if you go to buy jewelry, if you buy ring, if you buy necklace, if you buy chain and all, it will not be same. No two rings will be same. They'll say this ring, I'll say, ಇದೇ ತರ ಇನ್ನೊಂದು ring ಇದೆ. ಇಲ್ಲ sir. Even if they have, they'll say, what is the price? Price is same. No. In this 0.25 gram gold is more, in this 0.25 gram gold is less, they say. They weigh each product and then identify value. So, inventories not ordinarily interchangeable are like jewelry, designer wear, or this flat. No, apartment may flat and all when you buy. Two flats price will not be same. This flat will be 10 square feet extra, or this will be east facing, that will be north facing. In this room size is more, in this balcony is big. Something will be there, because of which there will be small price differential between each of the things. No two items will be of same price. Example, jewelry, then designer wear, flat, all of these things. So their value of each item has to be specifically identified. We can't do value of this item 15,000 into 100. Jewelry shop will they do like that, one chain value they count into number of chains. No. Each chain they find the value separately. Why? Because they are not ordinarily interchangeable. One product cannot be replaced with the other easily. However, there are items called ordinarily interchangeable, meaning one product can be replaced with other. Mobile phone, or stationery, or any other sweet shop, or all these places where one product can be replaced with the other very easily. So here we follow several techniques called as FIFO, LIFO, SAM, and there we follow only one method called as what? SIM, specific identification method. Specifically for each product will identify the value. Specifically for each product will identify the. Next one. Let's see ordinarily interchangeable inventory. Ordinarily interchangeable inventory considering, yes sir. CA intermediate. This is CA intermediate class. Gateway to CA intermediate class. Sit. This is CA foundation. Gateway to CA intermediate. ಅಂದ್ರೆ ಇಲ್ಲಿ ಬಂದವರು CA ಇಂಟರ್ಗೆ ಹೋಗ್ತಾರೆ ಅಂತ. ಬ್ಲೂಟೂತ್ ಎಲ್ಲ ತೆಗೆದುಬಿಟ್ಟು ಆರಾಮಾಗಿ ಕೂತ್ಕೊಳ್ಳಿ. You are here for the first time. You are not there yesterday. Okay, sorry. You won't forget this. Huh? Next intermediate class bani. CA final class. This is gateway to CA final. Okay. If it is ordinarily interchangeable, considering historical cost, there are several techniques. FIFO, LIFO, SAM, and VAM. Without considering historical cost, there are two methods. One is standard cost, second one is retail price method. Both are not part of your syllabus. Only one method is part of your syllabus, that is ASP. It's called adjusted selling price method. Adjusted selling price. So that's it. So this is the methods that we have. And let's quickly see what is first in, first out. Shall we? First in, first out, what we do is the inventory what comes in first will go out first. So the closing inventory is from the latest purchase. Let me repeat. What comes inside first will go outside first. So what is remaining in the closing stock is from the latest purchase, most recent purchase, most recent. So the higher the value of the, in the inflationary economy, closing stock value will be more in first out method. Last in, first out method, mein, most recent stock will be sold first. Old stock will be remaining in inventory. Like bhaji angri. You put one bhaji at 6 o'clock. You put one more set of bhajis at 7 o'clock. At 7:15, when the customer comes, they'll take 7 o'clock wala bhaji. 6 o'clock bhaji ange irutte. Correct or not? New stock will get sold, old stock will remain. And old stock will be valued at old stock. Are you getting what I'm trying to tell? So that is the logic of first in, first out and last in, first out. In a practical scenario, we will never follow last in, first out. In Indian economy, last in, first out is not accepted. Sir, ಮತ್ತೆ ಬಜ್ಜಿ ಅಂಗಡಿ ಅವ್ರು ಅದೇ 6 ಗಂಟೆ ಬಜ್ಜಿ ಮಧ್ಯಾಹ್ನ ಸತಿ ಎಣ್ಣೆಗೆ ಹಾಕ್ಬಿಟ್ಟು ಸೇಲ್ ಮಾಡ್ತಾರೆ. ನಿಮಗೆ ಗೊತ್ತಿಲ್ಲ. You guys don't know that same bhaji. And in fact, some of the times, no, for 6 o'clock to 7 o'clock, they'll sell yesterday's bhajis only. Only after 7 o'clock, they'll give today's bhaji. If you eat today's bhaji, yesterday bhaji, and bhaji tintara. They will sell yesterday's bhajis first. First in, first out is rudely followed. Yeah, morning also. First set of idli that you eat is your last night's idli. After 9 o'clock only. Idli tinkomandra. Very good. So, that is first in, first out, last in, first out. Last in, first out is not followed in India. In India, as per accounting standard, only two methods are allowed to be followed. Either first in, first out or weighted average method. Either first in, first out or only these two are allowed to be followed. Again, among FIFO, LIFO, I told FIFO is better suited than LIFO. Let's talk about simple average method and weighted average method. Simple average में we don't give any significance to quantities. We don't give any significance to. We'll take average of rates without counting quantities. For example, we purchase 100 units at rupees 10. How many units did we purchase? At rupees 10. Later we purchased 1 unit at rupees 20. 1 unit at rupees 20. We have 100 units purchased at rupees 10. 1 unit purchased at rupees 20. Closing stock will be 101 units if you have not sold anything. You know what will be the rate? You will not take 10. You will not take 20. You will take average. 10 plus 20 divided by 2. 50. 10 plus 20 divided by. This is a very wrong method. I'll tell you the reason. Shall I? You have 100 units purchased at rupees 10. So only 1 unit purchased at rupees 20. This 1 unit what you purchased at 20 will change the value of 100 units from 10 to 15. Number will go crazily wrong. 100 into 10, 1000. 1 into 20, 20. What is the total value of purchases? 1020. 1000. Now this 101 units will be valued at 15. 1001 into 15 is how much? Check 1500 and 1500 something will get. 1515. 1515. 1020 rupees you paid, the value of the inventory has suddenly become 1515. Why God came and touched the inventory? No. Still it has become more. So it is incorrect. Are you getting what I'm trying to tell? Should I talk little slowly? We purchased 100 units at rupees 10 each. What is the value? 100 into 10. 1000. We purchased 1 unit only at rupees 20. 20 rupees. What is the total cost of purchase? 1020. 1000. Let us assume we have not sold any inventory. Entire 1001 units is part of our closing stock. How do we value closing stock? Under simple average method, we'll take average alva. Average price, first price 30. First price 10. Second price 20. Take the average 10 plus 20 divided by 15. 15 into 1001 units. 101 units. 1515. But actually what you paid is 1020. So 1020 says the value of the inventory went up to 1500. Why? Because you bought 1 unit for higher price. ಒಂದೇ ಒಂದು ಯೂನಿಟ್ 20 ರೂಪಾಯಿಗೆ ತಗೊಂಡಿದ್ದಕ್ಕೆ 100 ಯೂನಿಟ್ಸ್ 10 ರೂಪಾಯಿ ತಗೊಂಡ್ರ ವ್ಯಾಲ್ಯೂ 15 ಆಗ್ಬಿಡುತ್ತಾ? ತಪ್ಪು ತಾನೆ? Because you are not giving any significance to weights. That is the reason we follow weighted average method. Weighted average method में the average is found using weights. Average is found using, we'll do 100 units into 10 plus 1 unit into 20 divided by 100 units plus 1 unit. Are you getting what I'm trying to tell? Should I solve one big problem on the table? That is the most easiest part of your syllabus. Quantity, rate, amount, quantity, rate, amount, quantity. Whenever you are bored of accounts, try to do that and then tell like you're studying. Don't spend too much time on that. It has been asked only once in the exam, that table. It has been asked only once. Usually they won't ask that. But if they ask lottery, 4 marks for just writing numbers, which a 6th standard student also can do. Do you need CA Foundation brains to solve that problem? FIFO, LIFO, SAMVAM? 6th standard student also can do. but they still give 4 marks for it if it comes in the exam. Know how to do it, but don't waste too much time on it. That's our weighted average method. Shall I spend little time on adjusted selling price? Very good. Adjusted selling price is also called as retail price method. What is it also called? This is followed in industry where number of units are huge. Number of units are and value per unit is less. Like you are selling FMCG commodities, toothpaste, brush, soap, atta, sugar packet, white sugar, sir. Sakare, idu coffee ಹಾಕ್ತಾರೆ. Sugar packet or jaggery. Or when you're selling all of these items, you pack them and then stack them up no, in the what to say shelves. So you need to identify what is the closing stock. It is very, very difficult to identify each item you find, how many items are there, you count, multiply by cost price per unit to identify the closing stock. It is time taking. It is time taking. So what you do in this kind of inventory in institution is you know the cost price, you know the selling price. Because you know the cost price and you know the selling price, you would know your profit margin 20%, 25%, 30 on these products, 20% margin, on that product, 10% margin, on that product, 5% margin. You will know like that, no? Correct or not? You know your opening stock at selling price because last year my closing stock open. You know the purchases of the current year. That also will identify its selling price. MRP to selling price number of units you purchase multiplied by MRP. You know the closing stock at sorry purchases at selling price. You know sales. Sales again will be at selling price. So instead of writing trading account mein opening stock at cost, purchase at cost, expenses, sales at selling price, closing stock at cost, and then GP. What you do is you write everything at selling price. Opening stock selling price, purchase selling price, sales selling price. Balance and figure will be closing stock. GP barala. Why? When will GP come? You write opening stock, purchase, closing stock at cost, sales at selling price. Then the difference will be GP. What you do under adjusted selling price method is you're trying to prepare a trading account with opening stock, purchase, and closing stock at selling price, sales also at. So it will tally, no? Trading account will be only 4 items: opening stock, closing stock, purchase, sales. Opening stock, you know from last year. Purchases, you know because of the amount you paid. Sales, you know because of the amount you received. You write opening stock at selling price plus purchases at selling price minus sales at selling price. You get closing stock at selling price. Easy. Once you identify closing stock at selling price, from that you know how much is the margin on this product, 20%. That product, 30%. Eliminate that profit. What remains is closing stock at cost. This is how it is done practically on paper. If you don't have the values, if you don't have the values, under opening stock we don't know correctly, purchases we don't know correctly, records are not maintained, or you don't have the access. Then you see the physically inventory, how much is there in the shelf, how much our inventory is there, MRP is there on that. Correct or not? To identify the closing stock at market price, that is selling price. From that you eliminate your profit margin, 20%, 30%, 10%, whatever. So you get closing stock at cost. That is our adjusted selling price method. That's our adjusted selling price. Yeah. Shall we see one small question on this? Pakka? Okay, come on. Let us see a question. Question number ಏನಾದ್ರೂ ಗೊತ್ತಿದ್ಯಾ? Okay, I'll only find it. You think 13th one? So smart, she remembers question number also. 13th one, 12th one and 13th one. 14th one and 13th one. Yeah, smart. Question ತೆಗೆಯೋಣ. ಸಿ ಒನ್ ಮೂಮೆಂಟ್ ಫೈಲ್ ಈ ಕಡೆ ಆ ಕಡೆ ಮೂವ್ ಮಾಡಕ್ ಹೋದ್ರೆ ಅಷ್ಟೊತ್ತಿಗೆ ಮಾತಾಡಕ್ ಸ್ಟಾರ್ಟ್ ಮಾಡ್ಬಿಟ್ರೆ ಮಾತನಾಡಲೆಂದು ನೀನು ಬಂದೆಯಾ ಬರೀ ಮಾತಾಡ್ತಾ ಇದ್ರ. Have a look at this. From the following information, calculate the historical cost of inventories using adjusted selling price method. Sales is how much? 2 lakh. Sales is, what's that? AC? ತುಂಬಾ ಕುಲಿಸಿದೆ. ಇದರಲ್ಲಿ ಜಾಗ ಚೇಂಜ್ ಮಾಡಿ. I can't turn it off from here. I will try. Off. It's not listening. Stand on the desk and turn it off. There's one button that is there. Yellow color light you see blinking. In the logo. You see yellow color light there. Right next to that there is one button. You need to press one button. Shock ಹೊಡಿಯೋದಿಲ್ಲ ನಾನು ಗ್ಯಾರಂಟಿ ಕೊಡ್ತೀನಿ. See, she is taking inspiration. Off ಆಯ್ತಾ? Very good. Next. Hello, off ಆಯ್ತಾ? Okay, now listen. It's okay, it's okay. Please concentrate. Have a look at the question. Sales is 2 lakh rupees. This is at selling price. This is sales is at what price? Next, what do we have after that? Very early again. Cost of every day, whenever I say whatever I time say plus 1 hour ಮಾಡ್ಕೊಂಡು. Cost of purchases. So they've given cost price. Purchases they've given because that's what you paid, no? And they've given opening stock is 0. Oh. Closing stock at selling price is how much? 50,000. What should we find? We should find closing stock at cost price. We should find closing stock at price. This is cost price. What do we do? Oh, sorry. How do we do that now? Very simple. Opening stock is 0. So whatever you have sold is out of current year purchases only. So when current year purchase is 0 and sorry, current year opening stock is 0, you have sold stock worth 2 lakh at selling price and you still have 50,000 worth stock. What is the selling price of purchases? 2 lakh 50. What is the selling price of purchases? You have sold 2 lakh worth goods and you still have 50,000. So totally how much did you purchase? 2 lakh 50,000. 2 lakh 50,000 is selling price of purchases. Cost price is 2 lakh. Selling price is 2 lakh 50. Selling price is 2 lakh 50. Cost price is 2 lakh. Profit is 50,000 and 2 lakh 50. 50 by 2 lakh 50. 1 by 5. 25%. No, 1 by 5 is 20% on sales. You remove 20% on 50,000, 40,000 will be your closing stock. Sorry, ಏನು ಅರ್ಥ ಆಗಿಲ್ಲ ಆಯ್ತು. I will teach. Purchases, we know cost price. How much is it? Hey, I will teach. You guys should listen. If you don't understand, you tell me that, sir, I didn't understand what is that CP. I didn't understand what is SP. I didn't understand how you got 2 lakh. You ask, I will tell. You don't talk. Then we have sales. Then we have closing stock. Sales is how much? Okay. Sales is at selling price. Closing stock, they have given selling price. How much? This is the data they have given. If you sold 2 lakh worth of stock and you also have 50,000 still remaining. So you purchased at 2 lakh 50,000, no? Dota. Okay. You understood 2 lakh. Sir, how did you get 2 lakh 50? 2 lakh plus 50. 2 lakh plus 2 lakh worth of stock is sold. 50,000 worth of stock is still remaining. So you purchase 2 lakh 50,000 worth of stock. Out of that 2 lakh is sold and 50,000 is still remaining. Am I right? Say yes. Okay. Cost price is 2 lakh. Selling price is 2 lakh 50. How much is the profit? How much is the profit percentage? Can I say it is 50,000 divided by 2 lakh 50,000? How much? ಇದರಲ್ಲೂ ತಪ್ಪು ಹೇಳ್ಬಾರ್ದು 25% 50 by 2 lakh 50. All you would have to do is very simple. Take your calculator and then tuk it will give answer. How much do we get? 20%. 20%. So this 50,000 is there. Cost price you should know. 50,000 minus 20%. That's it. Easy. 40,000 is answer. 40,000 is. Take a moment. Savor the. And once you go home today, do one problem on adjusted selling price. Please note down in your book. Solve a problem on adjusted selling price in valuation of inventory. Solve a problem on adjusted selling price in valuation of inventory. So our mentorship program people had a doubt on adjusted selling price. No, solved, sorted. Okay. I had written in to-do list. Solve problem on adjusted selling price for mentorship program students. Yes. Yeah, you can solve on it is there in ICA study material. Open it, find a question on adjusted selling price, and then please solve that question. Same logic. Same logic. Will you do it today? Yes. Okay. If you have doubt, ask Subhadra ma'am tomorrow. No, no, you ask me, I'll help. You have that telegram group. Hey, who is that? Someone posted nice, beautiful comment on Instagram post. Ask sir to share PDF and then files that he told us that we will share. We are not Asia students. Hey, it's politely. No? I share. I share. Telegram me, you drop one message. Sir, can you share the file that you told you will share? Or in the telegram you said, Abban and Magana yellow file. You asked. Okay. On Instagram you posted a comment asking you to share the file on Telegram. No offense. No problem. File is shared. File is shared. Who posted the comment? They won't raise hand. Hey, it is okay you raise hand. We will not unfollow you. Will not report you as spammers. Okay. You don't want to raise hand? Via early. Reply to that. Okay, comment. Okay, yes, received. One comment, please. Done. This part. Huh? We did CA Inter Group 1 Intermediate Accounting exam paper review right after the exam is over at 5 o'clock. In that also some people are fighting. This amount should be deducted from purchases. No, this should be added. No, this should be ignored. Sir told it should be. I didn't tell anything. I only told we'll discuss the answer later. This adjustment has commission on purchase. Ashte. And they are discussing question number 5. One guy question number 2, they doubt there. There also some purchase adjustment. And later one more comment. Somebody please reply to my question. I thought of replying, shut up and study for law. But polite, I told, yes, you are right. That has to be treated like that. Okay. Done. Will you try this question on adjusted selling price? It has been asked once in the exam. Adjusted selling price question had come once in the exam. People then, when it came in the exam, they didn't even know which chapters a question has come. They're like, sir, some out of syllabus question had come. Because they have one more exam now after that. So I would not say, Daban Makla Nivodila. I won't tell that. I'll be like, oh, is it? Good, good. Don't worry. If it is out of syllabus, you will get grace marks. On the exam day, that's what you will hear as a reply. After fourth paper, I will say, nonsense, you guys didn't study. Then, inventory recording systems. Inventory recording. So, two systems are there. One is perpetual, second one is periodic. In the class, I had given this as homework to you people. You can, if you have written the answer on your own, very happy. If you have not written the answer, this is the answer that you will write. Exam question has come on this also. Difference between perpetual and periodic. Yeah, you can click. You want me to share screenshot? Illustration? Huh? Expenses part. Now people will get confused. I'll tell it to you in person if you have don't. No, they are learning. A lot of them might be learning this only first time. I don't want to break confidence of people. Yeah, I thought. Yeah. If in case there is something missing, something that I told I'll share, but I have not shared, please drop a message. I will share. Okay. Say, sir, what to say? Inventory record system, periodic and perpetual. Can you send that difference between table? You send it as a message in Telegram. I'll reply to it. In the group, not personal message. Personal message, you might not get reply. There are too many messages. I don't know if I'll open. If I open, I'll reply. So one thing you remember. And if I've skipped your message, it's not intentionally. Oh, you message reply ಮಾಡಬಾರ್ದು. Not like. Got this? Okay, done. Very good. Come on, let's go forward. Then, this is the interesting part. Stock reconciliation. Oh, this I didn't explain much. Perpetual system mein records are detailedly maintained. Your P4, LIFO, SAM, WAM, you do that big table, receipts, issue, balance, QRA. That is perpetual system where you have maintained record. You tell the date. On that date, what is the stock, they'll be able to tell. Every unit coming in, recorded. Every unit going out, recorded. Every unit issued, recorded. Everything will be recorded item wise. Detailed stock records are kept, perpetual. Periodic system mein stock records will not be kept. They don't maintain stock record. Inventory comes, they just dump it. Inventory needs to be issued, they issue. Just inventory issue ಮಾಡಿದ್ವಿ ಒಂದು ಡೇರಿನಲ್ಲಿ ಬರೆಯಲ್ಲ. ಎಷ್ಟು inventory receive ಮಾಡಿದ್ವಿ ಒಂದು ಡೇರಿನಲ್ಲಿ ಬರೆಯಲ್ಲ. They won't write inventory received, inventory paid in one dairy. They just keep it as good on. Keep the goods, give the goods, keep the goods, give the goods. If you want to know how much inventory is there is no book. What should you do? So come and count. You should count and then find it. Are you getting what I'm trying to tell? That is periodic. Second one is perpetual. In a very small industry, they might follow periodic. In a big industry, you would have to mean perpetual. Perpetual will give you more accurate results. It is more reliable. It is more scientific. And if you maintain records, you can also do physical verification to verify whether the inventory as per books and inventory physically is same. When you don't maintain books, what will you compare it with? Whatever is physically there itself will be your value. It will become almost impossible to identify any pilferage, loss of goods, or damage of goods if you don't maintain records. Got it? Very good. Done. So next part, I can discuss that for quite longer time, but time constraint. I hope you understand that. Then we have stock reconciliation. When the stock is counted to be recorded in books, I told you, stock will not be arrived at using journal, ledger, or anything. You have to physically count the stock and then identify the value and then write it in books of accounts. Stock count should happen on the year end to identify the value as on year end. Because trading account, P&L account is prepared for the period ended as of 31st of March. Balance sheet is prepared as on 31st of March. Inventory value should be available as on 31st of March. So physical count also should happen as on 31st of March, which is highly impossible. Why? One, operational reasons. Business might be still happening. Inventory might be coming in, inventory might be going out, purchase, sale. Business is operational. On 31st of March, they can't let you count. They might have to let you count on a day after or day before. Or due to practical issues, like you have hundreds of clients. You can't count the inventory of all the 100 clients on 31st of March. So you also have limited manpower. So because of your reasons or because of the business reasons, if the inventory counting is not done on 31st of March, it is done on a date before 31st of March or after 31st of March. Using that, how will you arrive at the inventory as on 31st of March? Using that, how do you arrive at the value of the inventory as on 31st of March? That's what we're going to learn here. So what we'd have to do is we need to move our inventory from the date that we've counted to the date that we want. For example, we counted the inventory on 25th of March. When did we count? We want the inventory on 31st of March. We know the inventory as on 25th of March, no? Because we have counted. After counting, we'll ask the client to give us all the details of the movement of the inventory from 25th to 31st. He will give the details of all purchases, all sales, all issues for free samples or drawings or damage, everything will give. Whatever has come in, you will add. Whatever has gone out, you will deduct. That's how we'll arrive at inventory as on 31st of March. We call this forward approach. What is this? Forward. What is happening here? It is counted after, it can be counted after year end or before year end. If it is counted before year end, what do we call it? Forward. You go from 25th to 31st. What if we counted the inventory after 31st of March? Let's say on 5th of April. We want the inventory as on 31st of March. But we've done the physical verification on 5th of April. We know the inventory as on 5th of April. Using that 5th of April inventory, we should arrive at inventory as on 31st of March. So we should come back in time. That's the reason we call it backward. We'll ask the client, please give us the details of inflow and outflow of goods happening from 1st of April to 5th of April. They will say 1st of April to 5th of April, these many goods have come in, these many goods have gone out. What do we do? Whatever has gone out, we will add. Whatever has come in, we will deduct. That's how we'll arrive at inventory as on 31st of March. Ulta, no? From 5th of April, we're coming back to 31st of March. So whatever we have, see, from 31st of March, you issued units. You purchased units. You arrived at 5th of April. When you go backward, whatever you issued, you receive that. Whatever you received, you give back. Then you go to 31st of March. Reverse, rewind. Sales will be added. Purchase will be deducted. Forward from 25th to 31st, if you go, purchases add, sales you deduct. ಅರ್ಥ ಆಗ್ತಿದ್ಯಾ? Remember that this adjustment should be done at cost price. It should be done at, and there is couple of other adjustments. I'll explain them also too. Have a look. After year end, it is somewhat like this. Year end is 31st of March. Physical verification has happened on 5th of April. We're going back in time, no? From 5th, we should go to 31st. 5th of April to 31st of March is rewind. If you see the video in reverse, rewind, ulta agatalva. Have you seen you walk backwards? You take food from your mouth and then keep it on the plate. You take glass and then put the milk into the glass and then you walk. Ulta ಅಲ್ಲ. ಇನ್ನೊಂದು ಹೇಳೋದಿಲ್ಲ ವಿಡಿಯೋ ಆಗಿರೋದಿಲ್ಲ. Oh my god. So it starts like this. You start with inventory as on 5th of April. You deduct inflow. You deduct, you add outflow. You add outflow. Outflow is nothing but sales, inflow is nothing but purchases. When you deal with purchases and sales, take net. Take net of purchases. Purchase less returns. Do purchase less returns and then deduct it. Do sales less returns and then deduct it. And then add it. Don't do sales I will add, sales return I will deduct. Please don't do it. I'll tell you the reason. There might be GP percentage to be removed on sales and sales return. GP adjustment will not come on purchases. If you don't do this, you might mess up the profit part. So always take net sales and net purchase. Always take net sales and don't take sales I will add, sales return I will minus, purchase I will deduct, purchase return I will add. Please don't do that. That will lead to possibility of error because of that is more. Understood? Very good. Sales minus sales return, you will get net sales. On that net sales, you apply profit percentage. And there are a couple of special adjustments. I'll discuss this a little later. Then we have forward stock reconciliation. It moves somewhat like this. Your year end is 31st of March. You have taken your inventory on 25th of March. You need to move from 25th of March to 31st of March. You're moving forward. So you add inflow, deduct outflow. You add inflow of stock and deduct outflow stock. That's how we arrive at inventory as on 31st of March. Okay, these are easy. And this is very less possible in exam. In our class also, we did only one question on this. All the other questions that we did is usually on backward. Usually we do backward only. We don't do forward. Inventory valuation will be done after the year end. Definitely not before year end. Yeah. Very good. So this chapter ka problems will become interesting because of 2-3 beautiful adjustments. First kind of adjustment is goods sent on return or approval basis. Second kind of adjustment is goods sent or goods received on consignment. Third one is there will be certain items which will be sold at a different profit percentage. Usually what happens, they'll give sales 1 lakh, GP 20%. What will you do? 1 lakh minus 20%. 80,000 is cost of goods sold. If it is forward, you will deduct. If it is backward, you add. Yeah, am I going too fast? Sales 1 lakh at selling price. GP percentage 20%. 1 lakh minus 20%, that is 20,000 is 80,000 is cost of goods sold. If you're going forward, sales is outflow, no, you deduct 80. If you're doing backward, 80,000 you will add. This is easy part. Question becomes interesting when they say sales 1 lakh. Sales GP percentage normally 20%. However, certain items whose cost was 4,000 in the last year was written down to 3,000, of which 50% is stocks is sold as 2,500 rupees in the current year. Balance was valued at cost. If they give like this, then on 1 lakh you can't apply 20%. Why? 1 lakh is sales. That is divided into two parts. Normal items, abnormal items. Normal items with 20% GP percentage. On abnormal items, GP percentage is not 20. It will have some specific profit or specific loss. Identify sales into normal, abnormal. Abnormal is what you will know. Abnormal sales gottagate namge. They will tell 50% of this stock is sold for 4,000. So 4,000 is abnormal sales. 1 lakh is total sales. 1 lakh minus 4,000, 96,000 will become normal sales. On normal sales, you will apply normal GP percentage to arrive at cost of goods sold. On abnormal sales, you know the cost price. You take that cost price, you take this cost price, together it will become cost of goods sold. So that's one thing that you should remember. When you do that kind of an adjustment, you should remember what is our objective. What do we want as end answer? Our end answer is cost of goods sold. What do we want to find? Why? Cost of goods sold is goods going out of organization. In forward, we should deduct. In backward, we should add. If you get this logic, when you start doing any adjustment, if you know what is it that you want at the end of that adjustment, it will become very easy. What will I do is, I'll do one question on stock reconciliation, and I'll also show you the weightage on valuation of inventory. But before I do the question on stock reconciliation, I would want to finish off goods sent on return or abroad. It's a very small discussion. So shall I show you the weightage of valuation of inventory chapter? But I'll not do any questions on valuation of inventory. We'll finish goods sent on return or approval and then finish valuation of inventory. Okay, now after we finish that, I'll give you a short break, 5 minutes. Yes? Okay, wait, what? ಏನಪ್ಪ 11th one. ಹಾ ಈ 5 minutes ಇನ್ನೊಂದು 5 minutes ಎಲ್ಲ ಸೇರಿ 11 o'clock 10 minutes ಬ್ರೇಕ್ ಆಗೋಯ್ತು ಅಂತ ಹೇಳೋದಿಲ್ಲ. Oh my god. Come on, let's now quickly discuss our topic of ಯಾವುದು goods sent on return or approval. Okay. Do you like that chapter? You don't like that chapter? Sir, liking, not liking, you should understand me. How many of you have not understood this chapter? Hey, this is a chapter which is actually very nice for a reason because very small chapter. It is very and marks will come, guys. Marks barate country. This chapter in the before that by the time that file loads, I'll quickly show you the weightage. Have a look at the weightage of valuation of inventory. Initially, May 18 and November 18 questions didn't come from this chapter, but from May 19 questions did come. Usually it was 6 marker. Once they had asked stock reconciliation backward, and in 6P they asked theory question. In November 19. In December 20, they asked a 10 mark stock reconciliation forward based question. Forward based question in ICI study material also there is only one question out of 14 questions. But in December 2020 examination, they had asked one question. COVID time man. They asked one forward question, 10 marks. That was a bouncer in that exam. And January 21, they asked adjusted selling price. They asked one more time, 2 times back to back, they've asked adjusted selling price. In January 21 and July 21. In December 21, they asked one weighted average method table, quantity, rate, amount, quantity, rate, amount, quantity, rate, amount. Simple, easy one for 4 marks. And in June 22, they asked was COGS question. There was opening stock, there was purchase, there was expenses. Some non-direct expenses were also there. Selling go expenses, administrative expenses, office expenses, which should be ignored and should not be considered. So you add the expenses which are to be considered and identify the cost of goods sold. Closing stock was there, opening stock was there, purchase was there, expenses were there. That's a very easy one for 5 marks. Understood. So stock reconciliation also has been asked in the exam only 2 times. How many times? Okay. And weighted average method also has been asked only once. Adjusted selling price, which people usually ignore, was asked back to back times. Okay, that's the weightage of this chapter in the exam. What will we do now? Shall we do our goods sent on return or approval? Then we'll come back to this valuation of inventory and do one question on stock reconciliation. You want me to do one question on adjusted selling price or one more question on adjusted selling price? No. Yes, ma'am. 13th one from? You want me to do 13th one? Expense portion, you know. If you add expenses, then fine, I'll do it. But I don't want everyone to get confused. They might not have done such question. You have doubt, I'll do it to you one to one. Resale? Recent attempt. I'll show you the question paper only in detail. That I've done an analysis separately. I have not added here. If I have to show that to you, there is one separate analysis that I've done. That is even more in detail. Please, don't talk. ಮೈಲ್ ಎಲ್ಲೋ ಇತ್ತು ಅಂತಾನೆ ಗೊತ್ತಾಗ್ತಲ್ಲ. Someone is doing so July 2021 ಅಲ್ಲ ಅಲ್ಲ. Huh? It should be there. I'm just trying to find where is it. So sorry, I'm not able to figure it out. But it should be there, ma. I'll give it to you if you want. Um, huh. I'll state that to you people a little later. Now come on, let's discuss goods sent on return or approval. Yes, guys. We'll now discuss goods sent on return. We've taken 1 hour exactly for valuation of inventory. We'll spend additional 10 minutes on the problem little later. Now concentrate. Let us do the topic of goods sent on return or approval basis. This is a unique form of sale. This form of sale happens when the product is new and the product doesn't have a very good market, and the product has to be reached out to people in the market. So what you do is you go offer the product to the people, not to buy. This is not seller to customer. This is seller to retailer, wholesaler to retailer. This kind of transaction is not between seller and consumer or customer. This is between seller, wholesaler and retailer. No, I am a wholesaler. I have a product. I want to reach out to customer. I won't sell it to customers directly. I will go to a retail shop and I'll ask him to buy this product. He will deny, saying that he doesn't know my product. I will say, sir, do this favor. I will give you my product. You keep it in your shop. If you sell the product, you give me money. If you don't sell the product, you give me the goods back. Good deal? I will say, I have this new product, keep it in your shop. If you sell this product to customers, then you give me money. If you don't sell this product to customers, you give me the money back. I will take it from you. That's what we say. That's called a sale of goods on return or approval. I give the goods to my customer retailer. He has an option either to accept the goods or he has an option to return the goods. What if he doesn't accept, doesn't return, but keeps the goods with him forever? Every time I ask, you will say, wait, Madi, ಹೇಳ್ತೀನಿ. Wait, then I'll get irritated. No, I'll like, hey, yes, ಹೇಳು ಇಲ್ಲ, no ಹೇಳು, but ಏನೋ ಒಂದು ಹೇಳು. Correct or not? So what will he do? That's the reason I'll give him time. Tell yes or no, I don't care. But tell it to me within 24 hours. No, not 20, 30 days, 60 days. We give time. This is not movie, no? Yeah, whatever you think nicely and you tell me in 24 hours. This is not that kind of SN. This is goods being sold. So here what happens is we give a specific time frame. So I'll give you the goods today. I'll give you 30 days time. Within 30 days, if you sell the goods, you give me money. If you don't sell the goods, within 30 days, you return the goods to me. After 30 days, I will not accept returns. You would have to give me money only. On 30th day, I will assume that I've sold the goods to you. I will assume that you have purchased goods from me. Did you understand the basic concept of goods sent on return or approval? Goods are sent, not sold. And the person to whom you have sent has an option either to return the goods or to approve the goods based on time limit. Based on within so much time he has to accept or return. Understood? Yes. So this is us. We are sending the goods to our customers, that is retailer. And against this, we are only transferring the possession of the goods, not the ownership. So goods are sent, not sold. Goods are sent, not sold. So the next thing that we need to remember is this guy who receives the goods, he has only received the goods, not purchased the goods. He has only received the goods. He has not purchased the goods. And ownership is with us only. We have the ownership, but we don't have possession. Whereas that guy, he has the possession of the goods, but doesn't have ownership of the goods. Actually, it is colorful. This is red, green. Correct? Can't say color. No? Red, green. No, it's correct. Huh? I feel like it's all unique color. Maybe. ಗೊತ್ತಿಲ್ಲ ಏನೋ ಹೊಸವರ್ಗ ಬಂದಿರ್ಬೋದು. Okay, now when you send the goods, should you record sales entry? No. Why? You have only sent. You have not sold. Correct? Huh? So we should not record sales entry. But our excited people, when they give the goods only, they'll write sale entry. Correct? Send ಮಾಡಿದ್ರೆ ಸೇಲ್ ಬರೀತಾರೆ, ಸೇಲ್ ಮಾಡಿದ್ರೆ ಪ್ರಾಫಿಟ್ ಬರೀತಾರೆ, ಅಲ್ಲಿ ರಿಕವರಿ ಆಗದೆ ಬ್ಯಾಡ್ ಡೆಟ್ಸ್ ಆಗ್ಬೋದು. So out of excitement, there is a possibility. Out of excitement, out of optimistic character of the seller, he might consider it to be sales and might write sale entry. Might write, you have written sales entry. That guy accepted. Like, ah, yeah, nice. See, I knew, I told you, no, you will buy. Happy. Then should you write sale entry again? Already ಬರ್ದ್ಬಿಟ್ಟಿದ್ದೀವಿ. You already written the entry, Hardik Pandit. So no problem. But the problem comes when you have written the sale entry, but the person to whom you have sold the goods or sent the goods denies the goods and then returns the goods. Then what should we do? We cannot write sales return entry. Why? At first place, it was not sales only. Sales ಆದರೆ ಸೇಲ್ಸ್ ಎಂಟ್ರಿ ಬರುತ್ತೆ. ಸೇಲೇ ಆಗಿಲ್ಲ ಅಂದ್ರೆ ಸೇಲ್ ಎಂಟ್ರಿ ಎಲ್ಲಿಂದ ಬರುತ್ತೆ? ಸೇಲ್ಸ್ ಎಂಟ್ರಿ ಎಲ್ಲಿಂದ ಬರುತ್ತೆ? So it was not sales only at first place. Out of excitement, you had written sales. What do we do? After, on the date when he returns the goods, we cannot write sales return, but we have to reverse the sales entry. Got this? But the problem comes when out of excitement, you have written the sale entry. He can accept, he can deny, but before he accepts or returns, no, year end will come. Then what do we do? Now, goods are ours. Ownership is ours. But we have written sales entry. He would have not written purchase entry. On the year end, it is not sales. Why? If you have recorded it wrongly as sales, you should record profit. On that, you should pay income tax. On that, you should pay GST also. And moreover, inventory will not be in your books of accounts. This is incorrect. This is incorrect. Because his acceptance, he might give acceptance. I'm not saying no. Your optimistic behavior is fantastic. But because of that optimism, that sale entry should not be preponed. It is sale, but might be sale in the next year. It should sale in the, you can write the sale entry early, but not next year entry in the current year. You can't do that. So you'd have to reverse the sale entry, and you should also include that inventory in your closing stock. No, you don't have the physical possession of stock. You have to reverse the sale entry and include that inventory in your stock. No, you don't have the physical possession of the stock. Shall I quickly repeat what I told? You have sold the, you have sent the goods to the customer. Have you sold it? Can you write sale entry? Should not write sale entry. Should not write. You have not written sale entry. The customer later accepted. When he accepts, write sale entry. He doesn't accept. He returns. You didn't write any entry when you sent. You don't have to write any entry when you return. All good. The problem comes when you have sent the goods and you wrote sale entry. If he accepts it later, should we write sale entry? No. If he doesn't accept later, what do we do? Reverse the sale entry. You cannot write sales return, we should reverse the. Got this? What if you have sent the goods, he has not accepted, he has not rejected. Before he accepts or rejects and the time lapses, year end will come. On the year end, it is our stock. We have not sold it. We should reverse the sale entry that we have previously passed. And we should record such inventory in our books of accounts at cost price. We should record such inventory in our books of accounts at. So this, let's understand this. So should he record sales entry? Answer is no. Why? There is only goods sent. Only possession is transferred and not ownership. And this guy should record, he has an option either to approve, that is accept, or to reject, that is deny and return the goods. However, it will be subjected to time frame. You should do it within a specific time period only. Do you agree with me? Very good. Now let's see the accounting part. Shall we? When to record sales entry? Under two circumstances. When the goods are accepted or when the time to return has lapsed. When he says yes, you will write the entry. Or when he doesn't say yes, doesn't say no, but the time has lapsed. Too much time is taken. Then we'll assume to be yes. ಇಷ್ಟೊಂದು ಟೈಮ್ ತಗೊಂಡ್ರು ಅಂತ ಹೇಳಿದ್ರೆ ಎಸ್ ಅಂತಾನೆ ಅನ್ಸುತ್ತೆ. ಅಕೌಂಟಿಂಗ್. Shall we see accounting? ಯಾಕೆ ನೋ ಆಗಿದ್ರೆ ಇಷ್ಟೊತ್ತು ಹೇಳ್ಬೇಕಿತ್ತಲ್ವಾ? ನೋ ಹೇಳಿಲ್ಲ ಅಂದ್ರೆ ಎಸ್ಸೇ ಅಲ್ವಾ? Okay. Then looks very practical. Let's see. First one. If the number of transactions are very few, these goods sent on return or approval basis transactions are very few. One transaction in every blue moon you have. Then you go for normal journal entry. However, if the transactions are little frequent, then you prepare one multi-column journal. If it is too many, too frequent, only these transactions you do. You don't sell the product normally. Only goods sent on return or approval basis. Then you keep one separate sale book, separate sales return book. So this kind of this question and this question is actually easy in the exam. This question is only little tricky. You won't believe? I'll show it to you. This and this is actually easy. This is only little tricky. I'll explain. Don't worry. First step, when very few transactions are there, you record them as ordinary sale. Frequent transaction, you prepare sale or return journal. This is also called as multi-column journal. In one table only, you will write no goods sent, goods returned, balance. That is your multi-column journal. And this is numerous transaction. One book, one table, you will write only sales. One table, you will write only sales return. This kind of question usually we don't have, but I'll still teach that to you also. Don't worry. First one, ordinary sale. Now, sale entry is written at the time of sending goods. Usually, should it be written at the time of sending goods? No, it should be written at the time of acceptance. But let us say we are excited and optimistic. We wrote the sale entry when we sent the goods. What is a journal entry when the goods are sent? Trade receivable account debit to sales. Trade receivables is nothing but debtors. Debtors account debit to sales account. This is the entry for sales. Yes or no? Very good. After this, goods can be accepted, goods can be denied. If it is accepted, what is the entry? It can be accepted at the same rate, it can be accepted at a higher rate, or it can be accepted at a lower rate. If it is accepted at the same rate, I told 100 rupees and I sent. I already wrote the sale entry. You accepted it at 100 rupees only. No other entry. Why? It is sold. Already sales entry is written. I don't have to write any other entry. No entry. That is no entry. Salman Khan, Vipasha Basu, sorry, Lara Datta, Vipasha Basu, Anil Kapoor. ಅದೊಂದು ಮೂವಿ ಇದೆ ನೋ ಎಂಟ್ರಿ ಅಂತ ಹೇಳ್ಬಿಟ್ಟು done. So next, we'll see the next one. It is accepted at a higher price. I sent the goods at 100 rupees. I recorded the sale entry at 100. Now when he is accepting, I will say 100 is too less. I forgot. Avaga, I was not thinking correctly. 120 rupees selling price. Then he agrees, okay, fine, 120. Because he sold at 200 rupees. He sold at 200. So 20 rupees additional selling price. Previously, we should have written sales entry at 120, but we have written at 100. 20 rupees short, no sales. Now we record sales entry for 20. We'll write trade receivables to sales 2020. For that increased price only. From 100, we've increased it to 120. We'll write this entry for 20. Understood? What if we decrease the price? We've sent it for 100. I've written sale entry for 100. He will call and say, I will accept for 90 rupees. 100 rupees I can't give. Then what do you say? You say, okay, yes. But you written sales entry for 100. It should have been there for 90. So you should reduce that 100 to 90. How do you reduce? Reverse 10 rupees. You will write the entry as sales account debit to trade receivables for decrease in price. And that will be the entry. Got it? ಏನಾಯ್ತು ಚೇಂಜ್ ಮಾಡಿಲ್ವಾ ಮಾಡಿದೀನಾ ಮಾಡಿಲ್ವಾ ಸಾರಿ this should be actually sales to trade receivables. Sorry, I will change it. Did I do this in class? Video also it was wrong. Video also I told I will change. Today I can't change. I'll change it next day. Okay, next. Denied. Goods are denied. Denied means what? They denied and they returned the goods. Hriday? 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 ತಪ್ಪು ಬರ್ಕೊಂಡಿಲ್ಲ ತಾನೆ ಕರೆಕ್ಟ್ ಬರ್ಕೊಂಡಿದ್ಯಾ ವೆರಿ ಗುಡ್ ಸ್ಮಾರ್ಟ್ ಬಾಯ್ ನಾನ್ ತಪ್ಪು ಮಾಡೋದು ನೀನ್ ಕರೆಕ್ಟಾಗಿ ಬರ್ಕೊಂಡಿದ್ಯಾ ನಾನು ಕರೆಕ್ಟಾಗಿ ಮಾಡೋದು ನೀನ್ ತಪ್ಪು ಬರ್ಕೊಂಡಿದ್ಯಾ ಅಂತ ಹೃದಯ ಅಂದ್ರೇನೆ next goods are denied. When the goods are denied, what do? We need to reverse the sale entry that we have already passed. What is the sale entry that we had passed? Trade receivables to sale. We'll reverse it. Sales to trade receivables. That's it. The next thing is, what if at the end of the year goods are neither accepted nor returned and time to return has not lapsed? He is not told yes. He is not told no. And can we assume it to be sales? No, because he still has time. Still has. Then what should we do? We have wrongly written sales entry. We should reverse our sales entry. We should reverse our second thing. Though we reverse the sale entry, goods are not in our godown. Goods are in his godown. So when we physically counted the inventory in our godown, that stock will not be included. But that stock should be included into our closing stock. So write one entry to include that stock into our godown. Two things we should do. What is it? We have wrongly written sales. We should reverse the sales. Second thing, goods belongs to us, but it is there in customers godown. So customers godown, whatever stock is there that belongs to us should be included into our inventory. For that, we need to write one inclusion of inventory entry. That's it. That's actually adjustment, but I'll teach it to you by way of entry. First one, reversal of sale entry. Entry will be sales account debit to trade receivables. This will happen at selling price. Next entry will be stock is our asset. I'll write stock with customer account debit to trading account. This is trading account is a final account. We can't write journal entry like this. It is just like closing stock. In stock reconciliation statement, should add stock lying with customer what belongs to us should be added. That addition I am giving it to you by way of a journal entry. This is a entry. Actually not a genuine entry. You can't write trading account in journal entry. And what is this? Stock with customer account. Stock account we will not prepare. Just for the sake of writing an entry, I have given it here. This should be at what price? Cost price. Understood? Very good. Now, what if the sale entry is not passed at the time of sending goods? Sale entry is not passed when the goods are sent. When the goods are sent, no entry. When the goods are accepted, then we write the sale entry. Got it? Higher price, lower price, same price, doesn't matter. Whatever price they've accepted, at that price will write the entry. Higher, lower, same won't come. Why? If they accepted 120, I'll write entry for 120. If they accepted 90, I'll write entry for 90. That adjustment for 20 and 10 will come if you have already written entry for 100. If you have not written entry in the past, so there is no question of adjustment. Janav is angry. I feel like, no, waiting to. I was thinking you are angry. Next, denied. Goods are, then should we write any entry? Why? When we send the goods, we didn't write any entry. When the goods are denied, also we will not write any entry. No entry, no entry. Okay, done. First. Then end of the year adjustment, what should we do? We don't have a sales entry to reverse, but we need to do stock adjustment. We need to do, we need to write stock with customer account debit to trading account. This entry should happen at. Are you getting this? That's it. So this is what you should know from this topic. And in the next year, it will be same. It doesn't matter whether we had written sale entry, we had not written, everything is adjusted. In the next year, when it gets sold, we will write sale entry. If it is returned, no entry. Why? We have not recorded sales only. So in the next year, if it is accepted, we will write the sale entry at the price at which it's accepted. If it is denied, then we will not write any entry. For goods rejected and returned, we will not write any entry. So this is what you should remember from this chapter. That's it. And there is this concept of multi-column journal. Multi-column journal will look like this. This is what we discussed so far, no entries. That is for very few transactions. Next is frequent transactions. When the transactions are frequent, what do you prepare? Multi-column journal. Here you prepare 4 boxes. First box is goods sent. Second one, returned. Third box, approved. Fourth box, balance. So assume that you sent so many units. Here 3 columns will write quantity, rate, amount. Or sorry, date, particulars amount, date, particulars amount, date, particulars amount, and their amount. You will write on what date, how many quantity of units, to whom is it sent. Is it returned? Is it accepted? If it is neither returned nor accepted, it will come in balance column. You might have seen problems of this type. Very, very easy ones. It is just that question mein whatever table is there, you would have to write it little defined format mein into the answer. For example, Mr. A. That is the problem. A, B, C, D, E, F is there. Mr. A, 10,000 is the goods sent. 8,000 returned. 2,000 accepted. Balance 0. Mr. B, 4,000 sent. 1,000 accepted. 1,000 returned. 2,000 balance. Mr. C, 4,000 sent. Neither accepted nor returned. Entire amount balance. So we'll write like that. Should I do it properly? Easy. If you want me to do it, but it's very, very easy. Only point is, if we don't do problem on this, the time saved here will go to another chapter. Depreciation, partnership, company accounts, final accounts, NPO, things. Okay, now. So then the last one is day book and day ledger. So day book and day ledger, we will prepare one sales return book, sales return account. Here I'll write sales from each of the party. Same thing, that multi-column journal is there. No, exactly it will look like that. There we write one separate column for sent, one separate column for return, one separate column for balance. Here we'll write debit and credit. So debit side, what do we write? We'll write the date, particular amount ending for, and then credit side will write goods sent. And here I'll write goods returned, balance I'll write here. Out of this I'll write goods, how much is the sales, and then returned balance. This much. I've sent 10,000, accepted 2,000, returned 4,000, balance is another 1,000, or balance is another 4,000. Same multi-column journal presented differently. There you write sent, returned, accepted, balance. Here you will write in the ledger account, you'll write credit side sent, debit side accepted, returned, balance. Accepted plus returned plus balance is equal to sent. No? Presentation will become little different, and one more set of answer. For the same problem for which you prepare multi-column journal, you would be also be able to prepare sales return account if required. But usually they won't ask. Okay. Shall we see the weightage for this unit? Any doubts in this? One of the shortest, sweetest units, no? We took about 15 minutes to finish this. Let us see the weightage. How many of you have not done this? Not done this unit and skipped? Don't skip. It will take hardly, you will take 1.5 hours to finish questions on this unit also. This unit, the entire chapter is on YouTube. Entire chapter. I'm not telling 1, 2 questions. Entire chapter theory, all the problems, about 10 to 11 problems we've done on this chapter. Entire thing is there on YouTube. 1.5 hour video. Half an hour, half an hour, half an hour, three videos. If you watch it at 2x speed, it will get over in 40 minutes. 35, 40 minutes. That's much time only will take. But marks, look at the marks. 2 attempts they asked, 1 attempt they didn't ask. 1 attempt they asked, 1 attempt they didn't ask. 2 attempts they asked, one they didn't ask. So it can come, but cannot come also. If it comes 5 marks, lottery. These 5 marks will be very easy, simple, and quick. Very importantly, quick. Usually, time constraint barte gota exam ali. You have 100 marks to write in 180 minutes. You say 1.8 minutes for 1 mark. Some questions you'll say, for example, company accounts question if you have, or NPO question if you have 10 minutes, or 10 marks question, you would want to finish it in 18 minutes. You will not be able to finish it in 18 minutes. You might take 20, 25 minutes. That you take extra time there, no? That will get compensated in chapter questions like this. Here, 5 marks question can be finished in 2 minutes. But for 5 marks question, if you take into 1.8, you are allowed to take up to 8 minutes. But you can finish it in 2 minutes. So that time that gets saved here, time that gets saved in BRS, time that gets saved in rectification, the time that gets saved in true or false, difference between theory questions, that and all can be used up to pull up extra time in NPO, final accounts, partnership, company accounts. Okay, so please don't skip. I am not telling you this chapter is, let's say, will come in the exam every time. But I'm telling you, please don't skip this. This is not a unit which is worth skipping. ತುಂಬಾ ಕಷ್ಟ ಇದ್ದು ತುಂಬಾ ಮಾಡಕ್ಕೆ ಆಗೋದಿಲ್ಲ ಅಂತ skip ಮಾಡಿದ್ರೆ ಒಂದು ಲಾಜಿಕ್ ಇದೆ. This is not the unit to be skipped. If this question comes in the exam, you should be like, yes, first, and then write. You should not write the answer first. First, yes, and then write. When someone does, yes, like, who sent out return or poll question ಬಂದಿದೆ? That guy is celebrating. Got this? Okay. Okay, come on. Now let's do one question on our valuation of inventory. Okay, valuation of inventory. Which one do we do? Exam question ಮಾಡೋದಾ backward May 19 6C 5 marks. After that, if you're still not satisfied, we'll do one more forward question 2B. Okay. Huh? May 19, very old exam. Shall we do that? Come on, let's do May 19. May 19 exam question. If you don't have access to all the past exam papers, you ask, I will share one link to this folder called Gyan Bundle. I have made this folder for myself. In this folder, if you open RTPs, all the past RTPs are available. You can just say ICA website. IC website में only last 2 or last 3 or 4 RTPs are only available. Beyond that, it's not available. And mock test paper, only current mock test papers are available. Previous to this certain mock test papers are not available. Because I have been teaching for long, whenever it's been uploaded, I have downloaded and kept it in my laptop for my personal use in the class. I can share link to this folder if you want. If you would ask, I'll give this to you. So here you have 3 folders in this. Once I share the link, I will share everything. We should know how to use it, no? So I'm trying to help you here. In this folder, there will be 3 subfolders. One is RTP, one is past exam, another one is MTP. Mock test paper mein again all the past MTPs question papers are there in separate folder, and answer papers are there in separate folder. Okay, remind me towards the end of the day, we will do one student's paper analysis. We'll see one of the student's paper as to how the entire paper was. Now we were seeing which paper? May 19, huh? May 19. Oh, how come both of you are sitting apart today? From there you are not able to see. What happened? Your eyes are all swollen. Didn't sleep correctly. And I don't know if people have already started. So as the exam is coming closer, you can sleep less. There is no need to sleep 9 hours, 10 hours and all. ಅಷ್ಟೊಂದೆಲ್ಲ ನಿದ್ದೆ ಮಾಡೋ ಅವಶ್ಯಕತೆ ಏನಿಲ್ಲ. If people are young and energetic, you can manage with lesser sleep. See, our Saho didn't come today. And people, how many of you go to gym and all regularly? No. Gym. You should, okay, now considering the fact that your exam is fast approaching, my personal suggestion, reduce your gym time. or workout. If you're playing sport, reduce. The reason is, if you do any physical activity like lifting weights, push-ups, pull-ups, or anything which stresses the muscle, body needs recovery time. You would sleep longer. If you stop doing this physical activity, you can sleep lesser, short. I'm not telling you sit only 24 hours and 8 hours. Do your physical activity, but don't do like this music ಹಾಕೊಂಡು full Instagram ಅಲ್ಲಿ reel ಹಾಕ್ಬಿಟ್ಟು full ಹಿಂಗ್ ಮಾಡ್ತಾರೆ. Don't do that level. You might be a bodybuilder, but do it after the exam, or you do it till now, but in a week's time or 10 days time, at least 15 20 days before the exam, you'd have to put a hold on that, because more of that physical activity you do, more recovery time the body needs, and you would sleep longer. And rest of you lazy people in the class, do some physical activity. Walking is not physical activity. Sir, I do walking. Walking in the terrace is for your grandmother who's 80 years old. Can't do anything else in life, they do walking. You should do running. Jogging is also not fit for people. You should do running. And you should do a little bit of physical activity so that you get that little sleep. Chalo. Let's start this question. Raj Limited. Very simple. Five adjustments are there. Oh, sorry, six adjustments are there. They want you to ascertain the value of stock as on 31st of March 2019. 5 marks for six adjustments. And 1 mark will be given for the closing value of stock also. So marks wise very less alva. Easy question irutte. Raj Limited prepared their accounts for the year ended 31st of March 2019. Very good. Due to unavoidable circumstances, you don't have to justify your reasons. We know that you didn't find the inventory on 31st of March. Inventory was taken on what date? 10th of April. So when did they take the inventory? When should have they found the value of inventory? 31st of March. From 10th of April's inventory value, you should come back to inventory as on 31st of March. So is it a forward problem or a backward problem? Backward problem. In a backward problem, purchases will be deducted, sales will be added, inflows will be deducted, outflows will be. Do you agree with me? Okay, come on. Let us start with the inventory 1,25,000. Right. Should I make you read or should I show the answer? Lazy. Okay, I will show. Today, you people are the king. What you say is what's going to happen. But exam, you should write. Exam will be like, okay, come on, now solve. Understood. Okay, understood. Understood. Okay, fine. Yes. Pasa. Thank you. It will not work like that. Very unfortunate. It's okay. Maybe we'll save that time. Tulsi. Tulsi, no. Long time no see. Come, come, come. Tulsi, any of your friends in the class? ಅಯ್ಯಯ್ಯೋ 6C answer ಇಲ್ಲ. We don't have an option. We would have to solve. Fine, let us solve it. Not to worry. What is happening in question 16? Right. Raj Limited prepared accounts. Okay, we know inventory as on 10th of April. Let me write here. Inventory as on 10th April. How much is it on 10th of April? 1,25,000. Okay, now what is there after this? First adjustment. Sales are entered in sales book on the day of dispatch and return inwards in the return inward book on the day goods are received back. So when do they write sales? When the goods are given. And sales return, when do they write? When the goods are received. So basically they're writing it on the physical movement of the goods, not when the invoice is generated, not when the money is received. Sales return is recorded not on the date customer calls and tells. It is recorded on the date when customer will return the goods to us. Understood? Next, purchases are entered in the purchase book on the date invoices are received. But it's not like how for purchases. Purchases, goods are not received. Invoices received. What do? We'll record purchases. We'll record. Understood? For purchases, we're going by accrual. For sales, we're going by actuals. Remember this. And we cannot question this. This is their accounting policy. We are not here to comment. Oh, this is good. This is very hypocrisy. How can you be so much hypocrite? You can't comment. This is their accounting policy. And we saw six adjustments. No, you're like, oh, six adjustments, 5 marks, major ಆಗ್ತಿತ್ತಾ? Two adjustment is accounting policy. You don't have to do anything. So only how many are left? Four adjustments. So each adjustment 1 mark, end answer 1 mark, totally 5 marks. One adjustment get 1 mark. Shall we read the third adjustment? Sales between 1st of April to 9th of April amounts to rupees 20,000 as per sales table. Any other sales adjustment? Not much, I guess. Yeah. So 20,000 rupees is the sales. So sales is outflow. Goods have gone out, but we're doing backward. So what should we do? Did you understand? Sales is outflow. Goods have gone out, but we're doing backward. So we should add 20,000. But remember, sales should be added at cost price. Sales should be added at. Do we know the GP percentage? No. We don't. Right now, we don't. That is at the end of the question. So I'll write here cost of. So this is what should be adjusted. Adu gottilla. So I'll write here sales. How much? In the inner column. And I'll wait. After that, hey, you will not, don't skip this third, fourth, fifth adjustment, straight away come to sixth adjustment and then see 25% on cost and then adjust here. Wait, you write it like this only. The problem when you skip like that, no, from third adjustment, you came to sixth adjustment. Then when you go back, you might not go to fourth, you might go to fifth, or you might end up reading the third adjustment second time. When you do mistakes like this, you end up losing marks. This is a very, very easy and silly way of doing marks. And you might end up reading the question paper also 2 times. Usually question paper is 12 pages, 13 pages. Each page, if you read once, it will take 12 to 13 minutes. And if you read the question paper 2 times, 24 minutes. If you read it 3 times, 36 minutes. So you should try to ensure that you finish the questions, you finish the answers in only one reading of the question. That to a systematic manner. Keep patience. And then wait till the adjustment and then go to fourth adjustment. Yeah. Some people have waited for in one entire guard to meet the guard. You people are like so impatient that you want to know GP percentage so immediate. Fourth one. Free samples for business promotion issued during 1st April to 9th April. 4,000 at cost. You should say thank you. You know why? They've given cost. If they would not have given cost, if they would have given selling price, again you would have to write in inner column and then wait. And then later, one fine time when Rama is born in the next year, sorry, the later part when they give cost of, sorry, selling price and then GP percentage data, we have to deduct it to find the cost price. Understood? Okay. So let's quickly go ahead and then write this. This is outflow of goods. No? We should deduct, but because we are doing backward, what do? Add. Shall we add? Okay. ಇಲ್ಲಿ ಸ್ವಲ್ಪ ಜಾಗ ಬಿಡ್ತೀನಿ. For what? Profit minus ಮಾಡಿ. To write that, I'll leave little space. Here I'll write next item. Add. What is it? Goods issued as free sample, no? Someone told sir, doubt idya? Afan has come. Oh yeah, nice. 4,000. Then next what do we have? Purchases during 1st April to 9th April amounts to rupees 10,000, but goods amounting to 2,000 were not received till the date of stock taking. I will give you 1 whole minute. Think and tell me. Purchases should be usually added, but because we are doing backward, what do? Deduct it. Should I deduct 10,000? Should I deduct 12,000? Or should I deduct 8,000? Is it 10 plus 2 or 10 minus 2 or only 10? Second? It is related to second subquotient. You want me to show second subquotient? You want to see second adjustment? You read it? How many of you say 10,000? Raise your hands. How many of you say 12,000? How many of you say 8,000? How many of you say we don't know, sir? We don't know. ಅದಕ್ಕೆ ತಾನೇ ಬಂದಿರಿ. Guys, honest. Only one guy in the class. Huh? 2, 3. Rest of you, we don't know, but we are not so active to raise our hand. We are lazy. ನೀವು ಹೇಳಿ ಹೆಂಗಿದ್ರು ಹೇಳ್ತೀರಲ್ಲ. Okay. See, they have told us that the purchases should be recorded when the invoice is received. We did not wait for the actual receipt. That is till 31st of March. Till 31st of March, whatever purchases we made, even if you've just received the invoice, you record it. Don't wait for the actual receipt. This purchases invoice is also received after 31st of March. Goods are also received after 31st of March. None of these goods should be included as on 31st of March. Do you agree with me? This purchases is made between what dates? 1st of April and 9th of April. What dates inventory are we finding? 31st of March. As on 31st of March, have you received invoice for these goods? Have you received these goods? No. We are starting with inventory as on 9th April. We should find the inventory as on 31st of March. Between this 1st and 9th April, purchases made is 10,000. But how much is received? 8. 2,000 is not received. Purchases made is 10. Goods received is, in our go down, 8,000 worth of stock is there. In our go down, 8,000 worth of stock is on 9th April. When we physically count the inventory on 9th April, to arrive at this amount of 1,25,000, we would have included 8,000, not 10,000. We would have included, not, understood? We've included that 8 which has come to us between 1st and 9th, which is there on 9th, not there on 1st. If you have to find the inventory as on 1st April or 31st of March, from 1,25,000, I should eliminate 8,000, not 10,000. I should eliminate, not, why? We are doing physical movement of goods ka competition. As on 31st of March inventory we should find. As on 9th April 1,25,000 it is. And 1,25,000 is after adding 8,000 goods received. So we'll eliminate that 8,000 to arrive at inventory as on 31st of March. How many of you did not understand? We should adjust 8. Please feel free, ask. This is counted or understood? Okay. Hi. That guy, no, he's like, he messed with me yesterday. He came to me and they told, sir, do you remember? I usually remember people by faces if I've taught them. He's like, oh, sorry, man, I don't remember you. Okay, no, sir, I have not met you before. But people, there are people like that. And Papa Rashmi came. Rashmi is here today. Where is Rashmi? Rashmi came. You came yesterday and then you asked, sir, do you remember me? I have not seen her before. Because online class. Then they're like, fine, now I know. Yesterday I texted her. I know, okay, now. She doesn't, you know, she will not check message. Okay, great. So how much should we deduct now? 8. Shall we deduct 8? Physical receipt of goods is 8,000 between these 9 days. So we should deduct 8,000 to go back to 31st of March. So let us write here less goods received, not purchases. Goods received between 1st and 9th April. How much? Minus 8,000. Then what else do we have? One last adjustment. What is one last adjustment? Invoices for goods purchased amounting to rupees 20,000 were entered on 28th March 2019, but goods were not included in stock. You know what you do? Invoice came. You entered the invoice in books of accounts. When you're physically counting the inventory, you didn't count that inventory. Correct or not? So this, should we take the 20? Should it be included? But this 1,25,000 whatever we have here, does it include that? That's what they're telling. It's not including. So what do we do? Include. So shall I add this 20,000? We'll write here. Add stock purchased but not included. How much? 20,000. Any other adjustment? That's it. Rate of gross profit is 25% on cost. 25% on cost is 1 by 4 on cost. 1 by 4 on cost is 1 by 5 on sales. So you know how to find on cost. I will not tell you long story. If it is 1 by x on sale, it is 1 by x plus 1 on. Sorry, if it is 1 by x on cost, it is 1 by x plus 1 on sale. You know the reason? Okay. So if it is 25% on cost, how much on sale? 20%. So shall I write here 20%? How much is 20%? How much? 4,000 minus 4,000. So can I say this will become 16,000? Yes. If you take the total here, you will get inventory as on. 1,57,000. Oh, end answer, huh? Difficult, easy. See, 5 marks they've told. 1 mark, 2 marks, 3 marks, 4 marks, fifth mark for this. 1 mark for each of the steps. Difficulty, difficulty level less, no? In the classroom, difficulty level of the questions that we've done is much more than what is usually asked in the exam. If in case at any point of time you find your confidence is low, you feel like you are under prepared, start solving past exam question papers. Your confidence will straight away skyrocket because you will be able to solve those questions. And even when you solve classroom questions, no, you know what will happen, or anything other than past exam questions, if you solve, if you don't get the answer, you will be upset. If you get the answer, you will not feel very confident. You know why? Ideno siktu. But what if these kind of questions don't come in the exam? That is our kind of state of feeling. If you do exam questions, you will be like, oh, this is the kind of question that will come in the exam. Oh, I was able to solve this, so I will be able to solve the questions that will come in the exam. So you will feel good. If you don't get the answer, what will you do? You will try to find out how the answer will come. Once you find it, you're like, so this is the kind of question that will come in the exam, which I didn't know how to do. Now I know how to do it. So either ways, you will feel good. Whenever you feel low, you feel like your preparations are not up to mark. What should you do? Solve past exam papers. If you are able to solve, if you are not able to solve, either ways, after you solve one paper, you will feel better. You will feel, are you getting it? Yeah. So there are 10 question papers available. How many? 10 papers. So if you're studying accounts for 10 days, about 43 days left for your exam. 42 days. 40? 42 days left for it. How many of you are keeping count now? Write it. It's important. Out of 42 days, about 10 days you study accounts. In all those 10 days, after you study for the entire day, end of the day, 25 to 30 minutes is what you will take. One entire question paper, you do review. One entire question paper, you will be able to solve it. Count ಮಾಡಿ ಎಷ್ಟು ಮಾರ್ಕ್ಸಿಗೆ ಆನ್ಸರ್ ಗೊತ್ತು, ಎಷ್ಟು ಮಾರ್ಕ್ಸಿಗೆ ಆನ್ಸರ್ you are able to compute. 70 marks, 80 marks you will easily get. Some people will get 140, 145 and all. Counting ಬರ್ದೇ ಇರೋದು. So if you are able to, counting correct ಆಗಿ ಬಂದಿದ್ರೆ 140 ಬರುತ್ತೆ counting. So you will feel nice. Do that. 10 days you will study, no accounts. One day, one paper, 10 papers. Oh, nice. 10 papers will be over. Do that, And don't stress too much on mock test papers. What I've seen is again 1 day before the exam, 4 days before the exam, people take some screenshot of some mock test paper and then they'll suffer. Mock test paper questions are usually not replica of ICA exam questions. If you see mock test, they've asked so many times question on petty cash books. So many times they've asked question on purchase book, sales book or not. Usually in the main exam, purchase book, sales book question won't come. Usually petty cash book question won't come. But every time they ask nonsense questions from that. So petty cash, your mock test papers doesn't show replica of your main exams. Whether it is ICI mock test or any other mock test. Even mock test that we conduct here at SS Academy, we keep the benchmark much higher. The difficulty level, we keep it much higher than the ICA exam standards. So mock test paper is to make you understand your ಏನು ಓದಿಲ್ಲ ನೀನು ಓದು. That's the point. Okay. When you are feeling low, don't do mock test papers. Do only exam papers. When you feel overconfident, you do mock test papers. Like ಏನಿದೇನು ಗೊತ್ತಿಲ್ಲ, you will start feeling good then. You will start feeling more humble. Now, the question that I have to you people is, do you want me to solve one more question on valuation of inventory, or can we start with depreciation? Towards the end, if we have time, shall we do? Because we might not have time for all the chapters. At the end, if you have time, I will do question from the chapter that you want. Towards the end, if we have time. It's a big question. Yeah. Yes, ma'am. You would know how to deal with it, but can't cover one time constraint. Otherwise, fine. Got it? And there are some videos uploaded. Master problem on NPO, master problem on BRS, master problem on rectification. I will upload master problems on remaining chapters also, which will include all the possible adjustments. Maybe if you see that, you will get an understanding. Got it? Got it? Got it? Now, shall we start with depreciation? Come on, guys. Let's start with depreciation. I'll give you a short break. 5 minutes only. It is 10:05. See you all at 10:10. Whoever has bottle filling, bottle emptying, such kind of work, you can finish it quick. Hey, nice place. Here you have, what is a spacious washrooms. Enjoy. See you all at 10:10. We'll start depreciation at 10:10. Okay, guys, welcome back. We had stopped at the chapter of valuation of inventory. We are still not one done with depreciation. On public request, ಪ್ರೇಕ್ಷಕರ ಒತ್ತಾಯದ ಮೇರೆಗೆ ಈಗ ನಿಮ್ಮ ಕಿರುತೆರೆಯಲ್ಲಿ ಬರ್ತಾ ಇದೆ ಪಾರ್ಟ್ನರ್ಶಿಪ್ ಅಕೌಂಟ್ಸ್. We'll first finish partnership accounts, then we'll do 9 and 10 again. NPO and the company accounts, then we'll go to. We will still do depreciation. ಆಯ್ತು 10 and then 9. 8, 10, 9. Fine. Okay. Listen, everyone. We'll start with chapter 8, partnership accounts. Partnership accounts is a chapter with several units inside. It's a quite big chapter. In fact, this covers your 50% of your second PUC syllabus is only one chapter in here. And they won't get question from admission, retirement, death all together. You'll get only from one of them. Together you get only one question from partnership or two small questions. So partnership accounts may usual weightage is like this. As per ICA's BO's knowledge portal, the weightage that is given, skill wise weightage, section wise weightage, what they give, no? That says 30 to 40% marks for final statement, financial statements, partnership accounts, and NPO together. Exclusively from the chapter of partnership, you can expect about 10 to 15 marks. You might ask, how do I say that it is 10 to 15 marks? When ICA says all the three chapters together, 30 to 40. This is based on the past examination paper analysis. If you observe, May 18, May it's come for 10, November 18, it's come for 15, May 19, 10, November 19, 10, 10, 10, 10, 10, 10. You get, this is how the examination pattern is. Every attempt has a question from partnership. There is no examination till date where partnerships a question has not come. Every attempt there is question from partnership. Going further, I'll make this kind of presentation for all the chapters. I'll put the paper-wise analysis here. Here you see more space now. Here I'll put the question. So later we'll zoom in and then see that question and solve that question also here only. After that, specific part of the theory is done. I'm doing similar presentation for Inter. Already 4 chapters of Inter I've done. Present batch already it happened. ಸೊ ನಿಮಗೆ ಬರೋದಕ್ಕೆ ಫುಲ್ ಸಿಲೆಬಸ್ ಮಾಡ್ತೀನಿ. ಈಗ ಪ್ರೆಸೆಂಟ್ ಬ್ಯಾಚ್ ಅವರಿಗೆ ಆಲ್ರೆಡಿ 4 ಚಾಪ್ಟರ್ ಹಾಗೆ ಮಾಡಿದೀನಿ, 5ನೇ ಚಾಪ್ಟರ್ ಮಾಡ್ತಾ ಇದ್ದೀನಿ. ಸೋಮವಾರ ಕ್ಲಾಸ್ ಇದೆ, ಅಷ್ಟೊದ್ರಲ್ಲಿ ಮುಗಿತೋ ಇಲ್ಲೋ ಗೊತ್ತಿಲ್ಲ. ನೀವು ಬನ್ನಿ, ನಿಮ್ಗೂ ಮಾಡೋಣ ಸರಿಯಾಗಿ. ಓಕೆ, ಸೊ every time you get, so you won't get on admission only all the time or retirement only all the time. Sometimes admission, sometimes retirement, sometimes death, or sometimes 2 sub questions bandaga both of them might come. Let's see the paper weightage later. What has been questioned, what question has come, we'll see later. But subunits that is there in this chapter is, first one is introduction, second one admission, then retirement, then death. These are the subunits. So let's first start with introduction to partnership, shall we? So the question is, what is partnership? So partnership is like this, okay? 3 people coming together. So this is partnership of people. Correct. Now I wanted to make this very filmy. You see, no? 3 people together, they're discussing. So partnership is an association of 2 or more persons. Usually there'll be 2 people, but there can be more than 2 people. When they come together for the purpose of business, to share profits and losses arising from business carried on by all or one of them acting for all. Each of the term is very significant. We'll understand each of them in detail. To start with, the first one that we should understand is, it is association of 2 or more persons. When we say more persons, there is a limit. There is a limit. Limit is given on the act also separately and in the rules also separately. Both of it should be known. If we talk about the rules as per the act, it is like our lathi charge that's been done by Ramcharan. If you remember, cops also will hit like this, no? When people do some crime. So when they do like that, where do cops hit? They hit on the leg, sweep shot for a 4. And then people will hold their legs. Then they'll play hook shot for a 6 on the back. Because fielder will come in, no? Then you can't play sweep. You hit him to over him. Then when the fielder is in and then you hit it for a 6, final leg will be pushed back. Again, you play a sweep shot for a 4. So section 464 of Companies Act 2013 says that the maximum number of partners is 100. Why? If you hit 4, 6, 4 and all, not like Yashasvi Jaiswal. You will pakka score a century only. Correct or not? It will become 100. ನೋಡಿದ್ರ ನಿನ್ನೆ ಮ್ಯಾಚ್ ಮಾನ ಮರ್ಯಾದೆ ಇಲ್ಲ, ಎಕ್ಸಾಮಿಗೆ 43 ದಿನ ಇದೆ. We are watching match last night. I didn't see the match actually, for information. I only read the score in the morning. I saw Sanju Samson became MS Dhoni ಅಂತ ನೆನ್ನೆ. ಹಿಂಗೆಲ್ಲ ಡಿಫೆನ್ಸ್ ಆಡ್ಬಿಟ್ಟು ಅವನಿಗೆ ಸೆಂಚುರಿ ಹೊಡಿ ಅಂತ ಬಿಟ್ಕೊಟ್ರೆ ಅವನು. Okay, as per section 464, what is the maximum number of partners? 100. However, as per company rules, limit is given to 50. You should comply with both. So if you have 60 partners, it is like complying the act but not complying the rules. If you have less than 50, it is complying rules and complying act. You should comply both. So you should have less than 50 partners. If it has more than 50 partners, it is illegal association. Why does Act say something else, rule say something else? Long story, won't tell now, but you people figure it out yourself. If not, someday when I have time, I'll tell. Okay. So next thing that we have is coming together for the purpose of business. So purpose of business is very important. If not, marriage also will become partnership. Two or more people coming together, profit, loss, activities carried on by all, or one of them acting for all. No, so purpose should be business. So mercantile law this is. Partnership Act is also a mercantile law, business law. Okay, next you can share profits or you can share law and losses, but it is not profits and losses. They've given it is profits or losses because certain times partners will share profits only. There is a provision in the act which will provide to admit partners who will only get profits. So certain people, if there is profit, they'll say I am also partner. If there is loss, boss, I don't know. Loss you guys share. I am busy. So there can be partner in the case of profits only. There can be partner in the case of profits only. Provision allows to have partners in the case of profits only. Then the next thing that you should know, from activities carried on by all or any one of them acting for all. There is no condition that all the partners should actively take part in the business and all the partners should do all the work. Sometimes some partners will work, other partners doesn't. So that is the concept of active partner, dormant partner that will come. For example, if you observe here, see here, you remember this scene? This guy is saying, so one guy will work and other guy can take the benefit of the situation. So I have made so many more pictures I've clicked. I should just situation ಗೆ set ಆಗೋತರ sync ಮಾಡ್ಬೇಕು. Full RRR movie I'll show. Copyrights issue case file ಆಗ್ಬೇಕು ನಮ್ಮ ಮೇಲೆ. Full publicity then. Then okay, Bangalore say one faculty has been infringed copyrights of RRR movie. We shown the entire movie in the class to teach one topic. Then everyone will search faculty from Bangalore teaching partnerships. Full famous ಆಗ್ಬಿಡ್ತೀವಿ. We will pay some money to Rajmouli also, but oh my god. Then Ram Charan also will come to meet. Totally case. That's one phone photo ಹಾಗೆ selfie sir. However, we're paying compensation for a photo at least. R. Okay. R ಆಗ್ಬಿಡುತ್ತೆ. So you understood the definition of partnership? Very good. So once we understand the definition, the next thing that we should know is are the term. Revealing. It should not be like that. None of the terms partner, partnership, and partnership form the same. The answer is no. Individually, they're called as partners. Separate dance artirtare. And together, it's called as partnership. And the name under which they do business is called as firm. Individually, they are partners. Together, the relationship between them is called as partnership. The name under which they do business is called as. Are you getting this? So that's the difference between partner, partnership, and partnership. The next concept that you should know is what is constitution of partnership. In company, you have articles of association, memorandum of association. Similarly, in partnership, we have partnership deed. What do we have? Very good. Partnership deed is the articles of association, and this partnership deed can be oral or it can be written. It can be oral or it can be written. And whenever the partnership is oral, you cannot register it. In order to have a registered partnership deed, you should have it in the written format. You cannot say oral form to get oral form ಅಲ್ಲಿ ಎಲ್ಲಿ ಸ್ಟ್ಯಾಂಪ್ ಹೊಡಿತಾರೆ, ಎಲ್ಲಿ ಸೀಲ್ ಆಗ್ತಾರೆ, ಎಲ್ಲಿ ಸೈನ್ ಆಗ್ತಾರೆ. Not possible. If you write it in one paper, on that paper they can put one signature, stamp paper, they can print, sign, and then registrar also can document it in their register office. All that is possible. So the question is it mandatory to register a partnership deed? No, not mandatory. It is optional. But what will be the consequence? We'll discuss it. Is the registration mandatory? The answer is no. It is not mandatory. A partnership form can be either registered or it can be unregistered. However, in order to register a partnership firm, there should be a written deed. You cannot have an oral deed and a registered partnership. To register it, the terms of the deed should be written down on a piece of paper. What is the consequence if you don't register? What if the partnership firm is not registered? Sue problem. The problem here is outsiders can sue the firm, but firm cannot sue outsiders. Yeah. So outsiders can sue the firm, but firm cannot sue outsiders for an amount exceeding 100. Again, why 100 rupees? It's a long story. Logic is there for this. It is not law says this and you should do. There is logic for everything in law also. So we usually discuss this in the regular class, but I don't want to waste the classroom time in telling what is this 100 rupees for. Not worth the time in the class, right? Let's go to the next part. What are the contents of partnership deed? So many things should be there. Name of the partnership, address of the partnership form, name of the partners, address of the partners. What is the nature of business? What is the profit sharing ratio? And then how much should be the capital that each of them should give? How much salary will they get? How much interest on capital? How much remuneration? How much commission? How much is the drawings pay interest? How much is the loan pay interest? How to admit a partner? How to retire a partner? How to kill up? Sorry, what to do in the case of death of a partner? And when to dissolve the partnership form, how to compute the goodwill of the partnership firm, and all of these terms will be decided in a written format in partnership deed. No matter how many points you cover, you might still forget to write some items in partnership deed. So partnership deed might be silent on some items, or partnership deed might not be there only. Then what to do? To solve this problem, Section 13 of Partnership Act comes out with model deed. What do we call it as? Model deed. Section 13 of Partnership Act 1932 tells what to do if the partnership deed is absent or partnership deed is silent. There is deed, but deed doesn't talk anything about profit sharing ratio, or there is no deed only. In this case, what to do? In that case, section 13 comes into picture. Section 13 has 5 subsections: A, B, C, D, E. Section 13 subsection A tells that no remuneration can be given to any partner. Salary, commission, ANS. If you want to give remuneration, what should you do? Write it in the partnership deed, register the partnership. Section 13 subsection B says that profits are to be shared equally between all the partners. Are you getting it? So you cannot tell any B words and then say I want more. No, equal profit to all of them. You might have contributed more capital, you might be active partner, other partner might be dormant partner, other partner might have contributed less capital. We don't care. Profits are to be shared equally between all the partners. Third one says that there is no interest on capital. You want to give interest on capital, write it in the partnership deed, get it registered, then give interest on capital. If you have not drafted partnership deed, or if you have not registered partnership deed, you cannot claim interest on capital. Interest on drawings also cannot be taken. Then section 13 subsection D says that any money contributed by the partner to the firm beyond this capital, any money contributed by the partner to the firm beyond this capital will become advance given by the partner to the firm. On that advance, firm has to pay interest at 6% per annum, simple interest to the partner. I repeat, beyond the capital, whatever is there as per it, any money given by the partner to the firm, it is advance given by the partner to the firm. On this, firm has to pay interest to the partner at 6% simple interest. Can they take 8? No. Can they take 6% compound? No. If you want to take compound interest, or if you want to take more than 6%, you should write it in the partnership deed. All the partners should sign, and then you should get it stamped and then registered. Then you can do whatever nonsense business you want. Got that? Last section, section 13E and 13F is also there. Section 13E says that firm will indemnify the partner for expense and liabilities. Meaning, if the partner does any expense on behalf of the firm should pay. And because on behalf of the firm, if partner does any loss, he should pay to the firm. So basically, this together I used to tell you in very simple terms, saying all the partners have equal rights and equal responsibilities. That summed up, say about the liabilities and then this part. So you will not be questioned on E and F. But remember, no interest, no interest on capital, no interest on drawings, no remuneration, profits to be shared equally. If in case there is no partnership deed. Okay, now? Yeah. Say something. Very good. Then we'll discuss the next part wherein we have to know whether P&L account and P&L appropriation account is same. Are they same? The answer is no. Purpose why we prepare both of them are different. The reason why we prepare is different. How we prepare is different. The items that will be written in both of them also will be different. Objective of preparing P&L account is to determine profit, whereas objective of P&L appropriation account is to share that profit, or what to do with that profit, how to appropriate that profit. Are you getting it? Then, so consists of, what does P&L account consist? P&L account consists of expense and income. How much is the expense? How much is the income? How much is the profit? P&L appropriation account consists of this much is the profit, this much transfer to reserve, this much distributed to partners. So it is appropriation of income, like transfer to reserves, distribution to partners, that will come. Irrespective of the case, whether you have profit or not, you prepare P&L to determine profit. Irrespective of the case, whether you have sufficient income or not, you will still provide for expenses. So items in P&L are mandatory to be written. P&L appropriation, you will appropriate only when there is profit. Share of profit will be given only when there is profit. Interest on capital will be given only when there is profit. and what to say, remuneration will be given only if there is profit. So it is only if there is profit. So this P&L appropriation may appropriations are dependent based on profit. If there is no profit, no transfer to reserves. Whether there is profit or not, you will still write depreciation, you will still write interest, you will still write commission, you will still write salary, everything to other people. You will write it. So order, first you will prepare P&L, then you will prepare P&L appropriation. And P&L appropriation account is where all the transactions between the partner and the partnership will come. Payments made by partner to partnership firm or partnership firm to partner will come in P&L appropriation. Interest on capital paid by firm to partner. Interest on drawings paid by partner to firm. Salary, commission, interest, remuneration paid by firm to partner. And then share of profit paid by firm to partner. All that will come where? In our P&L appropriation account only. Understood? Very good. And then we would have to learn how to prepare P&L appropriation. P&L account may incomes is on the credit, expenses are on the debit. When income is more than expenses, we write net profit on the debit side in P&L account. There will write net profit carried down. And here we'll write net profit brought down. In trading account, we write GP carried down. In P&L, we'll write GP brought down. In P&L, we'll write net profit carried down. In P&L appropriation, we'll write net profit brought down. This profit will be shared to partners. First, we'll pay them their interest on capital, their salary or remuneration, and we'll collect interest on drawings from them. And after we collect that, after we pay remuneration and interest, whatever is left will be distributed to them as share of profit. If it is profit, we'll distribute it to them and then write it on the debit side, decrease in profit. If it is loss, it will come on the credit side, share of loss. Items here on the debit side are the items which are decreasing the profit, that is appropriation of profit. Items on the credit side are items which are increasing the profit. This is the logic with which we prepare our P&L appropriation. Understood? Can we go ahead? Yes, sir. Next up, we'll understand how to prepare partners' capital accounts. Capital accounts of partners can be prepared under two systems. Number one, fixed capital. Second one, fluctuating capital. Under fluctuating capital, we prepare only one account called capital account. Interest to, share of profit to, remuneration no, commission no, drawings so, interest on drawings so, I would say appropriation profit to, revaluation profit, everything will put it to one account only. So capital will be fluctuating. It will not be same. Whereas we want to keep the capital at a certain amount. Then what do? We go for fixed capital system. Under fixed capital system, we prepare two ledgers. One is capital account, other one is current account. In the capital account, capital will be fixed. By balance brought out, two balance carried out. All these drawings, interest, remuneration, share of profit, everything will come in one more separate ledger called current account. Current account can have debit balance or can have credit balance. The partnership capital account may whatever capital will be there, that will be as per partnership deed. Deed may they would have mentioned 3 lakh and 2 lakh as capital. Capital account will have 3 lakh and 2 lakh as capital. Any increase, decrease will be routed through our current account. You get this? See something here. Very good. So these are the two systems. And I'll quickly show you how the fluctuating capital account will be. Opening balance, closing balance. Additional capital, drawings. Interest on capital, remuneration, interest on advance, interest on drawings, and then share of loss, share of profit. Items increasing capital are on the credit, items decreasing capital on the credit. Balance carried on will be here. Too much? Am I going too fast? Okay. Let us now see how to prepare fluctuating capital accounts and fixed capital. Okay. We'll have opening balance, closing balance, additional capital and drawings. Only this much in fixed capital account. Sir, what about remuneration, interest on capital, interest on drawings, share of profit and everything? Everything will come in current. So we'll keep our capital account clean. This additional capital is additional capital as per partnership. This drawings is drawings as per partnership deed. Partnership deed only will say I should bring in additional 1 lakh capital. Then we'll write it. Partnership deed will say should withdraw 50,000 from capital. Then we'll write it here. Otherwise, there will be opening and closing balance same here. These two also won't come. All other things will usually come in current account here. Understood everything? Easy to you? Very good. Am I going too fast? Here, we have mentioned some numbers. I will tell you. Very good. 1, 2, 3, 4 we have written. 1 is remuneration, 2 is interest on capital, 3 is drawings, 4 is share of profits. We need to know certain points specifically with regard to remuneration. We need to know certain important points on interest on capital, interest on drawings, and share of profit. That's what we're trying to learn. Firstly, we'll try to learn with remuneration of partners. Remuneration that should be given to partners can be either a fixed amount or it can be percentage of profit. If they say fixed amount, 1 lakh rupees per partner or 1000 rupees per month, you will do so much of money into so many months and then give it as I would say remuneration to partners. The problem is not there. Problem becomes interesting when they give percentage of profit as remuneration to partners. If they say 10% of profit, 15% of profit, 20% of profit. So simple, you do 20% into profit. No. Question will be more clear. It will mention whether it is on before charging basis or after charging basis. They will say 20% before charging such commission, 20% after charging such commission. When they mention such a statement, if they say before charging, it is very simple. Profit into 20 divided by 100. Profit into 20 divided by 100. When they use the word before charging basis. If the question says after charging such commission, then our computation will be different. We will not be doing profit into 20 by 100. We should do profit into 20 by 100 plus 20. We should do profit into x divided by 100 plus x. We should do profit into x divided by 100 plus x. When do we do this x by 100 plus x? When they say remuneration as a percentage of profit on after charging basis. When they say remuneration as a percentage of profit after charging basis. When they say after charging, then you should do x by 100 plus x. Understood? Say something. Pakka. Same kind of adjustments will come in final accounts of sole proprietor also. They say remuneration on after charging basis. This is again not just some dumb formula. There is a logic, but we don't have brain for it. But on this, there is one video. 15-20 minutes ka one video is there on YouTube. If you search managerial remuneration, you will get a video. I have told you the reason why we do this. And I've taught you one more way to compute this other than by doing x by 100 plus 6. Okay, now. Let's go to the next part. Interest on capital. Remember, whenever interest on capital is given by the firm to the partner, interest on capital is given only on the fixed capital. It is not given on the current account balance. It is not given on the, sir, what if we do fluctuating capital? Then you would have to give it on the average moving balance. Software is there. Practically, we apply just yes, accounting package mein, interest on capital, yes, ಅಂತ ಮಾಡಿದ್ರೆ automatically average balances ಮೇಲೆ account current you do know, balance of product method, third method. Using that method, they will compute the interest and then it will show accounting package. So practically, that's how we do. Theoretically, doing is very time taking and difficult. That is the reason usually they do it under which basis? Fixed capital account basis. In the exam also, whenever they want you to compute interest on capital, the question will be on fixed capital. If it is on fluctuating capital, they'll tell give interest on capital on opening balance. They'll mention on the closing balance. You compute it in simple terms. Actually, you should give it on the daily averages, daily closing balance. Everyday closing balance is there, no? Into 6% into 1 by 365 into 6% into 1 by 365, like that we should do. Or if there is no change for some 3 days, into 3 by 365 into 6%. Correct method is account current mein product of balance method. But don't worry, you don't have that complication here. Next is interest on drawings. Interest on drawings can be one-time drawing, can be repeated drawing. If it is one-time drawing, we drew on 31st of July. Amount multiplied by time period from the date of drawing till the year end multiplied by rate. One-time drawing is there, no? From the date of drawing till the year end, for that period you compute interest, it will be very simple. Over. If the drawings are repetitive in nature, multiple amounts are withdrawn on multiple dates, then check. If the dates are very different, amounts are very different, then you can only do product method. Product method, you know, right? You will write the dates, you will write the amounts. From the date till the year end, you will write the period. Then you will do amount into period. Take the total product into 1 by 12 or 1 by 365. In the period, if you've taken month, 1 by 12. In the period, if you've taken days, you should do 1 by 365. Multiplied by rate of interest, you will get the interest under product method. This is very similar to average due date method. Mein you do that product first one, somewhat like that. And the second one is shortcut. You will apply the shortcut when the amount withdrawn is at successive intervals. That is every amount. The time period is successive, like beginning of every month, middle of every month, end of every month, beginning of every quarter. So the period between the successive drawings is same. And the same amount is withdrawn on multiple dates. 1000 at the beginning of every month. It is not like 1 month beginning 1000, 1 month beginning 3000, 1 more month beginning 2000. Amounts are not different. Amounts are same and the withdrawals are successive. Only in that case you can apply shortcut. What is shortcut? you'll take the average period and then compute the interest. Average period is, if you're withdrawing at the beginning of every month, maximum period is 12 for the first drawing. April to March, if you draw beginning of every month, first drawing is made at the beginning of first month. No? Outstanding period is 12 months. Last drawing is made at the beginning of March. No, outstanding period is 1 month. So 12 plus 1 divided by 13 by 2. 6.5 is the average period. We do it for 6.5. If you withdraw the money at the middle of every month, first drawing is done on 15th of April after 15 days in the year. So remaining period is 11.5. Last drawing is made on 15th of March. Outstanding period is last 15 days, 0.5 months. So we do 11.5 plus 0.5 divided by 2. Average period of 6 months. Similarly, you do for end of every month. That is 11 plus 0.5, 11 plus 0. And then beginning of every quarter, middle of every quarter, end of every quarter, and the rest of the things. If in case the date is not mentioned, and they mention the amount withdrawn 10,000. Date not mentioned. It can be on the first day, it can be on the last day. We don't know. So what do we do in that case? In that case, we do it for an average period of 6 months. We do it for an average period of, understood this? This is how we compute our interest on drawings. Next part is share of profit. How to share profit? Share of profit is the most easiest part. No? They would have given the profit sharing ratio. You share it in that ratio. But remember, before you apply profit sharing ratio and distribute the profits, you should have given all the remuneration to partners, whatever is payable. Interest on capital, interest on drawing should be received. If there is any advance received from partner, on that also interest has to be paid. After all of this, interest on capital, interest on drawing, and interest on advance and remuneration, then what is left? That only has to be distributed between the partners in PSR, not before that. And if PSR is not there, to equal ratio. Correct? After all of this only we distribute it. But here comes a very interesting scenario. What if profits are insufficient? And before that, we'll discuss one case of minimum guarantee. Minimum guarantee. Certain partners can be guaranteed certain amount. When you apply share of profit, no, that might not give them enough profit. Are you getting it? Because of this reason, certain partners can be guaranteed by certain amount. We can say, irrespective of share of profit, we'll give you minimum 1 year. If your profit is, share of profit is 90, then we'll give you additional 10,000 to make your profit 1 lakh. If the share of profit is 1 lakh 20, will we take 20,000 from that person? No, they'll get 1 lakh 20. They'll get 1 lakh. So this kind of a partner who has the privilege of receiving minimum money, irrespective of share of profit, is called as guaranteed partner. What is it called as? And if the guaranteed partner has to receive money more than share of profit, for example, we promised 1 lakh rupees to one partner. We promised 1 lakh rupees to, there are 3 partners. If you earn 3 lakh rupees profit, everyone will take 1 lakh, 1 lakh, 1 lakh. What if the profit is 2 lakh 70? Everyone takes 90, 90, 90, no? That guaranteed partner wants 1 lakh. He's received 90. We should give him 10,000 more. That 10,000 more should be contributed by other 2 partners. No? So other 2 partners who contribute and to make or say minimum guaranteed sum to that guaranteed partner beyond his share of profit is called as guaranteeing partner. Is it called as? So guaranteed partner is the person who's receiving minimum guarantee. Guaranteed partner is the partner who's receiving minimum guarantee. Guaranteeing partner is the partner who's giving minimum guarantee. Let me repeat. Guaranteed partner is the partner who has been guaranteed, who's receiving guaranteed money. Guaranteeing partner is the person who's giving guarantee. Are you getting it? So in a partnership form of 3 partners, one partner is guaranteed partner anta ankonಡ್ರೆ. Both the remaining partners can be guaranteeing partners, or only one of them can be guaranteeing partner. If both of them are guaranteeing partners, both can be giving guarantee in their profit sharing ratio or in a ratio other than their profit sharing ratio also. So what we need to remember is, let us say profit is 1 lakh 50. Profit is PSR equal 1:1:1. 3 partners are there, A, B, C. C is guaranteed partner. C is one mistake that people might do. I'm not telling usually students will do. People might do is 1 lakh 50 mein first 1 lakh they give to C. Balance 50,000, they will share between A and B, 25, 25. Wrong. You should not do that. You should not do that. 1 lakh 50 is the profit. Share 1 lakh 50 to A, B, and C as 50, 50, 50. How much should you give to A? 50. B, 50. C, 50. C, how much did he receive now? 50. What is the minimum guaranteed amount to C? 1 lakh. He has received 50,000 share of profit. Additional 50,000 should be given to C. That additional 50,000 should be contributed by A and B, guaranteeing part. What is the ratio in which A and B are guaranteed? If they say equal, then 50,000 will be deducted by in their capitals 25, 25. 2 minus 25 from A, minus 25 from B, 2 plus 50 to C. So C will become 1 lakh, A will become 25, B will become 20. Sir, same no. From 1 lakh 50 you give 1 lakh. Remaining you share 25, 25. This will become wrong in a case where profit sharing ratio is not equal and guaranteeing ratio is not equal. Certain cases may they are equal partners, but guaranteeing ratio will be different. Guarantee will be given between A and B in 2:1 ratio. In such questions, your answer will go wrong. So remember, whenever there is guarantee based questions, first you distribute the profits to all the partners. In what ratio? Profit sharing ratio. Then identify guaranteed partner. Who should receive guarantee? Check what is the guaranteed amount and then compare guaranteed amount with share of profit. If guaranteed amount is less, share of profit is more, happy. He's received more. That's it. End of the story. If the guaranteed amount is more, share of profit is less. Then what do? Difference amount should be given to that guaranteed partner. It will be deducted from guaranteeing partners in the guarantee ratio. Full confused, aita? Understood? How many of you found it very difficult to understand? If you would have heard of this before or done any problem, then you are able to relate and you can see. Those of you who are not able to understand, don't get frustrated. This might be because you have not done a problem of this kind before, or you have not read this concept before. Are you getting it? So if you are feeling frustrated, tell yourself, oh, it's okay. I have not read. That is the reason I'm feeling frustrated. So stay a little patient, go home, read that topic, and you'll be nice. Whatever point you are finding it very difficult to understand, note it down in your book. Guarantee, minimum guarantee part. I did not understand. Note all this down. All this down, when you note it down, you go home and then read that topic from ICA study material or any material wherever you have prepared so far from. And then if you want, you can watch this video again for that extent and you'll understand it better. Got it? At least you know what you don't know. No? If you get frustrated, see it that way. Positive attitude. Health apagtide ಅಂತ at least ಗೊತ್ತಾಗುತ್ತೆ. Can I go forward? Okay. So after guarantee part, then the last concept that we need to know from introduction of partnership is insufficient profits. Insufficient profits. Firm has profits. Firm doesn't have profits. It's not loss. Firm has profits, but it doesn't have enough profits to pay interest on capital. Let us say two partners, A and B. A's capital 2 lakh. B's capital 1 lakh. A capital is how much? B's capital is how much? 1 lakh. Interest on capital is to be given at 10%. How much will it be interest on capital on A's capital? 20. B's capital 10. So total how much is interest on capital? 30,000 is the interest on capital. Firm has profit of 10,000. Firm has profit of, now profit should not be distributed in profit sharing ratio first. From the profit, first you should give interest on capital. After that, you should give profit sharing ratio. Their profit sharing ratio is equal, 1:1. Are you getting this? Partner B will tell that 10,000 should be shared in the ratio 1:1 between both of us, 5,000, 5,000. Partner A will tell, no. I should first give me full interest on capital, only then we can share the money. You can't share before. Now who's right? What do we do in this kind of situation? That profit is there, no? It can be appropriated as share of profits only after paying interest on capital. But profit is insufficient to pay interest on capital. Why? Capital of A and B is 2 lakh and 1 lakh. Interest is 10%. Hey, am I making sense when I tell these numbers, or you're not able to keep those numbers? How much is A's capital? How much is B's capital? Interest on capital. 2 lakh plus 1 lakh, 3 lakh into 10%, 32. Interest on capital. Profit, is it sufficient to pay? Can we share this 10,000 in profit sharing ratio? you should pay interest on capital proportionately. ಸ್ವಲ್ಪ interest on capital ಕೊಟ್ಟು ಮುಗಿಸ್ಬೇಕು. What do we do? Interest on capital is based on capital. A's capital is more. A should get higher interest. B's capital is less. We should get less interest on capital. So this profit of 10,000 should be shared between partners, not in profit sharing ratio. It should be shared in capital ratio. It should be shared in, did you understand? 2:1. So that's what the law says. It says when the profits are insufficient to pay interest on capital. When the profits are insufficient to pay interest on capital, profits are to be distributed in capital ratio. It is actually not profit distribution. It is proportionate payment of interest. It is proportionate payment of. Are you guys getting this? Pakka. Very good. So this is what you should know when it comes to introduction of partnership. Introduction to partnership. If you know this much, every problem, every adjustment is covered when it comes to introduction. All that we need to do next is start with admission of a partner, then do retirement and then death. Before that, we need to quickly see the concept of goodwill. How to compute goodwill, how to value goodwill. So we'll discuss that part next. Before that, should we take a short break for those of them who not had breakfast? For a quick galloping breakfast time. 20 minutes too much ಅಷ್ಟೇ ಆಗುತ್ತೆ. It is 11:15. You guys be back. It is 10:56. And 11:15 I will start if you take a little more time. You get this? Yeah. So 20 minutes time. Whoever wants to have quick breakfast, lunch, brunch, whatever it is, come on guys, head out and then have it. When you come back, we'll start with goodwill and then admission. Okay? See you all at 11:15. Welcome back to CA Foundation Principles and Practice of Accounting Marathon Revision. We were discussing the chapter of partnership, which we've just done with the introduction part. And in this part, let's now start with admission of a partner. And why does the firm go for admission of a partner? To increase the managerial capabilities, to increase the capital resources, to increase the geographical location, to increase several other things into the organization, to bring in more power or more skills into the organization or more variety or more product lines, all of this. Whenever the partnership firm goes for admission, what we need to remember is part of the partnership firm is being sold to the partner who's newly coming into the firm. Close the door. Who came at the last? Okay, ask him. Go close the door. Yeah, a part of the partnership firm which was held by the previous partners is now sold to the partner is newly coming in. And the partner is newly coming in is buying this part in the business. And whenever he buys this part, he need to pay money. So he brings in capital to buy the business from the existing partners. When he buys the business from the existing partners, he buys a share of assets, he buys a share in the liabilities, he buys a share in the future profits of the organization. When I say buys a share in the asset, he will buy assets including goodwill. And goodwill of the partnership firm is sold by the existing partners to the new incoming partner. This is the logic that we should know. And whenever the firm is selling part of its business to the new partner, we should identify the new value of the business. That is the reason we do revaluation of the business. We do revaluation of the assets to find the value of the assets that should be partly sold to the new partner. Hey, this is not tolerated. How can you be using phone in the class? Keep it in. No. You guys would have to learn some decorum. This class is given to you free of cost. That doesn't mean you are free to do what you want. Free of cost means that you can come here without paying. That doesn't mean you come here to do time pass. There are places elsewhere to do time pass. And next break, I want people back on time. And okay, people who are new will come to the class a little late. I'm upset because people who already know about the class are still late. Akhil, where is she? She is still not there. She'll come after 5 minutes. And then all of you people, how many times have you got yelled at because you are late or because you are not displayed? You people ಅಲ್ಲಿ ನೀವೆಲ್ಲ ಮಾತಾಡ್ತಾ ಇದ್ದೀರಾ ಮಾತಾಡ್ಬಿಟ್ಟು ಕೇಳಿದಾದ್ಮೇಲೆ you guys should tell others that this is not how the classroom decorum should be. These are certain things what sir expects. You should imbibe now to say culture into them. You are no, they are only more civilized than you people. And she is literally scrolling. And yesterday I saw two people wearing headset and then sitting like this, earphone up. And after 5 minutes he removed. I think the song was not interesting. If you want, see, RV4C, regular class, I ask, why the hell were you absent yesterday? Marathon revision, am I asking anyone, why were you absent? Why were you present for yesterday? Why were you absent today? Why did you bunk the second half? I am not asking. No one here is forced. You don't want to attend. If you think you can do better justice to the subject outside this class, you please do it. I am happy if you are studying. Got it? So when I am sitting here sacrificing other things and then I'm teaching, if I see you people not interested, that kills me. I can't. It is a little tall. It's not easy. Straight away. You guys are listening. I'm throughout talking. It is difficult. 8 hours, 10 hours straight. It is a toll. So when I am ready to do it, least you can do is listen. And if you're actually feeling distracted, disinterested, please go home. No? Go home and use that time. Don't sit here and not listen and then kill the time. Humble request. Your time, my time. Both are important. Yeah. Let me do what I want to do. You do what you want to do, not in my place. In your place. One look. ಬಾಯಲ್ಲಿ ಬುದ್ಧಿ ಇಲ್ವಾ ಎಷ್ಟೊತ್ತಿಗೆ ಬರ್ಬೇಕು ಬ್ರೇಕ್ ಎಷ್ಟೊತ್ತಿಗೆ ಮುಗಿದಿದ್ದು 15 ಮಿನಿಟ್ಸ್ ಬ್ರೇಕ್ ಕೊಟ್ರೆ ಊಟ ಮಾಡ್ಕೊಂಡ್ ಬರ್ತಾರ ತಿಂಡಿ ಬ್ರೇಕ್ ಅಲ್ಲಿ ತಿಂಡಿ ಮಾಡ್ಬೇಕು ನೀವು ಊಟ ಮಾಡ್ಕೊಂಡ್ ಬರ್ತೀರಾ ಫ್ಯಾನ್ಸಿ ಡಿನ್ನರ್ ಸಂಡೇ ಮಾರ್ನಿಂಗ್ ಫ್ಯಾಮಿಲಿ ಅವರೆಲ್ಲ ಎದ್ಬಿಟ್ಟು ಬ್ರೇಕ್ಫಾಸ್ಟಿಗೆ ಹೋಗ್ತಾರೆ ಗೊತ್ತಾ ಇಡ್ಲಿ ತಿನ್ನಕ್ಕೆ ಆ ತರ ಹೋಗ್ತೀರಾ ನೀವು ಬ್ರೇಕ್ಫಾಸ್ಟಿಗೆ now listen. So we're talking about the fact that whenever the partnership firm admission will happen, we need to do revaluation of all the assets and liabilities. We need to sell a part of the asset to the new partner. He keeps it in the business only. A new partner who comes, no, he will buy part of the asset. Maybe assume that there are two partners, A and B, sharing profits and losses equally. When the third partner comes in for one third share, he will buy one third part of the asset. If there are three buildings, he'll buy one building, literally from the firm. But he'll keep it in the firm only. That is his contribution to the firm, because of which he'll get share of profit from this. Are you getting this? So we are now going to do revaluation of assets and liabilities. Whenever the asset value has to be increased, asset account has to be debited, revaluation account has to be credited, and vice versa for asset value being decreased. And whatever that revaluation profit will come is to be distributed between partners. For this reason, we compute ratios. Ratios in the case of admission are three: old profit sharing ratio, new profit sharing ratio. The carrier between the old and new ratio is sacrifice ratio. I told you, no, the old partners will sacrifice a part of their shares to the new partner. So the ratio in which they sacrifice is called as sacrifice ratio. Are you getting this? So there are two kinds of problems that will usually come. One kind of problem is where they will mention that the incoming partner will get some part from a partner. The catchword is what? From. And there is another set of example where they'll tell the new partner will get some part of that partner. So whenever they use the word from, for example, in this question, Beam and Chutki shares profits in 2:3. Raju comes in, he gets 1/6 from Beam. He gets 1/3 from Chutki. Then what should we do? Beam's share is 2/5. From 2/5, we straight away deduct 1 by, very good. And Chutki's share is 3/5. From 3/5, we straight away deduct 1. See here, 2/5, 3/5 minus 1/3, and R's share, sorry, 2/5 minus 1/6, 3/5 minus 1/3. We straight away deduct the same. Second, guys. ಸ್ವಲ್ಪ ವಿಡಿಯೋ ಕಟ್ ಆಗ್ತಾ ಇದೆ. Don't talk, don't talk. Now it's better. Listen to me carefully. So what I'm trying to tell you is, P's share was 2/5. In that, he'll give 1/6 to Raju. So he'll straight away deduct 1/6. And Chutki's share was 3/5. In that, she'll give 1/3 to Raju. So he'll straight away deduct 1/3. So whenever they use the word from, you straight away deduct that portion, whatever is to be deducted from that person. Whenever they use the word of, they say in the next example, if you observe, Beam and Chutki are in partnership sharing profits and losses in the ratio 2:3. Raju is admitted, he gets 1/2 of Beam's share and 2/3 of Chutki's share. So what we should do is, Beam's share is 2/5. In 2 by 5, 1 by 2 will go to Raj. So 2 by 5 into 1 by 2. 2 will get cancelled, 1 by 5 will go to Raj. And Chutki has 3 by 5. In 3 by 5, she gives 2 by 3. So 3 by 5 into 2 by 3 we should do. And whatever the multiplied product will come, that is deducted from that person. So when they say of, we should first multiply and then deduct it from that respective person's share. If they use the word from, straight away deduct it. We discuss it way more in detail and then solve the problem in detail. But we need to do it quick here now. So what is the thumb rule that you should remember for ratios calculation? Word is from, straight away. Yeah. Word is of. First multiply, then deduct. Write this if you want. Ratio. Partnership. 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 Admission ratios. From, deduct. From, straight away deduct. Of, multiply and then deduct. If the word is from, straight away deduct. If the word is of, first multiply and then we will deduct. Got this? Yeah. So after this, we would have to learn how to prepare revaluation account. Revaluation account is done for all the assets other than goodwill. Why? Goodwill is treated separately. Revaluation may assets will have some value. We will check if that value is correct. If that value is not correct, either we'll increase the value of the asset or decrease the value of the asset. Same we do with liabilities also. If the asset value is increasing, asset has to be debited, credit will be to revaluation. If the asset has to be decreased, asset will be credited, debit will be to revaluation. For liability increase, liability will be credited, debit will be to revaluation. For liability decrease, liability will be debited and credit will be to revaluation. I told no. Liability increase, liability credit, debit revaluation. Liability decrease, liability debit, credit revaluation. I told same thing twice. Liability increase, liability credit, credit revaluation. Liability, yeah. Liability increase, liability credit, debit revaluation. Liability decrease, liability debit, credit. Okay. Liability has to be increased. Liability will be credited. Revaluation will be debited. Liability has to be decreased. Liability will be debited. Revaluation will be credited. However, same thing I told 2 times. First correct okay, done. Okay, so that's what we do. And after we do all of this in revaluation account, we identify our profit or loss. If you have to straight away do ledger, it becomes much more simple. Profits are on the credit, losses are on the debit. Profits on the credit, loss on the debit. On the credit side, what we write is increase in asset or decrease in liability. What is profit? Increase in asset or decrease in? Very good. On the debit side, we write decrease in asset or increase in liability. And if the income is more, expense is less, it is profit. If the expense is more, income is less, it is loss. Profit or loss will be shared to partner. Profit is here, no. In revaluation account, when you write debit side to partners capital, in partners capital account, credit side you will write by revaluation. Credit side, if you write capital will increase. Capital should increase because of profit. And in your revaluation account, if you write debit side, credit side here by partners capital. In partners capital account, debit side there will be 2 revaluation. That is decrease in capital because of loss. Understood? Yes, sir. Okay. But what you need to remember is whenever you do this revaluation, your value of the assets are changing. Assets are no more at historical cost. Assets are now available in your balance sheet at revalued figures. But sometimes the organization would strongly want to follow historical cost concept. They don't want to change the value of the asset. Then what to do? Then no revaluation profit. That is also not correct. Why? Revaluation profit has to be adjusted, but assets value should not change. That's when we prepare memorandum revaluation account. What do we do? Memorandum revaluation account. What is the objective of memorandum revaluation account? Objective is to show the assets at original values in balance sheet, to not change the value of the assets and liabilities to revalue figures. Also to adjust revaluation profit or loss. If you want to adjust revaluation profit or loss without changing the original cost of assets, then we do memorandum revaluation. Memorandum revaluation is extension of revaluation. We've done revaluation account here. Same thing will extend further. Here we've written no decrease in asset, increase in liability. That we will write here credit side. Here credit side will write again. So that it will get nullified. Here we have written no increase in asset and decrease in liability. This again I'll write here on the debit side. That will get nullified. And profit, whatever is shared here between old partners in old profit sharing ratio, will be reversed by sharing it to all the continuing partners in new profit sharing ratio. So what we do is we do revaluation account, change the value of the assets, share the profits to old partners. Then we don't want to show assets at revalued figures. We will change the assets value to original figures again. Then we'll get loss. That loss will be borne by the continuing partners in new profit sharing ratio. Logic ಏನಾಗುತ್ತೆ ಗೊತ್ತಾ? Here there is old profit sharing ratio profit. There it will be new profit sharing ratio loss. Difference is nothing but gain ratio or sacrifice ratio adjustment. That is sacrifice that is made by the old partners. No. To that extent, the new partner will give them money. Or if there is gain, person who is gaining will give so much money to the person who sacrificed. That is nothing but difference between sacrifice and difference between old profit sharing ratio and new profit sharing ratio. That we open all the asset we debit and then credit we nullify this. I'll show it to you. Have a look. We do this memorandum revaluation account to show the assets at original values. Here I have written two asset decrease in value of the asset. Here asset by asset increase in the value of the asset. This one will come here. Here there is two increase in the value of the asset 2. Here I'll write 2 asset, decrease in the value of the asset. Whatever is increased here, I'll decrease here. And this 3 will get nullified here. This 4, whatever we've written here, will get nullified here. Here, whatever profit I've shared to old partners in old profit sharing ratio will be written off by adjusting to continuing partners in new profit sharing ratio. You get this? Once there was a question in the examination on memorandum revaluation. You get it? If in case, how many of you have done memorandum revaluation account in the past? I don't know. Don't have to raise your hand. I am not testing your skill. These 2 days, I won't conduct quiz. I will not ask you question to test how you prepared. Because 2 days is too short a time just to revise. I don't want to spend it on testing your knowledge. Testing, you do it on your own. ಮನೆಗೆ ಹೋಗ್ಬಿಟ್ಟು ಟೆಸ್ಟ್ ಮಾಡ್ಕೊಳ್ಳಿ how much you know. And I don't want to embarrass in front of all of people like, oh, you stand here, you have not prepared well enough. No. It is good in the classroom level because there is so much time for you to go back home, think, and then like read. Now it is too short a time. I don't want you to compare yourself with anybody who's learning along with you. You do all that testing at home and then understand where you stand and then make yourself better at it. You get this? That is good in the classroom level. That is not good in the revision stage. So I will not question. If you already done concept of memorandum revaluation account in the past, good. If you have not done, please do go home and then try to solve one question based on this. If you're not able to crack this, you ask help, I will. Beyond this help, if you can't do, don't worry. Some people, I'm telling this in this chapter because I've seen people will be like complete partnership skipped. Don't do this. Partnership comes in every attempt. If in case you can't do memorandum revaluation, but you can do revaluation, and then you do the rest of the problem correctly, in a 15-mark problem, you will get 10 marks. Your revaluation profit will be wrong. Partners capital balance carried on will be wrong. Balance sheet mein capital will be wrong. Rest items will be correct. All you need to remember is if you have to lose only 2 marks or 3 marks, revaluation account you would have done no. Change the say write in the balance sheet same values only. Don't do revalued figures. Yeah, and profit whatever you would have shared, change it to old partners, all the continuing partners in new profit sharing. Put it in partners capital account, we'll get 15 on 15. And in spite of this, I don't know how many of you have skipped the chapter of partnership or decided to skip the chapter of partnership. Please don't skip. Not just partnership, NPO, don't skip. Company accounts, don't skip. Do all the chapters. Because you don't know which chapter will be easy question in the exam. Now, NPO might be difficult to you. Partnership might be difficult to you. Rectification might be difficult to you. Entire chapter is not difficult. Any chapter. Now, for different people, different chapter. Arpita, which chapter is difficult to you? NPO is difficult to you. Nirma, which chapter is difficult to you? Partnership. Now, entire partnership is not difficult. One problem with very complex goodwill adjustment, hidden goodwill with capital adjustment, one partner is being admitted, one partner is being retired. That question will be difficult to you. But there are a lot of questions in the chapter which you will be able to do. Exam mein, if that admission come retirement with hidden goodwill, capital adjustment question will not come. A simple admission question will come, which you could have been doing, no? So what you do is skip certain topics in the chapter. Don't skip entire chapter. That way your possibility of doing good in the exam is more. What if that one topic what you don't like in that chapter won't come? You don't like JLP. JLP adjustment barlela exam. Simple partnership question bantu. Could have done no. You read final accounts. Final accounts mein lengthy question had come. No, you have to do final accounts. No option. Why? You skip partnership. So keep the option open till exam. Exam hall till the time you see question paper. Keep your options open. You got it? One miraculous student I saw is there in the present batch CA intern. You would know people who are in Sheshapuram might have known him. I'll try to recall his name. I'm not able to recall his name. So what this guy did is he skipped partnership, he skipped NPO, he skipped one more chapter, rectification of errors. He skipped 3-4 chapters, still passed. He got 43 or something in accounts. 3-4 chapters he skipped. Lucky, I'll tell you, he's very lucky. It will not happen with everyone. You skip 3 chapters, 4 chapters, and still pass. I've seen people failing by 2 marks, 3 marks. Accounts is the paper where you should not aim to score 40. Accounts only 40 bandre upyoga illi. Accounts mein should score 70, 80. You should score so much. You should pull up the rest of your marks average by accounts. You should not pass because in economics PCK you got more marks. No offense to the paper. That's not our core paper, boss. You are doing chartered accountancy. Your core should be accounts. By mistake, you did well in economics PCK paper, or you're from PCMB or PCMC, you did well in maths paper, law, and then accounts, you just did average, and then you pulled up. There is no point. You wouldn't enjoy intermediate. You skip partnership in foundation, intermediate you have advanced partnership. Allen ಮಾಡ್ತೀರಾ ಅವಾಗ ಪಡ್ಕೊಬೇಕಷ್ಟೇ. Hey, see, when you not done basic partnership, how will you do advanced partnership? There it will be dissolution straight away. You are expected an amalgamation of partnership forms will come. When you not done admission retirement, how will you do admission? Amalgamation then you'd have to skip there also, because then it is too late for you to come back and read admission. And when you not read admission, it is too difficult for you to understand amalgamation. So you might skip, if you find it very difficult, skip some small adjustment, but don't skip the chapter. You still have 42 days. You can do all the chapters. Very important. Okay, this one tip. Yeah, I took some time, but this is a very important message that you should all know. When memorandum reval, let's come back. When memorandum revaluation account is prepared, assets in the balance sheet will be at original values. What values? Very good. Then goodwill. This is one misconception that we have. We always feel like on admission, goodwill will increase. New partner will bring goodwill. New partner will not bring goodwill. New partner will purchase the goodwill of the firm which is owned by 2 people of the firm. Goodwill of the firm is 1 lakh. A and B was holding it 50-50. Now C will come. C will hold 33,333. A and B were holding 50-50. Their goodwill will become 50-50 to 33,333, 33,333. A's goodwill reduced from 50,000 to 33,333. That is by 16,667. P's goodwill reduced by 16,667. So much of money together, 33,333. He brings cash, gives it to A 16,667, gives it to B 16,667. So total goodwill of the firm was 1 lakh. Total goodwill of the firm will remain 1 lakh. It was previously held by A and B 50-50. Now it is held by A, B, and C 33,333, 33,333, 33,334, because total should become 1 lakh. So remember, goodwill will not increase, will not decrease on admission. Goodwill will remain same. It is previously held by 2 people. Now it will be held by that third person who comes should buy it from other 2 people. Should buy it from. Are you getting this? So that is the reason he brings in his share of goodwill. If he brings his share of goodwill in cash, we'll write cash account debit to goodwill. That goodwill, whatever he brings, will be shared by other partners, sacrificing partners in their sacrifice ratio. Why? It is their share that is being bought by this new partner. No? So that money belongs to him. If he brings it in kind, whatever asset he brings in, you debit that, you credit goodwill, share it to old partners. If it doesn't bring in cash, you know what's happening? If it doesn't bring in cash, it doesn't mean that he's not bringing. The capital that he brings, no, adrale goodwill ಸೇರಿಸ್ಬಿಟ್ಟಿದೆ ಅಂತ ಅರ್ಥ. Goodwill is included in that. So from the capital we take and then old partners will share it. Are you getting it? Let me repeat. If the incoming partner specifically brings in some cash towards goodwill, that cash should belong to the sacrificing partners in their sacrifice ratio. Cash is coming into the firm. Cash account debit. We'll credit goodwill because it is being sold to the new partner, but it is being sold by the existing partner. So we'll again debit goodwill and then credit the sacrificing partners. Ultimately, cash will increase, old partners' capital will increase, not the new partner's capital. If in case he brings in some other asset, cash won't increase, that some other asset will increase and old partner's capital will increase. If it doesn't bring cash, if it doesn't mention that goodwill separately, then the new partner's capital will decrease Old partner's capital will increase to that extent. From their capital, these both people will take in sacrifice ratio. Got it? Now, these are the set of entries that you should know. But you don't have to worry about journal entries when it comes to goodwill. I don't know how many of you read journal entries, cash to goodwill, goodwill to old partner, sacrifice ratio, and if it is brought in kind. You remember you mug up journal entries for goodwill bought in cash, bought in kind, adjusted through capital account. You don't have to do journal entries. Entire goodwill adjustment for all the problems, may it be on admission, may it be on retirement, may it be on death, whatever case it is, raised and written off, brought in cash, brought in kind, raised, partly raised and written off, only to the extent of new partners capital account raised, whatever the adjustment is, you have only one simple solution. You need to draw one table. You need to draw one table. Once you draw that table, everything will get solved in that. I'll show you that table. No matter what the case, people who attended the class, you agree, no? Whatever the case is, plenty of questions. We've done about 75 questions are there in partnership. All the questions may, wherever goodwill adjustment is there, we draw the table. Some questions I taught you without table also, but the answer was same. I'll teach you the table. You draw the table for any question. Works like wonder. You get it? Yes. I didn't invent it. Same journal entries, we simplified it into a table. Debit, credit ಗೆ plus minus ತರ ಹಾಕಿ ಒಂದು table ಮಾಡಿದ್ವಿ ಅಷ್ಟೇ. It look much simpler. Okay. Then before we value the good, before we identify the goodwill and write entries, we need to know how to value the goodwill. Identify the value of goodwill. Number ಹೇಗೆ associate ಮಾಡೋದು ಅಂತ. There is a power cut, I guess, so the AC is not working. None of the ACs are working. It is okay. Hot seat. Sit. This AC is also not working. This place is much warmer than that. Can't help. ಏನು ಮಾಡೋಕ್ಕಾಗಲ್ಲ, ಅಡ್ಜಸ್ಟ್ ಮಾಡ್ಕೊಂಡು ಹೊರಗೆ ಹೋಗ್ತೀರಾ, ಲಾಂಗ್ ವಾಕ್ ಹೋಗಿ ಬರ್ತೀರಾ ಒಂದು. Okay. So goodwill valuation has to be done. One set of questions are there where the goodwill will be hidden, meaning they won't use the word goodwill, but the question may there is goodwill adjustment. So this is one kind of tricky part. I'll teach this to with the help of a small adjustment. How do we understand that there is goodwill hidden in the question? We need to see the profit sharing ratios and the capitals. It will not be in proportions. For example, have a look at this question. A, B, and C are partners. C is newly being joined. A and B are partners. What is their profit sharing ratio? 1:1. C comes in for 1/3 share. So equal partners, no? What will be there after admission profit sharing ratio? 1:1:1. Okay. A and B's capital was 30,000 each. B comes in for capital and B comes in as partner for 1/3 share and brings 50,000 towards capital. 50,000 towards? Okay. C should have brought 30,000, no? A and B are partners equal. C should have got how much? 30. But C is bringing 50. So there is hidden goodwill there. There is hidden goodwill there. Here people do mistake. You know what do they do? 30, 30, A and B has bought. C should have bought 30. C has bought 50. 50 minus 30, 20,000 goodwill minus 2 marks in exam. You should not do that. You should think like this. C's capital is base. C's capital is 50,000. C's capital is correct. Capital of the firm, his profit sharing ratio is 1/3. For 1/3, if his capital is 50,000, how much should be entire firm's capital? 1,50,000. ನೀವೇನ್ ಮಾಡ್ತೀರಾ ಗೊತ್ತಾ? You are trying to compute C's share to A's share. Should find C's share to firm's share. For 1/3, if he has 50, entire capital of the firm should be 1,50,000. How much is capital of the firm? 30,000 partner A, 30,000 partner B, 50,000 partner C. How much is it? 50 plus 30 plus 30. 110. 150 ಇರಬೇಕು, 110 ಇದೆ. Difference of 40 is entire firm's goodwill. This is not why we have taken firm's capital, actual capital plus the proportionate capital and found the difference. What we arrived at is entire firm's goodwill, not individual partners. Did you get this? I'll tell you once again how you people do wrong. Usually we pounce on the fact like A and B's capital is 30, 30, C's capital is 50, 50 minus 30, 20 goodwill. Don't do that. 50,000 is for 1/3 capital. Total capital of the firm, 3/3 will be 1,50,000. 1,50,000 ಇರ್ಬೇಕಲ್ವಾ? If 1,50,000 is the capital of the firm, there is no goodwill. But what is the capital of the firm? Partner A 30, partner B 30, partner C 50. 30 plus 30, 60, 60 plus 50, 1,10,000. 1,10,000 is the capital. It should be 1,50,000 on proportionate capital basis. 1,50,000 and 1,10,000 difference, 40,000 is goodwill. Let's show the same thing to you. Please have a look. I won't ask how many of you have done problem like this before. No, it doesn't matter whether you've done it before or not. If you've done before, but you don't remember, is there a point? If you have not done before, so you don't know, but now you understood. That is better than being done before but not knowing it. Allah. Correct. How many of you? Okay, fine. This is interesting. People who are part of the regular course, where I had thought this. This is from your class notes only. How many of you remember this? Oh, good, nice, happy. Rest of you? How many of you still felt like, sir, 50 minus 30, 20, 20, 20? Didn't feel? No? Very good. ಕಿಟ್ ಕ್ಯಾಟ್ ತಿಂದ್ರೆ ಹೊರಗಡೆ ಕಳಿಸ್ತೀನಿ ಈಗ ಬ್ರೇಕ್ ಕೊಟ್ಬಿಟ್ಟು ಗುರು learn from all these people. See, that entire row, look at them, so obediently they're sitting. The row in front of them, this row, not this row. See. Done. Shall we go ahead? Hmm? Okay. Goodwill can be computed using multiple methods. Computation of goodwill is accounting policy. What is it? Accounting. Very good. So the methods are average profit, super profit, capitalization, and annuity method. Under average, sir, under average profit method, what we do is we add all the profits and divide by number of years. We get average profit. We multiply it by number of years purchased to arrive at goodwill. What do? We take certain period, 3 years, 4 years, 5 years, whatever they give. For that period, we take the profits, we add them, divide by number of years. What do we get? Average profit. We multiply it by number of years to arrive at goodwill. Why do we multiply by number of years? Purchase. The logic is this way. If you ask me what is goodwill, I would say goodwill is the probability that the existing customer will stick to same business. Goodwill is the probability that the existing customer will stick to. Now, this is the month of May 2023. All of you people will be writing CA intermediate examination in May 2024. By this time next year, your exam would be happening, Group 2 examination. So, in the first week or in the month of April, if there is free marathon revision for CA intermediate Group 1 and Group, or what to say, one paper of accounts, whatever will be there, would you attend? If you would attend, that is goodwill. Because people are repeating, they're coming. Repeating on the exam, next time class ಗೆ ಬರೋದು. Okay, that is goodwill. If people don't come, that means that the class was not good or class was not worth their time. Are you getting it? So if they come again, if the customer comes again, the goods will be sold again. Do you agree with me? If the goods are sold again, that is profit. That is the reason we multiply profit with number of years purchase. That is the reason we multiply profit with number of years. Why do we take average? Why don't we take only last year's profit and then multiply? Because last year's profit might not be replica of the usual average. Average means we'll take last 3-4 performances and then divide it by number of years. Last match score ಮಾತ್ರ ತಗೊಂಡ್ರೆ last match ಅಲ್ಲಿ century ಮಾಡ್ರೆ average is always 100. No, last match 100. The match before that 0. Average is 50. You do like that. No, average is like set of performances divided by number of performances. So that's what we do here also. So we'll take average profit multiplied by number of years purchased. When we take this adjusted average, this average profit, it should be adjusted average profit. The reason is in foundation, we use the word adjusted average profit. The genuine actual word which is used in the practical world is not adjusted average profit. We call it FMP, future maintainable profit. What is the word that we use? Future maintainable profit. It will come in CA intermediate and CA final. We'll use the word FMP. FMP is nothing but adjusted average profit. FMP means in the future what profit is repeated. Meaning out of the profit that we earned in P&L account, some profit will be non-recurring profit and non-operating profit. Some insurance claim you received 2000 rupees profit. Insurance claim will not happen every year. Some fire happened because of that 5000 rupees loss. Some cash defalcated by cashier because of that 1000 rupees loss. These are not repetitive profits or these are not repetitive losses. This will happen once in lifetime. You should eliminate them. You should write such profits which are recurring. That is our goodwill. That is our goodwill. Now my goodwill is because of profit that I make by the sale of goods and service. One asset was their old bike. I sold that old bike and then I made profit. That is not part of my P&L account profit for goodwill purpose. Why? Goods are sold based on goodwill. Now, you might like dosa at one specific shop because of the goodwill. If they sell stove, will you buy that stove at a premium rate? Dosa ಚೆನ್ನಾಗಿರುತ್ತೆ, stove ಚೆನ್ನಾಗಿರಲ್ಲ. Stove is stove anywhere, no? Are you getting this? Goodwill is based on the product and inventory. It is not based on the capital items. So profit made on sale of asset, loss made because of fire, all of these items should be eliminated. After that, what we get is adjusted profits. Such adjusted profits is what we should consider for goodwill competition. You might have done no problems by elimination of certain items. We should add back some expenses, deduct some incomes, interest on bank overdraft, interest on bank balance, and all we should deduct. Why? That is not goodwill. Now, whether I open bank account, you open bank account, both of us will get same interest. I have goodwill in the market. ನನಗೆ ಜಾಸ್ತಿ interest ಕೊಡ್ತಾರಾ? ಇಲ್ಲ. Bank gives same interest for everyone. If you have goodwill, you make more sales. Correct or not? So now UD dosa is there, and one small SLV and small new dosa shop is there. UD dosa might be very famous, but bank interest everyone same ಕೊಡ್ತಾರೆ. But sales will be more for these people. So your goodwill will work with customer. Goodwill will not work with bank. So there you need to eliminate that interest income because that is not because of your goodwill. Only profit which is arising because of customer sales, sales to customer, you will compute goodwill based on. Understood? When the profits are changing up, down, we apply simple average. When the profits are following one specific trend, every year it is increasing, we apply weighted average. However, we will not use our common sense in the exam as to whether it is following trend or it is decreasing. If they mention in the question to follow weighted average, we'll apply weighted average. If they don't mention in the question, simple average. Got it? Simple. Next comes capitalization method. Hey, you understood no average profit method. What do we do? Adjusted average profit multiplied by number of years purchase. Adjusted is what? We should eliminate the non-recurring and non-repetitive items from the profit. Okay. Capitalization method, what we do is in average profit method, we're multiplying it with profit. No, here we don't do it based on profit. We do it based on the comparison of the usual risk-free rate of return or normal rate of return with the return that we get. Let us say we've invested 1 lakh rupees in the business. How much did we invest? 1 lakh. We want some 15,000 rupees as profit. How much is the profit? Usually in the market, anyone who starts the business will earn 10% return. How much return will they expect? So on 1 lakh, people get 10% return. That is 10,000. I have got 15,000 rupees return. Usually, how much do people get? 10,000. 10% that is. I got 15,000. So I earned 5,000 extra. That 5,000 is my super profit. 5,000 will be multiplied by number of years purchase. Let me repeat. Capital 1 lakh. Capital normal rate of return 10%. Actual profit 15,000. So capital 1 lakh mein normal rate of return 10% means anybody who starts the business will earn 10% return. Or if you keep the money in the bank, you get 10%. So that is the risk-free rate of return. That is not because of you. 10% even monkey will make profit. What have you done? Extra 5,000. That 5,000 is your goodwill. So 1 lakh into 10%. 10,000. 10,000 is normal profit. 10,000 is actual profit is how much? 15. Difference of 5,000 is super profit. That you multiply by number of years purchased to arrive at goodwill. So that is the difference between average profit and super profit. Average profit may we believe entire profit is because of goodwill. Nobody else can do this business other than me. Nane topu. But super profit may no. Everybody can do profit, but I can do more profit than them. So whatever more profit I do over and above others is my goodwill. Got it? Under capitalization method, we don't compare profits, we compare capitals. We compare, for example, my capital is 1 lakh. My capital is, my profit is 15,000. My profit is, normal rate of return is 10%. Normal rate of return is, under super profit, what we did is, capital 1 lakh multiplied by 10%, normal profit 10,000. Actual profit 15, minus madre 5,000 super profit. That we multiplied by number of years purchase. How do we find number of years purchase? Period for which people will come back to the same person for goods. It is estimation. No. Now there are how many people in the class? About 250 people are there. Let's say 250. What is the probability? I'll say now. I would say number of years purchase is 2 years. All of people will come back to me for marathon revision in inter and then final also. But what is the probability? It is an estimate. No, there is no basis for this. There is no basis for this. Some people might leave the city. Some people might take a better course. Correct or not? Some people might do self-study and only finish it. Some people might go elsewhere. So there is a lot of things. When I say goodwill is based on number of years purchase, it is an estimate. When that estimate goes wrong, answer goes wrong. So we will not do number of years purchase. Capitalization method, what I do is, again, come back to our numbers. Capital is how much? Normal rate of return. Actual profit, 15,000. So 15,000 profit. 10% is other fee. So on 1 lakh, I made 15,000 profit. To make 15,000 profit at 10%, how much should have been my capital? 1 lakh 50. 1 lakh is the capital, profit is 15,000. Usually people make 10% return. To make 10% return of 15,000, I should have invested capital of 1 lakh 50. My capital is 1 lakh. 50,000 is goodwill. What did we do? How did we compute goodwill? 1 lakh 50 minus 1 lakh. 1 lakh 50 is normal capital. 1 lakh is actual capital. See this? You use formulas. I'm telling you it is logic. You usually use formulas no, to arrive at the answer. Remember the logic. How do we find goodwill? Normal capital minus actual capital. Normal means usually what will people invest to arrive at 15,000. 15,000 profit beku. Andre 10% if it is the rate of return, you would have to invest 1 lakh 50. But you have invested 1 lakh. Normal capital 1 lakh 50. Normally every human being invests 1 lakh 50. You are super special. You invested only 1 lakh. 1 lakh 50 minus 1 lakh is 50,000. 50,000 is your goodwill. Sir, but how did we arrive at normal capital 1 lakh 50? Simple. Profit is how much? 15,000. Rate of return 10%. 1 lakh 50. You use formulas usually. Okay, goodwill is normal capital minus actual capital. Normal capital is adjusted average profit divided by normal rate of return. Now did you understand? Huh. So try to do the logic and you will find it much better. You will find it much better. Okay now. Lastly comes annuity method. Annuity method can be applied either on super profit or average profit. All you do is they will give annuity factor in the question. You will find super profit multiply goodwill barutte. Or you can find it as average profit multiplied by annuity factor also. Annuity factor is used or computed using the formula A by 1 plus R whole to the power n. R is rate of interest, A is annuity factor which is 1, n is number of years. You don't have to be worried about this. The reason is annuity factor 3.28, 2.85, they will give the factor in the question. They would not ask you to compute the annuity. They will not expect you to compute the annuity. They will only give it in the question. Okay, that. Doubt idea? Okay. Okay. Based on this, you would have to do questions. There are plenty of questions for practice. We did so many questions only on goodwill computation using that. What to say? I told you know those adjustments. Closing stock impact will come here also. Closing stock overvalued. Profit would have increased. We need to readjust the profit and then do the computation of our profit and then do goodwill. So that on closing stock part, what we learned in inventory also can come here. Plenty of problems we've done, and I hope you guys have understood admission part. Then you would have to do questions on revaluation, partners capital and balance sheet. One tip for questions on revaluation, partners capital and balance sheet. Please don't finish revaluation and then start with partners capital. Finish partners capital and then balance sheet. Please don't do that. Keep all the three open simultaneously. Do it. Second PUC mein adjustments were limited. You knew all the possible adjustments. In fact, question number or question name if you tell, you should tell balance sheet total. So much of expertise and the knowledge cannot be had in CA foundation level. Adjustment for revaluation can be there in first paragraph, can be there in second paragraph, can be there in the last adjustment of the question also. If you have to close revaluation, you should read the entire question once, close revaluation. Again open partners capital, again read the entire question second time. Then again when you start balance sheet, again read the entire question third time. It will not happen like that. Here the size of the question is big, adjustments are more. So you go on reading the adjustments line by line. You keep your revaluation open, partners capital open, balance sheet open. You read this adjustment. This goes to revaluation, write in revaluation. This goes to balance sheet, write in balance sheet. Keep everything open so that you don't have to scratch. And then when you finish the question, then you close your evaluation, identify the profit, share it to partners, close it and then put it to balance sheet. So that's the logic that you should follow to ensure that you don't do scratching in the exam. Done. So leave your first page, half page you leave for revaluation. And second half page you do partners capital. And next page you do balance sheet. So and then the page after that you do all the working notes that if you want to. So this if you do, your answer will look clean and you will have so much space for writing also. One other tip for you people is whenever you write ledger account, may it be revaluation, may it be partners capital, don't write consecutively subsequent lines. First line may write balance brought down, leave one line and then write next item. Sir, tree is already cut. You can't, tree is cut, paper is made. Max to max, what you can do is clear the exam this time so that one more tree will not be cut to print your all ticket and then answer paper. So finish off the exam this time. You get this? And that paper, so much paper you can use fully. Okay, because you leave two papers, that paper will not get transformed into tree later. So use that paper completely. The reason why I'm asking you to leave space is later if you understand that you've done something wrong or you skipped any adjustment, to come back and write, you should have space. A lot of them, they get so frustrated, they would want to write Pariyak Jaga Sakagodila. Between two lines, there will be one line. No? On that line, they start writing, it will become something. Then they don't know, yo, why did I scratch? It alle adjust try. Then you want to write everything again, you won't have time. You'd have to wait for 6 months again. Too much time waiting. So what you do is you leave one line. You leave one line. That is much better. Are you getting this? And also remember, if in case you fail, you will do practice again for 6 months. One more entire book, two new trees will get cut. So exam you take additional sheet. Fullu padiri, ಬೇಜಾರಿಲ್ಲ. ಅರ್ಥ ಆಗ್ತಿದ್ಯಾ? No one will say anything for additional sheet. Yes. So you keep that particular column as small as possible. And if many partners, usually there will be three. Four, worst case, very bad exam paper, four partners. So listen, if there are four partners, keep the partners capital account amount columns as small as possible. If in case everything is in lakhs, then above the partners capital account, write in lakhs. And then write 1.2, 1.8, 1.3, you can write like that. Worst to worst, the bad scenario that can happen is what if there is 3,63,483? 3.6483 should. So that won't happen. Usually, the examination is to check the skill of the student, not to torture the student. The objective of ICA is to check the caliber of the student. Okay, so it's not a stress management test. Don't worry, they are not so crooked and cunning. It will happen. What to worst case if it happens so, then you open separate two partners one ledger, two partners one ledger. Worst to worst scenario. Don't change the alignment. Alignment matra change madbidi. Don't change the reason why I'm asking you not to change the alignment is I will tell this with the authority for the fact that I know what will happen in the evaluation process. Previously, answer scripts were sent, bundle they used to do, and then send it to the evaluator. They used to sit at home and then correct. By mistake, you write one ledger like this. Evaluator used to flip the paper like this and then correct. Now, physical hard copies of the answer script will not be sent to evaluators. All the answer papers will go to scanning machine. In the ICI, one person will rub, scan your entire paper. It will get converted to one PDF. Then PDF will get updated to website, NIC website. That website may access will be given for your paper to only one person with username and password. If I am an evaluator, I am not an evaluator. None of the faculties who teach here can be correction agent. They cannot correct. It is ethically wrong and it is a punishable offense. You should not correct papers if you are teaching in a private institute. So should not. If in case I am telling you example, if I am an evaluator, I get one username and password. I enter username and enter password. I tap enter. Papers which are allocated to me will come in my portal. I open each paper. It will be like this. It is not your any PDF software. It is a website. So you can't rotate and all option is not there. So I will see the question like this. Here there will be one box. I can put tick mark. I can put into mark. I can put marks. I can't write anything. I can't give comment. So two options, tick mark, into mark and marks. This is what I can do. Once I put marks, total also will happen automatically. Stepwise, I'll go on putting tick, 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 tick. Are you getting it? Totaling error also will not happen. If you write the answer in the horizontal format, that you should do like this. It is not possible. You cannot. The reason is that paper will be scanned separately, this paper will be scanned separately. So your debit column will look in one page and then you should scroll down to see credit column. That should not happen, no? Worst to worst scenario, if there are four partners and amounts are in lakhs, 3,76,834, like that, it's there. Then you know what to do. You open A and B's partners capital account one and C and D's capital account one more. Two different ledger you open. That will not happen. But okay, you guys are like worst to worst scenario basis. You open two separate ledgers. C and B one capital account, C and D one more capital. Okay now? Yes or no? Okay. Same holds good for our retirement of a partner also. Any other questions? I'll show you one of the corrected papers in the class and then. Same to same hold goods for our retirement also. Yeah. And admission is a chapter that you must do. Sorry, partnership is a chapter that you must do because if you finish admission, 50% of retirement is also done. There is nothing new left. Only in death of a partner you should learn that section 37 separately. Otherwise, the rest of the chapter is done. One type of same type of problems. Only plus only minus. Their sacrifice ratio minus. Here gain ratio will be plus. That's the only logical difference that you have between admission and retirement. And problems will be similar. Basic level problems you'll be able to do. I'm telling you again simple. Class may, wherever you have learned, whoever has taught you would have taught you most difficult problems in the class. So that you would be able to do the most difficult problems first. You do examination questions, it will be easy. Whoever teaches you, we teach you not exam level problems. We teach you problems more difficult than exam. You go home, 10 papers are there. Now I'll share the folder with you people. Answers also is there in the same file. You check any of the past exams partnership question. It will be easy. If you have 10 questions, we did about 75, 76 questions partnership. If you see 75, 76 questions, last 5, 6 questions were difficult. First 10, 15 questions were easy. Examination questions are in the first 10, 15 minutes. You try this. Your confidence will get yes. And time also won't take too much. Very rare possibility they ask very difficult one. That never end ಮಾಡಕ್ಕಾಗಲ್ಲ. But ಅವಾಗ ಬೇರೆ ಎಲ್ಲ easy ಇರುತ್ತೆ. Don't worry. And in the case of retirement, ratios again will do the same. But here what would happen is there are two partners, there are three partners, one of them will retire. So the people who continue, their ratio will increase. So they're called as gaining partners. They're called as gaining partners. And goodwill, what used to happen in the case of admission is the partner used to come into the firm. Partner used to come into the firm, used to buy the goodwill. Here the partner is going out of the firm. His goodwill will be sold to the continuing partners. They will buy. So the continuing partners will give cash to the retiring partner or will give goodwill to that retiring partner in the form of capital. He will withdraw it in their capital. Are you getting it? Yes. So it will come as it is same to same. When we do our, what you say, our revaluation also same to same. The point of difference in the terms of retirement is two things. One, check whether the entire money to the retiring partner is paid. If it is paid, it will come in cash. If it is not paid, you should write in the balance sheet as loan. Sometimes they might say part of it is paid and part of it is retained. That you be cautious. And when you're practicing questions on admission and retirement, please practice one question on capital adjustment. Wherein they say new partner comes in for 1/3 share, his capital is 50. Capitals are supposed to be in profit sharing ratio, taking this partner's capital as base. Such kind of a question you practice. Write it down. Practice questions on partners with proportionate capital. Practice questions on partnership with proportionate capital. Power is back, ACs are working, you will feel better in another 2-3 minutes. You're feeling suffocated and hot in the class? No? I was. Yes, can I do? Practice questions on partnership with proportionate capital adjustment. You guys wrote that? Working note, working note. You write a separate working note for it. You don't have to show it as a part of subject. You write it in working note. Okay, that's the first thing. That retiring partners loan amount. Second thing is JLP. Second thing is JLP, joint life policy. Shall we finish JLP and then come to death of a partner? Okay. Let's finish joint life policy. JLP as a concept might sound very difficult to you, but it is a very, very easy adjustment. I will tell you to the point what is required for the examination. Joint life policy, you should remember, this is life policy taken by the firm. Who has taken this joint life policy? This is not personal life insurance policy taken by the partner. This is the policy taken by the firm. Premium is paid by the firm. Policy is on the partners, but is in the firm's name. Who's the interested party here? Firm. Premium is paid by firm. Policy money will be received by firm. Surrender, if the policy has to be surrendered, the decision will be taken by firm. Entire money paid is expense for the entire firm. Money received is also income for the firm. This is what you should know. Now, there is no exclusive question on JLP that will come. They won't say premium is this much, 3 years money they paid, write accounting entries. We've done such question in class, but such kind of question won't come in the exam. Exam, what will happen is there'll be one admission question or there'll be one retirement or death question with JLP adjustment. JLP can appear in the balance sheet asset side or can appear in the balance sheet. Sorry, it can appear in the balance sheet asset side or not appear in the balance sheet asset side. Now, I'll tell you what to do if it is appearing in the balance sheet asset, what to do if it is not appearing in the balance sheet asset. Let us take scenario number 1 where JLP is not there in the balance sheet. JLP is not there in the, so you have paid premium. You have paid premium. Premium is taken as expense to P&L. It is decreased our profit. Entire policy money what we receive from the insurance company is our profit. Entire money received is profit. Share it to all the partners in old profit sharing ratio. Share it to all the partners in old profit sharing. I'll repeat. JLP is not appearing in balance sheet. JLP is entire money received is profit. Share it to all the partners in old profit sharing ratio. If JLP is appearing in balance sheet, then what to do? Check. JLP is appearing in the balance sheet at some value and some amount you receive from the insurance company. It is like asset in the balance sheet is sold and you receive sale consideration. Identify profit and share it to partners. For example, JLP in the balance sheet is 10,000 and JLP received is 20,000 or let's say 15,000. 10,000 worth of asset is sold for 15,000. 5,000 is profit that should be shared to all the partners. And the JLP is like sold, no, it will not come in the new balance sheet. So this is it, simple. What is it? JLP is not there in balance sheet. Entire profit, entire money received, profit, shared to all partners. JLP is there in balance sheet. That is like asset, sold. You receive the value from the company, the insurance company, that is selling price types. What is there in the balance sheet is like cost price. Difference is profit, share it to partners in profit share. You understood this? Now comes the part where, what if they have not given the amount received from insurance company and you have to compute the amount to be received from insurance company? We will compute. There are two kinds of money. One is policy amount or sum assured. Second one is surrender value. So the two amounts, policy amount or sum assured. Second one is surrender value. If the partner dies, we receive policy amount or sum assured. If the partner retires, we receive surrender value. They will give three partners' name. You check whether the partner is alive or not. If the partner is alive, policy is surrendered, we receive surrender value. If the partner is dead, we receive policy amount. Individually, partner wise, you should see. There are three partners. Each partner ke liye separate policy will be there. Each partner's policy will have surrender value. Each partner's policy will have policy amount. Take the total, that is the selling value of the policy. You differentiate it, share it between the partners, and then close it. Understood? Say something. Last point on JLP. Sir, what if JLP is there in the balance sheet liability side? Hey, can it become a liability? Yes, if they call it reserve. Sir, what to do if it is? Just treat it like any other reserve. There is general reserve in P&L account, in balance sheet. What do you do on admission? Share it to all the partners in old profit sharing ratio. JLP reserve also, you do it the same way. Sir, retirement, same thing. Share it to old partners in old profit sharing. Sir, death, share it to old partners in old profit sharing. Oh, ashtena. Don't worry. Yeah, death, admission, retirement. In all the three cases, what do we do? JLP reserve, if it is there, share it to all the partners in old profit sharing ratio. So the complex part comes here. This accounting entries, if they ask us to do. But this is little confusing, but in detail we've discussed in class. But now is not the time to break your head on this part. Okay, now? Yeah, come on. Quick revision. Tell me. JLP. Premium andre ಏನು? Money paid by the firm to the insurance company as expense. What is sum assured? Money that will be paid by insurance company in the case of death of a partner. What is surrender value? Money paid by the insurance company to the firm in the case of retirement of a partner. Okay. Then when what is it? On the death of a partner, firm receives policy amount. On the retirement of a partner, firm receives surrender value. Though one partner dies and the policy matures, that money will not go to deceased partner. The money will go to firm. It will belong to everyone. It will belong to. Got it. So then what do we do? See, one partner died, one partner retired. We'll take dead partner sum assured, retiring partner surrender value, and then total it. Entire money will be shared between all the partners in profit sharing ratio. That's what I've explained here. Do you want me to go slow and then do this part again? Or you understood? Pakka? Okay, ಅಷ್ಟೇ ಇದನ್ನ ಟ್ರೀಟ್ ಮಾಡಿದ್ರೆ ಆಯ್ತು. Journal entries are there for treating JLP as expense, JLP as asset, JLP as reserve, but I don't want to waste time on this part. Okay, so remember this. Do you want me to make you write the JLP adjustment, or shall I go to depth? You guys tell. Break up. Should we? No, not required. But you know it. There is a rare possibility of question coming in. If you already learnt it, JLP journal entries for treating it as expense, asset, and reserve, please do read. If you've never read it in your life, like wherever you learned it from, they didn't teach you journal entries for JLP, policy amount, year-wise entries, expense, year-wise entries, asset, when the reserve is created, when the reserve is. It's a good discussion. We did one entire day discussion. Sarriyaಗಿ ಬೈದು ಪಾಠ ಮಾಡಿದ್ದಲ್ಲ ಅವತ್ತು. Remember? Got scolded that day because you are not. That's a difficult part. So I need to scold on the days where the topic is difficult. If not, people don't listen. So if you read it in the class before, revise that part and go. If you not read it in the class, in the regular class, if this was not taught to you, then don't do any circus now. Now you will get the very, very rare possibility, like 1 in 100 possibility only. JLP journal entry question. Only JLP may 10 marks is very rare possibility. But if you already read it in the class, why do you skip? You revise and go. If you have not read, don't worry. Very rare possibility. 90% ಬರೋದಿಲ್ಲ. It won't come. Only JLP question. It will be part of a bigger question. Yes, please. Third pair, huh? If you are quiet, I can hear it. Goodwill? Goodwill table, I'll show it in. Good. Thoughtful. See, this is goodwill table. What we need to do is each partner one column. And then you need to draw two rows. Row number 1 for raising goodwill, row number 2 for writing off goodwill. And when you do this, first the entire total goodwill amount should be credited to old partners in old profit sharing ratio. And then you will debit the goodwill to all the continuing partners in new profit sharing ratio. So the point is first credit old profit sharing ratio, debit new profit sharing ratio. Same no, old minus new is sacrifice or gain. So you credit it to old partners in old profit sharing ratio, debit it to new partners in new profit sharing ratio. You take the net difference and you will get the net amount. So whatever the amount you get, see for example here, old profit sharing ratio is 4:3:2 for X, Y, Z. New profit sharing ratio for X, Z, W. This is a complex question. There is admission of W and retirement of Y. In this question, there is retirement of Y and admission of W. New profit sharing ratio for X, Z, W is 17:11:12. So the same goodwill, I'll share it to X, Z, and W, debit it to them. And same goodwill, I'll share it to X, Y, and Z, 4:3:2 credit. Now take the difference. 96,000 credit, 91,800 debit. Greater number sign is credit, no? So I'll write credit, but write the difference amount. Here 72,000 credit and 0, 72,000 credit. Partner Z, 48,000 credit, 59,400 debit. Opposite signs, deduct, but the greater number sign is debit. I'll write debit 11,400. Same I'll do for W. Our journal entry will be Z account and W account debit, X account and Y account credit. Amounts are also there. Are you getting it? This is the complex question you can say in your partnership, which has retirement come admission. You get this? Yes or no? Okay. Now shall I teach you that part of death of a partner which deals with that section 37? Yeah. In the case of death of a partner, we need to compute the share of the partner, interest on capital, interest on drawing, remuneration, share in revaluation profit, share in goodwill, share in reserve, or any other money that is attributable to deceased partner till the date of death. Till the date of subject to exception. There is one question which is there in ICA study material where the question all by itself will say, though the partner dies in the middle of the year, he is entitled to share of profit till the end of the year. Interest on capital till the end of the year. Salary till the end of the year. There is one question done in class. Unless they specifically mention in the question, we'll give salary, interest, share of profit, everything till date of death. So date of death will not be end of the year. So we need to compute the profit on approximate basis. We need to compute the profit based on approximation. Last year, 12 months, ke liye, how much profit we will know. This year, from the beginning of the year till the date of death, how many months is it? 6 months, 3 months, 4 months. For that proportionate period, we'll find the profit and then compute. Got it? Say something. And we'll prepare partner's capital account only of deceased partner. You don't have to prepare all the partner's capital. And entries balance sheet also will not be usually asked in death. Death may they might not ask balance sheet. They will ask only deceased partner's capital account and executor's account if it is required. You got it. I'll tell you the interesting part. This is one part that you should revise from this chapter. That is section 37. That says one partner is dead. One partner is dead. What if we don't decide or we don't agree upon when to give him his money and we don't give him his money? For the deceased partner's executor, we should give the money immediately. If we don't give the money immediately, we should at least tell, I'll give 50% now, balance 50% will be converted to loan, we'll give interest at some 5%, we'll give it to you in 3 years. We should agree upon this. If the agreement is not made as to how to settle and the money is not settled, then the deceased partner executor will be entitled to interest on such amount outstanding at 6% per annum or proportionate share in the profit, whichever is beneficial. Proportionate share doesn't mean share of profit in profit sharing ratio. For example, A, B, C, 3 partners are there. Partner C will die. I don't know why. When partner C dies, let us say amount attributable to partner C is 1,50,000. Interest to drawings to ella says C. Partner A and partner B's capital, let's say 3 lakh is there. Are you getting it? So maybe their profit sharing ratio is 1:1:1. We don't care. Partner C's capital, partner C's amount attributable is how much? 1,50,000. A and B's capital 3,00,000. So 2:2:1 ratio mein profit or on that 1,50,000 interest at 6%. Whichever is more beneficial will be given to the deceased partner's executor. Do you understand? Read this again. As per section 37, deceased partner's executor or retiring partner is entitled to number 1, proportionate share in the profit to the extent amount is outstanding or interest at 6%, whichever is beneficial to the retiring partner or deceased partner. Everyone, say something. Very good. Correct answer. Thank you. So let us now go to the next chapter, shall we? ಆಯ್ತಾ ಏನ್ ಮಾಡೋಣ ಈಗ NPO ಮಾಡೋಣ ಕಂಪನಿ ಅಕೌಂಟ್ಸ್ ಮಾಡೋಣ ಕಂಪನಿ ಅಕೌಂಟ್ಸ್ ಓಕೆ should take a short break of 5 minutes or ಬೇಡವಾ ಇಟ್ಸ್ ಆಲ್ ಸಫೋಕೇಟೆಡ್ ಬ್ರೇಕ್ ಆಗುತ್ತೆ ಸರ್ ತುಂಬಾ ಜನ ಇದ್ದೀವಿ ಓಕೆ ಆರ್ should we take lunch break too early no 5 minutes ಸಾಕು lunch break late ಬೇಕಾ 1 o'clock ಗೆ ಬೇಕಾ after we finish that company accounts chapter we'll take lunch break. Okay, chal. Take a short break, 5 minutes. It's 12:27. See you all at 12:35, bunny. But 12:35, I don't want people to be coming in installments. Don't lock ಮಾಡ್ಬೇಕಾ ಇವಾಗ ಮಾಡಲ್ಲ ಅವಾಗ ನೀವಿದ್ದಾಗ ಮಾತ್ರ ಮಾಡೋಣ Okay. Now we will start with chapter 10. Company account. Right? Can I have some silence? We're now starting with company accounts. Everyone, please listen to me. Company account. So when we talk about company accounts, the idea of a company, the idea or concept of company came long ago when people had troubles in their lives. They were trying to discuss the problems over food and they found better solutions to their problems when they discussed it rather than trying to solve it alone. So what they decided is they decided to do the business together rather than just having lunch together. So that form of business organization which came into force when people sat to have food together is called as company, where the word com means together, money means bread. So in the West, when people used to sit together and have bread, they used to find better solutions to their business problems. So company is derived from 2 words, com and funny, where com means together, funny means food or bread. Be very precise. And in the modern times, we are flooded with companies and the major form of business organization is in the form of company. It is regulated by our Companies Act 2013. There was an act before this called Companies Act 1956, but right now it is regulated by Companies Act 2013. As per Companies Act 2013, company is a company which is formed or incorporated under this act or any other act prevailing before this act. This act is Companies Act 2013. Act before this act is Companies Act 1956 or Companies Act 1929 or what to say English Indian companies. Sorry, East India Company when it was there. There was another Indian Companies Act. So that was there. Whatever act under which you registered, that will be the prevailing act. You get this? And the characteristic features of companies, we know all of this. What is it? There will be separate legal entity, perpetual succession, limited liability. These are all there, voluntary in nature. Just to tell you overall understanding of this, incorporated association means company is not a real person. It's an artificial person. Once you incorporate it, it is a person in the eyes of law. You need to incorporate it to make it a person. You should get certificate of incorporation from a ROC, Registrar of Companies, which works under Ministry for Corporate Affairs, MCA. Then voluntary in nature. Company is a voluntary association. So people come together with interest. There is no mandatory condition that you should basically start a company. So voluntarily, if you are interested, you pool in money and then start company. Separate legal entity. Ownership and management in a company is distinct. I am an owner in lot of companies. I own shares in the company, but I am not director to take decisions. Owners invest, directors take decisions. Are you getting this? Management of the company is in the hand of directors. Ownership of the company is in the hands of the shareholders. In the case of partnership, partners are owners, partners are decision makers. Same in the case of sole proprietorship, but not in the case of company. That is what we call as separate legal entity. Company is a separate entity away from its owners. And there is perpetual succession, meaning company will not have death. The company will continue to exist in spite of change in directors, in spite of change in owners. So the shares of one person can be sold to another. Company's existence will not get ceased. Directors might die, but the new directors will come and then take over, and the company's existence will not get ceased. Are you getting it? Company will die only and only when it is hanged. No, certificate of incorporation, even if you hang it, company will continue. Company will die only when you kill it. That is by way of liquidation, either voluntarily or by order of court. Either ways, you would have to kill the company. Company will not die by not possible. Okay. Limited liability, meaning in the case of partnership, if in case the partnership firm has taken loans or has some liabilities which it doesn't pay, then to pay such money, partner has to sell his private assets and then bring money. So the liability of the firm will run into the personal assets of the partner. Same in the case of sole proprietorship also. If in case there is loss in the sole proprietorship, so the liabilities of the proprietorship business will run into the personal assets of the proprietor. But the same will not happen in the case of companies. You own shares of some company, some Tata company or some Infosys, some Wipro or some Happiest Mind, some company. If in case that company becomes bankrupt and they have huge liabilities than assets, they have big debt to repay. That will not, you don't have to sell your personal property to pay. To be very precise, you are not personally liable. You don't have to take the money from your purse to pay to the company. You get this? If company has money, they will pay from their purse. You don't have to pay it from your purse. So we call it that the shareholders are not personally liable. Are you getting it? Yeah. Then the last one is transferability of shares. Shares of the company can be sold like this. You can become shareholder in one company and you cannot become shareholder in that company. You can become shareholder in one more company, all in the span of seconds. That's the beauty of shares. And that is the characteristic features of company that you should know. Going further ahead, we are not here to discuss company law or introduction to company law or any aspect. We are concerned about books of accounts. How does the company maintain its books? We are talking about money, how it should be accounted in the books of the company. So when we talk about money, there are two categories of money that we'll discuss in the case of company. One in the form of capital, second one in the form of loan. Capital in the case of company is called as share capital. In the case of proprietorship, it is called proprietor's capital. In the case of partnership, it is called partner's capital. In the case of company, it is called share capital. Before we understand the word share capital, let us focus on the word share. Loan will become debenture, that we'll discuss later. When we talk about share, there are two types of shares. One is equity share, second one is preference share. Equity shares will form equity share capital, preference shares will form preference share capital. Now, my question to all of you people is, what is a share? Share is a share in the share capital of the company. This is the definition that is given under section 2, subsection 84 of the Companies Act. What does it say? Share is a share in the share capital of the company. Next, let's discuss what are the types of shares. I told you, no, there are two types of shares because of which share capitals are formed, equity and preference. Two types of shares are equity share and preference shares. What is equity share? ಅಂದ್ರೆ preference shares and ಅವನ Allah. Both are shareholders are owners. Equity shareholders are don't say equity shareholders are the real owners of the company. They are duplicate owners. There is nothing like real owners duplicate owners. Shareholders are owners. The logic is equity shareholders are such shareholders who are not preference shareholders in the company. Equity share is a share which is not a preference share. No, don't use that mind. We're like, sir, preference share is a share which is no. Okay, don't tell that answer. Okay, so the logic goes like this: preference share is a share which has preferential rights. Preference share is a share which has preferential rights are there in two cases. One, for dividend. Two, for repayment of capital. When the company is paying dividend or when the company is repaying the capital, all the shareholders will stand in queue. No, first preference shareholders will stand. After that, only equity shareholders will stand. First, the company will pay to preference shareholders. Then it will pay to equity shareholders. Or if the company says dividend, everyone will run no towards the company. First year preference shareholder will come first in the race and he will collect. After that, if anything is left, that will be given to equity shareholders. So at the time of payment of preference share, at the time of payment of dividend and at the time of repayment of capital, payments will be first made to preference shareholders, then it will be made to equity shareholders. Understood this? And that is the preferential right that we give to preference shareholders. After this, going back to our share capital, there are types of share capital that you need to know. Types of them are authorized capital, issued capital, subscribed capital, called up capital, paid up capital, uncalled capital, unpaid capital. Uncalled, unpaid we'll usually discuss later. Authorized is the maximum limit beyond which the company cannot raise. This limit is given by Registrar of Companies or MCA. Then we have issued capital. Out of the authorized capital, how much your company decides to issue is its issued capital. Just because it has issued doesn't mean people will buy. If people have subscribed to an extent, bought the shares, that part of issued share capital which is subscribed by people is subscribed capital. After they subscribe, we might ask a portion of that money to be paid to company. We might not ask entire money. What we have asked them to pay is called up capital. Out of that, they might not pay the full money. They might have paid some part. What they've paid is called paid up capital. What they've not paid is unpaid. What we have not called is that's the types of share capital. Usually we discuss though, but now we are running. After this, we go ahead to discuss the next topic as issue price and nominal value. Are issue price and nominal value same? The answer is no. Issue price and nominal value is not same. They are different. Issue price is the price at which the share is issued. Nominal value is the value that is mentioned in the face of the document. The value that is mentioned on the face of the document need not be the value at which it is issued. The difference between them is what we call as premium or discount. Now, if in case nominal value and issue price are same, we call it issue of shares at par. Issue of shares at par. If nominal value is less and issue price is more, we call it issue of shares at premium. If nominal value is more and issue price is less, we call it discount. And issue of shares at discount is forbidden, like this. ಏನಾಯ್ತು ಇಶ್ಯೂ ಆಫ್ ಶೇರ್ಸ್ ಏನಾಯ್ತು ಫ್ಯಾನ್ ಓ ಕಮ್ಮಿ ಮಾಡ್ಬೇಕು ಹಿಂಗೆ ಇವಳಿಗೆ ಹೆಂಗ್ ಗೊತ್ತಾ ಹಿಂಗೆ ಮಾಡ್ಬಿಟ್ಟು ಹಿಂಗೆ ಹಾಕೊಂಡು ರೆಡ್ ಕಲರ್ ವರ್ಡ್ ಔಟ್ ಆಫ್ ಶ್ರೀ So remember that was happening. Hey, where are so many people? All the people are absent. Where is our Parker? Parker was there yesterday. Parker is not there today. Pennalla, there was one guy by name Parker, absent. So many people. You saw. Okay, now concentrate. So issue of shares at discount is forbidden. You cannot issue shares at discount. Can you issue shares at discount? No. Who stops you from issue of shares at discount? Section 53 of Companies Act 2013 will restrict you from issue of shares at discount. Debentures can be issued at discount, but shares cannot be issued at discount. It is forbidden. Sir, can we reissue forfeited shares? Yes, but again there is a limit there. We'll discuss that. Now concentrate. Shareholders are categorized. One, good shareholders, bad shareholders. Good shareholders are such shareholders who will pay the money before we ask. Bad shareholders are such shareholders who won't pay money even when we ask. Bad shareholders will lead raise to calls in arrears, and good shareholders will lead raise to calls in advance. Good shareholders are a liability to us. Good shareholders is a liability to us. Bad shareholders are asset to us. Why? These people would have to pay us money, they have not paid. Calls in arrears is an asset. Are you getting this? Now, next thing that we'd have to know here is this unpaid capital is there no here. That unpaid capital is nothing but calls in arrears, where we have made the call but they have not paid money. Similarly, we need to know the situations in the company where there are two situations, good and bad. Happy and sad. Happy situation is where number of applications that is received by the company is way more than number of applications that he has called for. Let me repeat. Number of applications that is received by the company is greater than the number of applications that it has called for. We call this oversubscription. What do we call it? And sad situation is where number of applications received by the company is lesser than the number of applications it called for. And such a sad situation is called under subscription. What is it called? In the case of oversubscription, because you are happy, can you accept all the applications? No, no, no. You can accept only to the extent you called. How do we decide how many which applications to accept and which applications not to accept? There are two methods. One is called pro rata method, proportionate allotment. Second one is called lot method. So pro rata method means the company has called for 1 lakh applications. Company has received 1,20,000 applications. So it is called companies oversubscribed 1.2 times. For every one share, there is 1.2 applications. So what we do is, he has applied for 12 shares. I will allot him 10 shares. She has applied for 6 shares. I'll allot her 4 shares. Someone else has applied for 3. I'll allot them 2. Someone has applied for 1. I'll allot them 0. So I'll do this because share cannot be further shared. Share andrene share. Adರಲ್ಲಿ ಮತ್ತೆ share ಮಾಡಕ್ಕಾಗುತ್ತಾ? One share ಅಲ್ಲಿ 0.75 share. Not possible. Huh? So what I'm trying to tell you is, it will be done on proportionate basis. That is pro rata allotment. Second one is lot system. Lot system, what do they do? 1,20,000 applications we got for 1 lakh shares. All 1,20,000 applications will put. Lucky dip for 1 lakh shares. Whichever application gets picked, they get shares. Balance 20,000 applications. I am sorry. Then we keep going. You get this? This is called lot system. Practically, what is followed in the market? Lot system. What is followed? Lot system. Whenever there is oversubscription, it is there. No, in yesterday's newspaper, it was there. One company is going for IPO. See there. I'll show it to you. Wait. Front page ad ಕೊಟ್ಟಿದ್ದಾರೆ, Economic Times. This is yesterday's newspaper. Nexus Select Trust. They're going for IPO. So they have mentioned price band 95 to 100, 150 units is the last two. Multiple of 150 units you can apply. And yeah, they have given complete bid offer closes today. Yesterday was the last day. UPI ಮಾಡ್ಬೋದು ಎಲ್ಲ ಡೀಟೇಲ್ಸ್ ಕೊಟ್ಟಿದ್ದಾರೆ. ಮರ್ಚೆಂಟ್ ಬ್ಯಾಂಕರ್ಸ್ ಡೀಟೇಲ್ ಇದೆ. ಐ ಕೀಪ್ ದ ಪೇಪರ್ ಹಿಯರ್. Whoever wants to read later, you can read. ನಿನ್ನೆ ಪೇಪರ್, ಇವತ್ತಿಂದಲ್ಲ. Yeah. So all that I'm trying to tell you is, over subscription, if it happens, the number of applicants received are more, then the company cannot do pro rata allotment. They'll only do lot system. They'll only do. Apply ಮಾಡಿದ್ದೀರಾ? ಇಲ್ವಾ? Nice. Then sad situation is where number of applications received is lesser than number of applications applied for. So what do we do in this case? Can we accept all the applications? No. There is a limitation. Minimum 90% applications should have been received. If you are issuing 1 lakh shares, minimum 90,000 applications should have received. If you have received minimum 90%, you can accept. If you have received less than 90%, you cannot accept such applications. You need to refund the applications, cancel the issue, make a new prospectus, and again go for fresh issue later. Are you getting it? So that is sad situation. In the case of oversubscription, where you got more money, that extra money what you received. For example, what has happened is, you have called for 1,20,000, but you received, sorry, you called for 1 lakh shares, but you received 1,20,000 applications. Meaning, one shareholder who had applied for 3 shares, if in case I allot him 2 shares based on pro rata basis, he would have paid application money for 3 shares. But I should keep only 2 shares money because only 2 shares are allotted to him. 1 share application money I should refund to him. And again, 1 share ka money if I refund, he'll ask, what about the balance? What should I say for that? Those 2 shares are allotted. He has paid me 3 shares application money. I refund 1 share's application. He will ask, no, what about the balance 2? What should I tell them? Other 2 are allotted. He'll say, then I would have to ask him allotment money for those 2 shares. He will say, why are you giving me money? Why are you asking me money? Instead, you keep that application money on the 3rd share, adjust it against allotment money for first 2 shares. If there is shortage, you ask, I will pay only the shortage. Are you getting it? That is what will give rise to calls in advance. Meaning, whenever there is oversubscription, can we accept all? No, paisa, but you can't accept. What will you do? Company can accept only number of shares that it has asked for. So that's the way we deal with it. We call it lot system or parota system. We go by parota. And when we do parota system, there the Texas money what is kept will come to our calls in advance. Calls in advance in good shareholder. Understood? Okay. Now let us go ahead and then discuss the bad shareholder. Calls in advance you understood. No? If there is a bad shareholder, what do we do with such shares? We should forfeit such shares. We should forfeit such. Before we go for forfeiture, quick point. Calls in arrears is asset. Calls in advance is very good. Calls in arrears is calls in advance is calls in advance is a liability for a good shareholder. Good shareholder has paid us money in pre-order. Till the date we adjust that money, he would have to give interest to such person. Company has to give interest on calls in advance. For calls in arrears, shareholder should give us interest because he delayed money to us. When we charge him interest, we charge him lesser rate, 10%. 10%. When we give, company is big, company will give more interest. How much? 12%. Interest on calls in advance is how much? 12%. Interest on calls in advance is how much? Interest on calls in arrears is how much? Understood? Interest on calls in arrears 10%, interest on calls in advance 12%. This is to be computed on per month basis. It is 12%, 10% per annum. And if it is days, you do it for days and then compute it and then give it. Okay, done? Very good. What if there is some calls in advance money? It is partly used for allotment, partly used for call. Till that amount which is used for allotment from the application date till allotment date interest. Amount which is used for call from the application date till the call date you would have to compute and then give. Remember that. Next, calls in arrears. Again, we charge him interest till the date he pays. After sufficient notice, if the calls in arrears money is not made good, meaning the shareholder doesn't pay the money, shareholder doesn't pay the, then the company has one option, forfeiture of share. Company has one option, forfeiture of. Previously, the company has issued share to them, share capital has increased. I will take the share back. Share capital will decrease. So we debit share capital. Previously, there was calls in arrears asset, money receivable. Now, when I take the share back from him, can I ask for money anymore? So, calls in arrears asset will decrease. So, credit calls in arrears. And money that he has already paid, will we return it to him? For example, share is of 10 rupees. He paid application allotment first call money. He didn't pay final call money of 2 rupees. He has paid 8 rupees. He didn't pay 2 rupees. When I take the share back, will I give him 8 rupees? 8 rupees will be with me only. 10 rupees share capital I had credited, which is now reducing. I'll debit share capital 10. 8 rupees is my profit because the share that I gave him, I took it back. Money that he gave, I won't give. What is yours is mine. What is mine is mine. Correct, no? जो तेरा है वो मेरा है, जो मेरा है वो मेरा. Here, you will understand, Yasir. It will take time. How old are you? Huh? Madhve agree. What's mine is mine. What's yours is mine. Okay. So this real classic works good. Syllabus in the ಹೊರಗಡೆ. Very good. Let's go ahead. So that money what is retained by the company is profit. You will write it in share forfeiture account. Please don't do that heat exchange. There is fire in between. Huh? Still. Next, calls in arrears is what do you say? Asset which is no longer in existence, so we credit that part. Share capital is capital decreasing, so we debit it. This share is now forfeited. This share is with us now. We can reissue this share to somebody else. We can reissue this share to. Understand? Share was of 10 rupees. Share was of what value? Correct. How much did the shareholder pay? 8 rupees. How much did he not pay? 2 rupees. Now, when I reissue this share, The terms is not how it was at the time of issue. This share can be reissued at par. This share can be reissued at premium. This share can be reissued at discount also. Reissue of shares can happen at par, premium, or discount. There is no limit on premium, but there is limit on discount. Discount as condition. Old shareholder was supposed to pay 10. He paid 8. 2 rupees he did not pay. When I forfeit, minimum amount that I should collect is 2. Minimum amount that I should collect is 2. If I collect more than 2, I am happy. Or if I collect 2, I am still okay. So, maximum discount I can give is 8. Maximum discount I can give is, can I give 9 rupees discount? Can I give 8 rupees discount? Can I give 7 rupees discount? Can I give 0 rupees discount? Yeah. Can I reissue the share at 10 rupees? Yes. Can I reissue the share at 12 rupees? Yes. Can I reissue the share at 8 rupees? Yes. Can I reissue the share at 7 rupees? No. Yes. You know why? If I reissue the share at 7, discount is 3. Maximum discount allowable is 8. Minimum money that I should collect is how much? More than 2 reissue price is okay. Can I reissue the share at 3 rupees? How? If I reissue at 3, discount is, maximum discount is, okay. Can I reissue the share at 2 rupees? Why? If I reissue it at 2, discount is, maximum discount still within limit. Can I reissue the share at 1 rupee? No. Why? If I reissue it at 1 rupee, new shareholder is paying me 1. Old shareholder has paid me 8. Together it becomes 9 is less than 10 nominal value of the share. So it becomes like on the whole share is issued at discount, which is not allowed. On the whole company should receive more than 10. ಅಷ್ಟೇ. ಹಳೆ ಶೇರ್ ಹೋಲ್ಡರ್ ಹೊಸ ಶೇರ್ ಹೋಲ್ಡರ್ ಸೇರಿ 10 ರೂಪಾಯಿ ಕೊಟ್ಟರೆ ಸಾಕು. Old shareholder and new shareholder together if they give 10 rupees, company is happy. Here, the tricky part is you should be able to find profit on reissue as well as premium on reissue. When is it profit? When is it premium? This concept, if you understand, I am happy to go to dimension. But we should understand this part. Can I help you understand when is it profit? When is it premium? Same numbers. Nominal value of the share. Paid by the old shareholder. Not paid by the old shareholder. Calls in arrears. Share is forfeited. Share is now. I will reissue the share. I will at rupees 10. I'll ask questions. I will reissue the share at rupees. First one. Can I reissue the share at rupees 10? Yes. In this case, how much is the profit on reissue? How? Two logics. Number one, old shareholder paid me how much? New shareholder paid me how much? Together, how much did I collect? 80. Nominal value per share. 8 rupees profit. One logic. Second logic. Previous shareholder paid 8. Correct? So maximum discount I could have given is how much? Did I give discount? Entire amount of 8 rupees is profit. Second one. Can I reissue? Should I tell the question again? Nominal value 10. Previous shareholder paid 8. Calls in arrears 2. Share is forfeited. Can I reissue the share at 9 rupees? Yes? Okay. If I reissue it at 9 rupees, how much is my profit? How? New shareholder paid 9. Old shareholder paid 9 plus 8. Nominal value. For 10 rupees share, I have collected 17 rupees. 7 rupees profit. One logic. Second logic. Previous shareholder has paid 8. How much discount can I give? 8. What is the issue price? 9. If I issue a 10 rupees share at 9 rupees, discount is 1 rupee. 8 rupees discount I could have given. I have given 1 rupee discount. Balance of 7 rupees is profit. Understood? Can I reissue the share at rupees 11? Yes. How much is my profit? 8, 9, 9. What we need to remember is, if the share is reissued at 11, nominal value is 10. It is reissued at 11. 1 rupee is premium. 1 rupee is 11 ಅಲ್ಲಿ 1 rupee premium. 10 rupees is collected from new shareholder. 8 rupees is collected from old shareholder. Together we've collected 18 against the share of rupees 10. Difference of 8 rupees. Sir, can I take 11 plus 8? No. 1 rupee premium, no. When is it premium? When it is more than nominal value, it is premium. Nominal value of the share is 10. If the company reissues the share at a price greater than 10, it would be premium. Okay. I will show you a small question on this. I would want you guys to see through this. I'll give you a little period of time. You guys can see it. It will not be very difficult, but it is good that you would see. Hey, silence. You should not talk, pa. See here. See the question? Shh. It's telling numbers also, you know. Huh? Oh, like that. Wow. Very good. So nominal value is 10. Application is 3 rupees. Allotment is 1 rupee. 3 and 1 is received. 6 rupees is not received. 6 rupees is? Okay. Now have a look at this question. Reissue price 10. Reissue price 10. So is the reissue allowed? Yes. 12. How much is the money that is not received? How much is received? 4. How much is the maximum discount? 4, sir. You need this sleeping. Maximum discount is 4. No, what is collected is 4. How much discount can we give maximum? Can we reissue 10, 12, 9, 8? Not understanding. We have collected 4 rupees in the past. So we can give 4 rupees discount. Meaning 10 rupees share 4 rupees discount and then 4 rupees minus 1 is 6 rupees is the minimum reissue price. You cannot issue at a price lesser than 6. So 10, 12, 9, 7, 6, okay. 5 not okay. 5 is? Next, profit computation. For the same question. Have a look. Same to same question. Nominal value 10. Called up 10. Amount paid up 7. Calls in arrears 3. 3 rupees is not paid. So we have forfeited the shares. Maximum discount. Amount calls in arrears is 3. Sorry. Maximum discount 7. Correct. Sorry, sir. Minimum reissue price. Minimum reissue price. Okay. If the reissue price is 10. Profit of how much? 7. If the reissue price is 12. 2 rupees premium. 7 rupees. If the reissue price is 9. 6, 2, 1, 0, 0. Have a look. You tell me if you have any doubt. 2 mark. If I scroll up, this is max second. If I scroll further up, you will not be able to see this. This you know. Do you know this? If you know that, I will scroll. I can zoom also then. See, this is 10 rupees share. They have paid 7 rupees. They have not paid 3 rupees. Based on that, you see this. If you don't understand, you please ask me. No. Premium, we eliminate premium. The moment nominal value, so the moment issue price is greater than nominal value, eliminate premium, the rest of it you take in your working. How will this be? Someone doesn't study anything, but still straight away comes to marathon revision. Bhaya jasti aguttilla. But if you read and come, if you have read little or if you attend, then it will become good revision. You tell me at the end what was good takeaways from the revision session. You would have to tell so that it will be beneficial. We'll incorporate some new things. Yeah, last time we didn't get any constructive feedbacks as to how can it be much better. This time, if you have any good value addition feedbacks, you do tell. So we'll incorporate it by the time we do next. By the time the next revision happens, full all the chapters will have proper presentation. And within the presentation, I'll change it. I'll not use the same classroom presentation. I'm thinking of making a separate presentation for revision, wherein we'll eliminate some things and then we'll put that question also into it. but I didn't want to pre-decide the question. It was simple job for me day before yesterday. I could have decided which questions to do, but I wanted to keep it little flexible and open for people in the class to decide which question you would want me to discuss on which chapter. Beta. Presentations, I'll make it ready for other chapters. Partnership, you saw half, no? Admission, retirement, death also I'll finish. Okay. Aita, any doubts? Okay. Now listen. This profit, whatever we computed here, should be transferred from share forfeiture account to capital reserve. Remember, profit on reissue should be transferred from share forfeiture account to only when the share is reissued. For example, you forfeited 1000 shares. You reissued only 600 shares. Then 600 shares into profit per share should be transferred to capital reserve. 400 shares into profit per share should not be transferred to capital reserve. It should continue to be there in share forfeiture account only. Let me repeat. If 1000 shares are forfeited, but only 600 shares are reissued, amount pertaining to 600 shares only should be transferred to capital reserve. 400 shares which are forfeited but not reissued, money will not be transferred to capital reserve. Money will not be transferred to capital reserve. It will continue to be there in share forfeiture account only. It will continue to be there in share forfeiture account only till the time the shares are reissued. That's one part that you should note. By this, we are done with share capital part, but you would have to be still discussing the debenture part. Yeah, shall we finish debenture and then take break, or should we take break and then come back to it? We'll finish. I hope you guys will come back for the post break session also. How many of you won't come back? ಅವರವರೇ ಮಾತಾಡ್ತಾರೆ ಅಲ್ಲಿ ಲಾಸ್ಟ್ ಚೆಕ್ಸಿ ಸರ್ ಎಸ್ ಸರ್ ಯು ದ ಒನ್ ಬಿಹೈಂಡ್ ಯು ಲಾಸ್ಟ್ ಬಟ್ ಒನ್ ಪ್ರಣವ್ ಹೆಡ್ ಆಫ್ ಯು ಎಸ್ ಸರ್ ಬರೋದಿಲ್ವಾ ಹಾ ಬೈತಾ ಇದ್ದೀರಾ ವಾಟ್ ಯು ವಿಲ್ ಕಮ್ okay I will wait. Let's discuss debentures now. Debentures are loan. Company wants to take loan. Company can take loan from financial institutions, banks, or from public. From public at large, when the company borrows loan, company will give in writing saying that yes, I have taken loan from you. Yes, I will give you this much interest. And yes, I will repay the loan within this date. That acknowledgement what the company gives in writing to the members or the people from whom they borrowed is called as debenture. What is it called as? It is an acknowledgement of debt issued by company to the people. This debenture can be issued at par, can be issued at premium, can also be issued at discount. Can also be issued at. What does that mean? It means very simple. Our nominal value of a debenture is 100. It can be issued at 100. It can be issued at 110. It can be issued at 90 rupees also. Why do we issue it at discount? Very simple. Assume that market may interest rates is 10% for debentures. SEBI tells you cannot issue debentures for an amount greater than 10%. So if you issue at 10%, people will not subscribe to your company's debentures because your company is not very prevalent in the market. They will give loan to other company, not your company. So what will you do? You will issue debenture at discount. So to the debenture holder, you know what will happen? He will give 90 rupees. He will get debenture of 100 rupees because I issued a discount of 10. On the maturity, he will receive 100. So interest rate I can't increase beyond 10. I will compensate but by issuing the debenture at discount. On redemption, I can redeem the debenture at par, I can redeem the debenture at premium, or I can redeem the debenture at discount. But only condition is we should decide it at the time of issue of debenture only as to how are we going to redeem the debenture and inform it to the debenture holder. And now you need to note, issue may company is collecting money. Am I right? Issue may company is collecting money. Redemption may company is paying money. At the time of collecting the money, if the company collects less money, discount, it is loss to company. At the time of paying the money, if the company pays more, it is loss to company. So at the time of issue, discount is loss. At the time of redemption, premium is loss. Discount on issue, premium on redemption. Discount on issue, premium on redemption. Together will form loss on issue of debentures. Discount on issue, Lloyd, DOID, discount on issue of debentures. Called premium on redemption of debentures. Together, Lloyd, loss on issue of debentures. Discount on issue, though, you'll account it on issue only. Premium on redemption will become expense later when you're redeeming. Do you agree with me? But at the time of issue only, you know that this debenture will be redeemed at premium. Do you know it? Yes or no? You know that it's going to become loss when you redeem. So what you should do? Conservatism. What do we do? We need to provide for such loss on issue of debentures, that is by way of premium on redemption at the time of issue only. So issue entry rate, no, bank account debit to debenture, yes or no? Then only you should write premium on redemption of debentures loss. You should write then only. And such amount of loss, whatever is debited or created, has to be transferred to P&L. Loss, no. Premium on redemption is loss. Discount on issue is loss. Such an amount of loss has to be transferred to P&L. How and when? When do we transfer? Beginning, end, throughout. Throughout the debenture period, you will have to redeem. You would have to transfer. When should we transfer that loss on issue of debentures to P&L? Throughout the, if the debentures are issued for 10 years, every year little you would have to transfer to P&L. If the debentures are issued for 5 years, every year little you would have to transfer. The reason, why do we pay premium or why do we give discount? It is in compensation for interest, no? It is expense throughout the debenture term. If debentures are redeemed in lump sum at the end of a specific period, let's say we issued 1000 debentures, entire 1000 debentures are redeemed at the end of 5th year. Entire debenture money is there throughout every year. So we'll transfer that loss on issue of debentures to P&L account every year equal amount. If the debentures are issued at the beginning of first year and it is redeemed in lump sum at the end of 5th year, how do we transfer it to P&L account loss on issue? Every year equal amount. However, if little debentures are redeemed every year, first year 1000 debentures are there, second year 800, third year 600, 400, 200, 0. Amount of debentures money is reducing every year. Expense also should reduce every year in the same ratio. In the same, I will tell one statement and I'll also show it to you. Listen to me carefully. If the debentures are redeemed in lump sum, the debentures are redeemed in loss on issue of debentures is transferred to P&L account equally over the debenture period. If the debentures are redeemed in lump sum, loss is equal for every year. If the little debentures are redeemed every year, then loss on issue of debentures should be transferred to P&L in the outstanding debenture ratio. In what ratio? See this. Loss on issue of debentures is discount on issue plus premium on. Now next read this. Loss on issue should be transferred to. Very good. Amount to be transferred in here. Okay, outstanding debenture ratio. If all the debentures are redeemed at the end of specific period, then equal. If debentures are redeemed at the end of each period, transferred to P&L account in the ratio of debentures. Very good. Understood this? Any doubts? By this, we are done with this topic. There is nothing much left in here. Yeah, you please do read through this. And if you have any doubt, you ask me. Give me a little time to have lunch. I'll have my lunch, and once I finish my lunch, I'll come back and sit here only in the class. I will answer any doubts that you people have. Right now, also, if you have, immediately you can ask and ask some doubts. Whatever is possible from my end, I will be helping you all with that case. Okay, ah? Yes. That's it, guys. It is 1:30. Let us take a break. What time are we meeting again? 1 hour is too much. We'll wind up by 5 o'clock. So shall we meet by 2:10? 2:10. 30 plus 10, 40 minutes. 40 minutes ಸಾಕಾಗಲ್ವಾ? 2:15. 45 minutes is actually ಸಾಕಾಗುತ್ತೆ. 2:15. 2 o'clock, 15 minutes. Please do come back. Yeah. When we come back, what do we start with? Hey, depreciation ಅವರು ಹೊರಟೋಗ್ತಾರೆ. ಆಯ್ತು. At the end, we'll do depreciation. Alright, we'll do NPO. We'll decide, okay? Chalo guys, take a break. See you all at 2:15. Good afternoon, everyone. Welcome back to CA Foundation Principles and Practice of Accounting Marathon Revision. We have finished the chapter of company accounts before break. What we're left with is depreciation, final accounts, NPO, bills of exchange, average weight account correct. Let us do in the same order. Depreciation, then we'll do final account, then we'll do NPO, then bills of exchange. Yeah. So let's get started with depreciation accounting. This is chapter 5 of your syllabus, and you might have read this chapter in PU, but methods of depreciation that we have here is little more than what you have there. What is depreciation? It is allocation, systematic allocation of depreciable amount of an asset over the useful life of the asset. This definition is given as per Schedule 2 of Companies Act 2013. In simple sense, however, it means decrease in the value of the asset. In simple sense, it actually means decrease in the value of the asset. However, as per Schedule 2 of Companies Act 2013, it is systematic allocation of depreciable amount over the useful life of the asset. If I do ask you a question on why do we charge depreciation, will you tell me the reasons for charging depreciation? It is because of wear and tear, because of usage, the value of the asset will come down. Because of wear and tear, because of obsolescence, because of effluxion of time, change in fashion, change in trend, change in consumer needs. Because of all of this, the value of the asset will decrease from year to year. That decrease in the value of the asset should be shown as decrease in the value of the asset and allocation to expense in our P&L account. And that, my friends, is what we call as depreciation. This theory part. Objectives of providing depreciation is if we don't provide depreciation, the assets will be overstated in the balance sheet. Assets will be shown at a wrong value. And expense is also needed to be written. If you don't write expense, again, your profit that's written in P&L account will be wrong. They're having their own galating. What is happening? She wants to go. Please. It is okay. You sit there. You sit there. You can't see. How much? No, not like that. Huh? What happened? Hmm. Any problem there? Someone said, Puja, what is Puja? Move little, that's it. Now she can't see. Hey, you figure out, I don't know. Now, okay, now you can't see. Do whatever you want to do, exchange. Exchange is what should you say? You get up and sit inside. It's like she's smiling. She's smiling. They're talking in ice. Okay, concentrate. Objectives. If you don't provide depreciation, I told you the value of the asset will be wrong in the balance sheet. You bought an asset for a certain price 3 years ago. You don't provide depreciation. 3 years ago, you bought a car for 10 lakh. From 3 years, you're showing the balance sheet at 10 lakh. Is the value of the asset 10 lakhs even now? No. So the value is wrong in the balance sheet. You bought one machine for 10 lakh rupees 3 years ago. You reduce it every year. If you write it at 10 lakh even after third year, balance sheet value will be wrong. Next thing, you use that specific machine to produce units and then sell during the year. If you would not have had that machine, you would have bought it on rent, would have paid rent. That rent would have become expenditure in P&L account. Because you own the asset, if you don't write any expenditure in P&L account, it is like asset is used, you generated the product and you sold it, entire sale consideration will become profit, no expense against it. So, matching concept. Whenever there is sale income on the credit side, proportionate expense to manufacture that product should be written in P&L account or manufacturing account debit side. That's where we write depreciation. So systematic allocation has to be done over the useful life. If not, our profit will be wrong, our balance sheet position also will be wrong. Correct information, correct income statement and true position statement is our objective, because of which we provide for depreciation. Now, there are certain important terms that we should know when it comes to depreciation. What are the important terms that we should know when it comes to depreciation? Yeah, number one, on what is depreciation charge? It is charged on fixed assets. Now we don't call it fixed assets anymore. We'll call it PPE, property, plant and equipment. What exactly do we mean by PPE? PPE refers to an item which is tangible and which can be used for a period longer than 2 months, which has a substantial usefulness. Have a look. PPE refers to tangible items held for the purpose of manufacturing, for the purpose of consumption in the process of manufacturing, for renting purpose or administrative purpose. It should be used for any of this. So if you use it for use in production, like a machine is used in production of another units, or it is used in rendering services, like a computer, printer, we use it to give services to other people. That is PPE. It is used as a part of rental purpose, building which is given on rent, or it is used in the administrative purpose. These items, if it has substantial useful life, meaning for a period longer than 12 months, then it would be called as property, plant, and equipment. Such property, plant, and equipment items will be depreciated. To compute depreciation, like I was trying to mention, we would have to know three important factors. Number one, cost of the asset. Number two, estimated useful life. Number three, residual value. Cost means what is the value of the asset. This will include the price that we pay to purchase the asset after deducting the trade discount, if any. Should we include GST? Again, depends. If there is no input tax credit available, we should include it. If the input tax credit is available, we will not include it. And any expenditure incurred till the time the asset is ready to be put to use. Remember this word. Any expenditure incurred till the time the asset is ready to be put to use should be included in the cost of the asset. The question had come in not last attempt, I guess. Last to last attempt or last attempt. Mention directly attributable expenses for a PPE or something. Last attempt. That was the question. Many of them couldn't understand what was in there in the question. It was very simple. When we discussed, we would have discussed in the class. No, when you purchase the asset, after you purchase, you need to do packing, you need to do loading, you need to carriage, you need to do freight, you need to do transportation, you need to bring it to the state where the business is there. There you do unloading, unpacking, installation, trial run, engineering cost, erection charges. All of these charges together is nothing but expenses which are included in the cost of the asset. All of these are to be included. Everyone, very good. So that is the cost of the asset. Let us see. Cost of the asset will include three things. Number one, purchase price. Number two, directly attributable cost. Number three, estimated cost of dismantling. Purchase price will include what is the amount that you pay to purchase the asset. Then after trade discount, GST sometimes yes, sometimes no, and all expenses. And directly attributable expenses, you remember cartage, coolie, packing, unpacking, pre-engineering cost, engineering cost, installation charges, erection charges. All this list you can write. Dismantling cost is at the end of the useful life, you need to remove that asset and then throw. To remove that asset and then throw whatever cost you might incur, that is also part of the cost of the asset. ಹೇಳೋದಿಲ್ಲ. Okay, ಇರ್ಲಿ ಬಿಡಿ, ಪರವಾಗಿಲ್ಲ. Next, we have something called as estimated useful life. Estimated useful life is period for which the set can be used for the purpose it was intended. What is it? Period for which asset can be used for the purpose it was intended. That's what we call as estimated useful life. It's an accounting estimate. We can't really tell, no, looking at the item, how long will it last. Now looking at this projector, how many years will this projector last? You will say, there are 10 hours. If you use another 3 years, will it work exactly 3 years? No, it might work 4. It might stop working at 2. It might work 10 years also. We don't know. So everything is an estimate. There is nothing called accurate. Because we can't value it using any other measure, we go for estimation. You agree with me? Yeah. And then residual value is the value of the asset at the end of useful life. After the entire useful life is over, if we dispose the asset, how much money do we get? How much money do we? How much money we might get is nothing but our residual value at the end of useful life. That again is an accounting estimate. Did you guys get that? Now let's see methods of depreciation. There are several methods. Let's start with the first one, straight line method. And then we'll be discussing WDV method, then production units method, then machine hour rate method, then depletion method, production units, and then depletion method, sum of your digits method. So these are the methods that we have in our syllabus in CA Foundation. Previously, there were some methods called as provision for depreciation, still there. Depletion method over. Sum of your digits method over. We had annuity method was there, sinking fund method was there, insurance policy and all were there, but all of these are not there in syllabus. Let's start with straight line method. Under straight line method, amount of depreciation will be same from every year, 1 year to another year. It's not going to change because the useful life of the year is prefixed and we expect the usage of the asset to be same throughout the useful life. If first year depreciation is 10,000, second year depreciation is also 10,000. This is because we expect the usage of the asset to be same throughout its useful life. This is also called as fixed installment method or original cost method. The usage pattern is like this. Over 3-4 years of useful life, depreciation amount is also a flat line because usage is also expected to be same. Under this method, we compute depreciation as original cost minus scrap value divided by useful life. It's like this. Original cost is 1 lakh, let's say example. And expected scrap value is 10,000. Meaning you purchase the asset for 1 lakh. At the end of useful life, when you sell, you get 10,000. So your expense is only 90. You paid 1 lakh and got the asset. When you sell the asset, you get 10,000 back. So what is your expense? 90. Let us say useful life is 3 years. How many years is useful life? So that 90,000 should be allocated over 3 years. That 90,000 should be allocated over 30,000. That's what we do as formula. Cost minus scrap value divided by. You don't have to remember the formula, remember the logic. What we pay minus what we get at the end is what is the total expense. That has to be allocated equally over the entire useful life. So divided by number of years. Got that. Next we have WDV method. Under return down value method, we expect the usefulness of the asset to decrease from year to year. The productivity of the asset to decrease from year to year. So because of this, our depreciation amount also will go on decreasing from 1 year to another year. First year depreciation is more. Second year is slightly lesser than first year. Third year is even lesser than second year, and fourth year is even lesser than third year. Are you getting it? So that's how depreciation amount will be. Depreciation year 1 is greater than that of year 2. For year 2, depreciation is greater than that of year 3. Under this method, depreciation is computed using the formula 1 minus nth root of residual value divided by cost of the asset. That's how we compute depreciation percentage. But you can relax. This formula will not be questioned in the exam to you people. They will give you depreciation rate and you use the depreciation rate. If you would not have seen this formula till now, don't be surprised. Just for knowledge purpose, I'm giving it to you. They would not ask you to compute depreciation percentage in the exam. They will tell 10%. You should know how to multiply 10% to find depreciation. Okay, now. Yeah. How do you find depreciation? It is book value of the asset multiplied by depreciation percentage. It is book value of the asset multiplied by depreciation. Listen. Under straight line method, we apply depreciation percentage on original cost. Where do we apply depreciation percentage? However, under this method, we apply depreciation percentage on book value, that is amount after charging depreciation. Let me tell you the example. Let us say depreciation rate is 10% SLM. Original cost is 1 lakh. First year depreciation is 1 lakh into 10%, 10,000. Second year depreciation, again, it is not 90,000 into 10%. It is 1 lakh original cost to 10%, 10,000. Year 3 depreciation is also original cost of 1 lakh into 10%, 10,000 in year 3. Same applies. If it is written down value, in year 1, we do 1 lakh into 10%, 10,000 depreciation. When we deduct 10,000 from 1 lakh, we'll be left with 90,000. In year 2, depreciation is 10% of 90,000, not 10% of 1 lakh. When we do 90,000 into 10%, we get 9,000. We deduct 9,000 from 90. We get 81,000. In year 3, depreciation of 10% is not on 1 lakh, not on 90, but it is on 81,000, which comes to 8,100. Got this? Yes. So what we need to remember is under WDV method, depreciation will go on decreasing from year to year. Though the depreciation amount is decreasing from year to year, overall charge to P&L account will be constant. How? Very simple. If depreciation is decreasing from year to year, in the initial years, the depreciation is high. In the initial years, repair expenditure is zero. As the time progresses, depreciation will come on decreasing, repair expenditure will go on increasing. So on the whole, total expense debited to P&L account against a machine will be constant under WDV method. Understood? First year में zero repairs, high depreciation. Second year, some repairs, less depreciation. And at one point they both will match. After that, what will happen? Repairs will become more, depreciation will become less. At one point, depreciation will become zero, entire value of the asset will be repair expenditure. That's when you scrap the asset. Very good. Next, we have something called production units. See, under straight line method and diminishing balance method, we are measuring the useful life of the asset in terms of years. But that might not be correct measure. Now, if you say a specific asset, how long will it last? You might say it will last for 3 years. It might not last for 3 years. It depends upon how you use it. If you have a machine, if you use it very intensively, if you run that machine 24 hours a day to produce huge number of units, it will depreciate faster. If you use it only for 2 hours every day, it will run longer. Are you getting what I'm trying to do? So useful life of the asset is dependent upon number of units that is produced out of that machine in a production intensive unit. When you buy one printer, they say no, this is good for 5 lakh copies. 5 lakh printouts you can take from that. If you take 5 lakh printouts in 1 month, at the end of 1 month only printer Govinda. If you take only 10 prints every month, that printer might last for 3 years. So useful life is dependent upon the usage and pattern. It is not dependent upon time. Are you agreeing with me? So we follow production units method. Here, the useful life of the asset will be measured in terms of units produced. See, if the production is increasing, depreciation will increase. If the production is decreasing, depreciation will decrease. This is production units. Depreciation will follow the same pattern. Production increased, depreciation increased. Production decreased, depreciation decreased. Production picks up, depreciation picks up. Production stabilizes, depreciation stabilizes. It depends. It's straight away directly connected to that. Next, we have something called as machine hour rate. Machine hour rate is also exactly same. Production units method is for production intensive entities, manufacturing entities, and machine hour rate method is for other entities. And in both the cases, what we do is we allocate the depreciable amount over the number of units produced during the method. Sorry, formula is very simple. Original cost minus scrap value divided by entire life of the units, entire life of the asset in terms of units multiplied by number of units produced during the year. Have a look. We do it like this. We take cost minus residual value. We multiply it by number of units produced during the year divided by total useful life in units. For example, cost of the asset 1 lakh 20,000 scrap value. So you invested 1 lakh 20, you get back 20. So can I say the depreciable amount is 1 lakh? And using this, you can produce 50,000 units. In the current year, if you produce 10,000, 10,000 units are produced out of 50,000. So 10,000 by 50,000. 20% of the asset is used. So 20% of that 1 lakh 20,000 is depreciation. Somewhat like that. I would now go to machine hour rate. Machine hour rate is same to same. Their units, here hours. Because not every asset will be used to produce units. Some assets will be used in hourly basis. So number of hours like a refrigerator or laptop or all of these things can be measured in terms of hours for which it is used. Television also. So higher usage, higher depreciation. Lower usage, lower depreciation. Formula is cost minus residual value multiplied by number of machine hours run during the year divided by useful life in hours. Okay, na? Next, we will quickly go down to discuss the depletion method. Depletion method is same as production units. However, it is used against natural assets. Is it called? Or we call them as natural resources or also called as wasting assets. For example, iron ore, coal deposit, gold mine, bauxite deposits, manganese deposits. Recently, zinc deposits were found in Rajasthan. You saw that news, no? So, manganese, zinc, zinc, zinc. They told you can now manufacture batteries. We don't have to be dependent on China. Big push to EV industry. Lithium deposits. Okay, Rajasthan में they had found lithium reserves or something. ಅಲ್ಲೇ very. ಪಕ್ಕದಲ್ಲಿ ಹಂಗೆ straight out left ತಗೊಂಡು. Okay. Now depletion method. That's what I was telling. Extraction. It is dependent upon. Only point of difference is usually machinery and then land, plant and all we buy. Whereas if it comes to these deposits, coal deposit, iron ore, you can't buy. You will take it on lease. Correct, alva? Notidivi sir. Narachi limestone taken on lease for 99 years. No. 99 years. Only 99. No, mostly longer. KGF. Leave it. Okay. KGF, it takes only for 99 years. No, longer. Okay, I see. Natural resources will not be what? It will be taken on lease. Valuation of reserves is based on actuary, but the computation is same thing. Instead of doing cost of the asset, we do what do you say? Lease amount multiplied by extraction that is made during the year divided by total expected extraction as per actuarial valuation. If you do that, you will get depletion method. Then comes the last one. Under CPT scheme, this was examiner's favorite. Repetitively, they used to ask question on this one. This is called as sum of year digits method. What is it called? Under this, how we do depreciation is, if we are trying to find the sum of numbers, wait. If the formula will be cost minus residual value multiplied by remaining useful life at the beginning divided by sum of year digits. The question is, how do we find sum of year digits? It is very simple. If I have to find sum up to 100 numbers, we do 1 plus 2 plus 3 plus 4 plus 5 plus 6 plus 7 plus 99 plus 100 is equal to n. If I write the same thing full top, it will be 100 plus 99 plus 98 plus 97 plus 2 plus 1 is equal to n. We have two equations. You will take the total. It will become 100 plus 1, 101, 98 plus 98 plus 2, 101, 98 plus 3, 101, 97 plus 4, 101, 2 plus 99, 101, 1 plus 100, 101, 100 times you will write is equal to 2n. How many times have we written 101 here? 100 times. 101 into 100 is equal to 2n. Then I'll write n is equal to 101 into 100 times divided by 2. That is nothing but our formula n plus 1 into n divided by 2. 101 is 100 plus 1. To find sum of 100 numbers, we should do 100 plus 1 into 100 divided by 2. Can you see now? So that's how we find the total of numbers. And in the formula of sum of year digits also, we find sum of year digits like this. So to find sum of year digits, we should do cost minus residual value multiplied by remaining useful life at the beginning of the year divided by sum of year digits. Okay, da? ಏನು ಸರ್ ನೀವು ಹೇಳ್ತಾ ಇದ್ದೀರಾ ನಿಮ್ ಖುಷಿ. We need to do questions on this. Yeah. Then change in the method of depreciation, change in the method of change in the useful life, change in scrap value. How to deal all of it? Whenever there is change in method of depreciation, remember, method of depreciation is not accounting policy. It is accounting estimate. Whenever there is change in accounting estimate, we should give prospective effect. Meaning from now we should change. We can't go back to the past and then change it. Till now you are following SLM. Now onwards you follow WDV. You followed SLM till now, no? That closing value is there. On that value, you start charging depreciation under WDV for the rest of the pay. Or you are following WDV method till now. From now you following SLM. You know what do we do? Till now you follow WDV. That value is there. Remaining value will be equally charged to P&L account in the remaining 2 years or 3 years or whatever remaining useful life. Understood? That's what we're going to do. Change in accounting estimate to be given prospective effect. Retrospective effect means we should go back in time and from day one, from year one, we would have to start changing it. That's not what we're going to do. Okay. Next up, what if, see, this is how it is. An organization has machinery of rupees 1 lakh. Useful life is 5 years. No scrap value. First 2 years they followed SLM. Then they changed to WDV. Original cost 1 lakh. Scrap value 0. Useful life 5 years. 1 lakh minus 0 divided by 5. How much is depreciation? 20. First 2 years you did 20. 1 lakh minus 20. 80 minus 20, 60. You have 60,000 after charging 2 years depreciation under SLM. Third year, what did we do? They followed SLM for 2 years and then changed to WDV. Third year, on the 60,000, we'll apply 25% WDV depreciation. Sorry, 20%. ಇಲ್ಲಿ question ಅಲ್ಲಿ 25 ಇದೆ, answer ಅಲ್ಲಿ 20 ಇದೆ. Sorry, we'll correct it. So we'll charge that 20% or 25% WDV method and then take that as depreciation. Next year you will write 48 and then charge 20. Are you getting it? That's how we do it when there is change in the method of depreciation. What if there is change in expected useful life? You expected useful life of an asset to be 10 years. How many years? Or let's say 5 years. ಇಷ್ಟೊತ್ತು ಹಿಂಗೆ ಕುತ್ಕೊಂಡು ಜಡ್ಜ್ ಮಾಡ್ತಾ ಇದ್ದ. ಈಸ್ ಇಂಟರ್ ಸ್ಟೂಡೆಂಟ್. ವೈ ಆರ್ ಯು ಸಿಟ್ಟಿಂಗ್ ಯು? You didn't let him go. Huh? He only didn't want to go. Oh, his class is at 3 o'clock. ಸೋಮವಾರ ಸಿಗ್ತಾನೆ ನೋಡ್ಕೊಳ್ತೀನಿ. What's his name? ಹರ್ಷ. ಎಲ್ಲಿಗೆ ಹೋಗೋದು? ಸೋಮವಾರ ನಂದೇ ಕ್ಲಾಸ್. Monday my class. Huh? This batch I have not taken only. Your batch only ended so late. No? Then I was taking class in Sheshadepuram for inter. Their major part is over. And usually how it happens is now foundation new batch has started. Started when April 20th. Today is May. Hey, no, not April 20th. It started 14th of April. I have not taken one class also foundation till now. 1 month Allah, June 14th, June 15th or 20th tak I am not taking any class for foundation. Their law will be over. Economics will be 80% over. Or economics might be over. Economics and law will be over. Accounts not even one. What is accounts also will not be over. Then straight away one stretch 15 class, another stretch 18 class. 18 days straight. Full torture avadadu. People are thinking. Hange aaytala. Okay. Some people I can see transformation. Some people were so fun loving in class, they become so serious now. Full serious out of it. ಏ ನೆನ್ನೆ ಅವನಿಗೆ ನಿಂಗ್ ಬೇಜಾರ್ ಮಾಡ್ಕೊಂಬೇಡ ಅಂತ ಹೇಳ್ತೆ. ಬೇಜಾರಾಯ್ತಾ ನೀವು? ಇವರೆಲ್ಲ ಸೇರಿ ಬೇಜಾರ್ ಮಾಡಿಸ್ತಾರೆ ನಿನಗೆ. Okay. I was telling, assume that there is an asset of rupees 1 lakh. What is the value of the asset? Useful life 5 years. Useful life scrap value 0. How much is depreciation? 1 lakh minus 0 divided by 5. 20,000 per year. You charge a depreciation for first year 20. What is the remaining value? 80. SLM. 1 lakh minus 0 divided by 5 ಮಾಡೋದು SLM ಅಲ್ಲಿ ಮಾತ್ರ. First opening cost of the asset 1 lakh. Scrap value 0. Then useful life 5 years. Depreciation 20,000. First year if you charge 20,000, what will be the remaining value? 80. Second year again 20,000 depreciation. Remaining value. That 60 should be returned 20, 20, 20 for 3 years. 2 years is over. What is the remaining useful life? Suddenly you revalue the asset, you understand the remaining useful life is not 3 years, it is only 2 years. So what should you do? Should we go to year 1 and then change from there? 60,000 is there. You would have returned to 3 years 20, 20, 20. Now we'll rate it to 2 years 30, 30. Last year 20,000 we are supposed to write. That becomes 0. That 20 is shared between year 3 and year 4, 10, 10. Understood? That's what you're going to do. Have a look at this. Expected useful life. 1 lakh is the value of the asset. Useful life 5 years. Oh my God, sir, same example. ಅದು ನಾನೇ ಹಾಕಿದಲ್ವಾ? 1 lakh. 1 lakh by 5. 20,000. 80,000. 80,000. 20,000. 60,000. Remaining useful life is 3, 4, 5. No. But now they're telling what? Okay, fine. 3, 60, 40, 40, 20, 20, 20, 20, 0. This is how it should be. Then they tell something. No, at the end of year 2, remaining useful life was estimated to be only 2 years. So 3 years, 2 years, it should be 3, it will become only 2. So then what do we do? This 20,000 depreciation, this 5th year is there, no? It should become 0. If that has to become 0, then this 20 has to be apportioned to year 4 and year 3. How? 10, 10 ಮಾಡೋಣ. So 30, 30 ಆಗುತ್ತೆ. ಇಲ್ಲಿ 60 minus 30, 30. ಇಲ್ಲಿ 30 ಬರುತ್ತೆ. 30 minus 30, 0. Have a look. ಒಮ್ಮೆ ನೋಡಿ. For the rest of the topics also, I'll put one small concept capsule like this right below the concept within the presentation, so that it will become easier to understand the concept. We might not have to take a bigger question to understand a smaller concept. I'll give you a second, I'll give you a minute, have a look at this, tell me if you understood, then I'll take you forward. Yes, sir. Very good. If it has increased after year 2, remaining useful life should be 3, they're telling it is 2. What if it becomes 4? Then 60,000 divided by 4. Every year 15,000, 15,000 depreciation. whatever is the opening book value, you would divide it by the remaining useful life. It can be less, it can be more. Understood? Or will you say nothing, sir? Very good. Come on, let's go forward. Yeah. So now we've understood this part. Now, we've discussed this during concepts and convention. Can the value of an asset be revalued? If you find the value of the asset that is there is wrong, you can revalue the asset. Revaluation can be upward or revaluation can be downward. If the revaluation is upward, value of the asset is increasing, asset will be debited by crediting revaluation reserve. If the asset is decreased, downward revaluation, we credit the asset account by debiting P&L. Have a look at this. Increase in the value, we write asset to revaluation reserve. Decrease, we write P&L to asset. When we create revaluation reserve, such revaluation reserve will become profit, and that has to be transferred to P&L account over the remaining useful life of the asset. Let's say the value of the asset is 1 lakh. How much is the value of the asset? 1 lakh has to be depreciated, let's say over 5 years. How much will be each year depreciation? 2020. If you revalue the asset from 1 lakh to 1 lakh 20, depreciation will be 1 lakh 20,000 by 5,000. 54,000. 54,000. If the asset is 1 lakh, how much will be depreciation for 5 years? If the asset becomes 1 lakh 20, depreciation will become 54. Expense will increase, no? That 20,000 revaluation reserve will be transferred to P&L account credit side over the 5 years. So 4444 credit per annum. 24, 24, 24 depreciation will come. Net difference will be 20,000 rupees depreciation expense. Should I repeat? Should I repeat? 1 lakh is the value of the asset. Useful life is 5 years. Depreciation will be 20, 20, 20, 20 every year. If you revalue the asset and take the asset value up from 1 lakh to 1 lakh 20, depreciation will be 1 lakh 20 by 5, which is 24, 24, 24, 20. If you write 24, 24,000 as depreciation, 4,000 depreciation has increased, no? This will be compensated by transfer of this revaluation reserve of 20,000 to P&L account credit side. 20,000 over 5 years is 4444. P&L only without revaluation. Debit would be 20, 20, 20, 20. After revaluation, debit 24, credit 4. Debit 24, credit 4. Debit 24, credit 4. Net impact is same on profit. But balance sheet mein asset will be looking at a better value. Correct value, more accurate value. That's how we do it under upward revaluation. However, if it is downward revaluation, what do? We transfer it to P&L account in the same year. Conservative. Expected expense. Immediately we should record. Understood this? Any doubts, guys? Nope. Okay. Why this was done with revaluation? Example for you all to see. An organization bought a machinery for 1 lakh. Useful life is 5 years. Scrap value is 0. How will it be how will it be depreciated? 1 lakh minus 0 divided by 5. 20, 20, 20, 20, 20. Correct. Now, at the end of year 2, it was revalued upwards by 15. First year 1 lakh, depreciation 20, closing book value 80. Second year 80, depreciation 20, closing book value 60. On this 60, like here they mentioned, it will be revalued upwards by how much? I'll add 15,000 to 60, make it 75. Depreciation will be 75 divided by 3. 75,000 has to be depreciated over remaining 3 years. So it will become 25, 50. 50, 25, 25, 25, 25, 0. I'll give you a minute. Please have a look. We have not spent 1 hour on this chapter. We've spent 30 minutes. Already everyone is... I don't have to kill all of them. Start teaching them after lunch break and everyone will be doing. Sleepy? Is it because of the chapter? No, you had curd rice. Depreciation is boring. Okay, whatever, guys, whatever. Aita. So many people are missing. Tanai Eloda. Tanai went. And where is... didn't come only today, no? One guy used to sit here. Last dude. Yesterday that group came to talk. Entire group is missing. PS group. Where is PS group? Where is that one guy used to sit? Yeah, no? Major missing. ಎಲ್ಲಿ ಹೋದ್ರು? Where did Sahana go? You only sent her, go home. The problem was I shouldn't have done company accounts, sir. Okay, chalo. So why this we are done with this part? There are two more topics that is there in our provision chapter, sorry, depreciation chapter. One is accounting for provision or depreciation. Second one is disposal accounting. Listen to me. Let us just quickly see the weightage of this chapter and the kind of questions that has come. See, depreciation. May 18 May there was no question. I'll show company. Okay, first company accounts. Yeah. So I have not put the question number. I am sorry. 4A 10 marks question was asked for issue of shares, and usually it comes for 15 marks, 17 marks. Weightage is high in this chapter. And from this chapter, usually the question comes based on journal entries. You might have to write journal entries for calls in arrears, forfeiture, reissue, calls in advance, calls in arrears, and interest, debenture part. Debenture, CRC ಅಷ್ಟು. Oh, debenture we didn't discuss. Oh, we discussed. Yeah. Yes. Balance sheet might be asked, but you don't have to do proper notes to account schedules and all. No, not required. Only balance sheet with share capital, resource and surplus, security premium, bank. Only three items, sir. Share capital, resource and surplus, cash. Nothing else. Assets and all will not be required. Very rare, but can be asked. Can be. Yeah, very rare, but can be asked. Shh. Don't skip company accounts. Don't skip company. Okay. So debentures have been asked only twice. If you want, I can show you detailed. Detailed is there elsewhere. You want to see this in detail? ಮಾತಾಡ್ಬೇಡಿ ಪ್ಲೀಸ್. ಇಲ್ಲೂ ಅಷ್ಟೇ ಇದೆ ಇದರಲ್ಲಿ ಹಸಿ June 2022 there was one 2-marker true or false question, and other than that once November 20 they asked one 5 marks question on debenture. Otherwise than that usually debentures has been not asked. Usually question comes on issue, forfeiture with reissue, 17 marks, 19 marks, 17 marks, 12 marks, 15 marks. I will tell, oh silence please. I'll tell you how is it 15 marks, 17 marks. Usually there will be one 15 marks question, one true or false question, or one 12 marks question, one 5 marks theory question, or one journal entry question along with one other question. So there might be two questions also a lot of times. Usually there is two questions, not just one sub question, two sub questions. Get it? Yeah. Let us see depreciation. Helipa. We were seeing depreciation. Depreciation, we have done analysis question wise also. In 2018, they had asked only theory question for 4 marks. May 19, they asked change in methods of depreciation. We did one, no, SLM to WDV, WD, something like that. And in December 20, they had asked theory again. November 19, May, depreciation under WDV method, they had asked you to prepare ledger account for the asset. Straight line method in January 21, WDV again in July 21. December 21, May, I don't know what question is it. I should see it and then write. January 2022, they'd asked WDV method. And in the most recent attempt, they'd asked WDV, no? WDV method, one asset purchased, one asset sold. So that was easy one. 5 marks. 4 marks. Less. Theory was also there. That expenses, directly attributable expenses part. So not bad. 5 marks. And usually question, see, I'll tell you. ಬರೀ ಮಾತಾಡ್ತಾನೆ ಇದ್ದೀರಪ್ಪ ನನಗೆ ಏನು I should be so concerned about the class that I am not able to concentrate on the subject, guys. I am concerned about keeping you people quiet. Throughout, if you see depreciation chapter, they have never asked provision, they have never asked disposal. If you have learned with provision and disposal in class, read it before you go to exam. Be prepared. If you have never read, how many of you have not read provision concept and disposal concept at all? I only thought. How many of you not read? I have not read, sir. Never read. Don't try to read now. Ignore that part. But those of you who read, please read. You never read. Skip on. Not ಮಾಡಿಲ್ಲ. Class absent. Class attend agidra. Okay. Who else? Who else? How many of you are skipping depreciation chapter? Depreciation chapter only you are skipping. Oh, 40 days in prior they've decided to skip. Yeah, I'm skipping. Her friend was surprised. Skip what again? Yes. Okay. So don't skip, guys. Easy, easy question ಬರುತ್ತದೆ. I will show. Hey, ಚಿಕ್ಕಪ್ಪ ಮಾತಾಡ್ತಾ ಇದ್ದೀರಾ? Please don't talk. Silence. Hey, don't talk, guys. ಹಾ ಸರ್ ತೋರಿಸ್ತೀನಪ್ಪ ಅದನ್ನೇ ತೋರ್ಸಕ್ಕೆ ಅದನ್ನೇ ಓಪನ್ ಮಾಡ್ತಾ ಇದ್ದೆ. I will show. Have a look. Silence. This is our RTP and MTP question. You've done this question in the class only, if you remember. LG Transport purchased 10 trucks. The same, it was the same question. It was asked in RTP, not in exam. Let's show you exam question. This is also RTP. This is exam question. Plant and machinery costing 10 lakh is depreciated. I told you no that change in useful life. Same question. 10 years, 0 useful life, 40,000, 8 years. 10 lakh is the value of the asset, 10 years is useful life. How much is yearly depreciation? 1 lakh. At the end of 4th year, meaning 4 years depreciation over, 4 lakh depreciation over. What is the balance? 6 lakh. They're telling it is revalued upward by 40. Value will become 6 lakh 40. It is to be reassessed as 8. 6 lakh 40 divided by 8 years. That is depreciation. Got it? That's it. How many marks is this? 4 marks, huh? This is November 2018. November 2018. 4 marks. November 2018. 4 marks. Not that. Change in method. I think this is the one. This is change in method. Theory ಬೇರೆ ಕಡೆ ಬಂದಿತ್ತು ಅನ್ಸುತ್ತೆ. November 18, no? Shh. These guys don't talk. Then May 19 question ನೋಡೋಣ. This is May 19 question. Have a look. A firm purchased an old machinery for rupees 37,000 on 1st January 2015 and spent 3,000 on overhauling. So the cost of the machine will become 40. On 1st July 2016, another machine was purchased for 10,000 and machinery purchased on 1st January was sold. That first machine is sold. Same day, one more machine is purchased. Third machine, 1st July 2018, machinery which was purchased on 1st July 2016 was sold. Second machine is also sold. Depreciation is charged at 10% SLM. Firm changed it to WDV. Same thing, but we need to do ledger account also here. We need to do. You want me to solve? It is simple. First year depreciation on the first asset, then one more asset, one more depreciation. Then first asset sold, third asset purchased, then second asset also sold. At the beginning of some other year they give. That you should remember. They've given balance as of a different year. You need to do ledger for a different year. To start from that year and then do depreciation. And that question is based on provision. Provision also needs to be created. That won't be asked. Provision question is being never asked to me. A balance you would have to compute depending upon what is it. I'll show you all the past exam questions. Have a look. This is 10 marks. Hey guys, the door is still open. I will not stop you. Whoever wants to talk, please leave. I don't want to make these statements. You force me to make these statements. I have some work to do. If you want to talk, please leave. Huh? I won't ask you why did you leave. Then we have question on November 19th, 1C, 4 marks. November 19th, November 19th. Okay. I think those small questions, November 19th, 4 marks, and maybe they've asked 2 marks questions, maybe. Theory, theory. And you want to see any of these questions? December, January 21 or July 21? Which one? July 21 WDV method. Let's see. July 21 WDV method. July 21 ಅಲ್ಲ July 21. Question number ಇತ್ತಲ್ಲಿ ಇಲ್ಲಲ್ಲ. Question number was July 21 1C. Oh. Have a look. Oh, this was asked. This was the one that you're telling. Have a look. The balance of machinery account of a firm as on 1st of April 2020 is 28 lakh 54. Out of this, plant having a book value of 2 lakh 16 as on 1st of April 2020 was sold on 1st of July. So you should split the 28 lakh 54 into two parts. 2 lakh 16, one machine, balance another machine. Because the 2 lakh 16 worth of machine is sold after how many months? 2 months. 2 months, no? April, May, June. So 3 months you should provide depreciation and then we'll sell it. On the same date, a new plant was purchased, third plant for 4 lakh 58 and 22,000 was spent on erection. You add it, that will become 4 lakh 80 as the value of the third machine. New machine was purchased for 5 lakh 60. One more machine is purchased. Wow. Depreciation is 15%. WDV method. Very easy. You should calculate depreciation for year ended 31st March. No ledger asked. For 31st of March 2021, we should compute depreciation. 28 lakh 54 is there. That will be divided into two parts. 2 lakh 16 and balance. For 2 lakh 16, only 3 months depreciation. For balance, entire year depreciation. Entire year depreciation. For 4 lakh 58, which is purchased on the same date, 9 months depreciation. And for 5 lakh 60, purchased on November, December, January, February, March. 5 months depreciation. Add all these depreciations together, you will arrive at the amount of depreciation to be charged totally for the 4 marks. Easy. Any other question that you would want me to cover in this? You want me to show this WDV question 10 marks? June 2022. June 2022. This only. A machinery account of a factory showed a balance of 95 lakh. Books of the factory are closed on 31st of March. Depreciation 10%. One new machine is acquired. It is installed. One part of the machine. No. One machine which was there on 1st of September. Okay, is sold. Another machine which had a cost of 21 lakh 85 is purchased. Oh, this we have same question in our HS material as well as ICS state material. One part is sold, one part is scrapped. And have they asked ledger? Yes, they would want you to prepare machinery account and also compute depreciation for that year. Only 1 year's ledger they've asked. You should do that working note. What is the part of the asset sold? What is the part of the asset scrapped? What is the part of the asset retained? This you have no 95 lakhs. This 95 lakh worth of asset will be divided into three categories. Part sold, part retained, part scrapped. And once the part sold and part scrapped are removed, one more new asset is purchased during the year. For everything, we'll compute depreciation for 1 year and then close it. Is it very difficult? Do you want me to solve any of this? Can we go to a different chapter now? Depreciation, yes? Okay. So let us. We write entire amount. There is no cash. There is nothing received. In the case of asset is scrap, you would not receive any consideration. Whatever is the value of the asset will be transferred to P&L. It will be lost. For an asset sold, we compare the selling price with the cost price, book value, and then identify profit or loss. Yes, please. Purchase date on. Depreciation should be provided from the date of installation, not from the date of purchase. Asset when the asset is ready to be used, from there we should start. There was one question, last attempt, not this one, last attempt where asset was purchased this year, installed next year. Depreciation will start from next year, not from this year. Very good. Next then, Madana. Final accounts and then bills of exchange. We'll do it in the order for the rest of the point. Silence. Orderly madam. We'll finish final accounts, then we'll do bills of exchange. Average unit account current, we'll keep it to the end. We'll do bills of exchange now. Sorry, final accounts, bills of exchange, NPO. Understood? And finally, we'll do average rate account. Correct? Order? Yes. Silence. Please don't talk. Break. Final accounts, there is a question every attempt without miss. Every attempt. Recently, the trend has increased more 15 marks, 15 marks, 20 marks. And other than the recent attempt, the attempt before that, 2 consecutive attempts, question was not just on trading P&L, but manufacturing, trading, P&L, and balance sheet. Lengthy one. That Mr. Black question was there. That question was asked. And previously also they asked 20 marks. So partnership, final accounts, don't skip. And fund this company accounts also. And the point with regard to our sole proprietor final accounts is you don't have to read anything very difficult the day before exam. It is logic, no common sense, double entry. You go on doing it. You don't have to practice too much the day before exam also. You go with the basic understanding and you'll be able to crack the problem. Even if there is a very difficult and unexpected adjustment in the question, even if you're not able to solve that adjustment, you will be at least able to do 90% of the answer. Trial balance items, we will be able to put it in the lecture. So there is no way you can lose any marks in this. And if you follow double entry system, the pakka problem will tally when you do final accounts. December 2022. December 20, most recent one. It was a different question. Not that was little tricky. Yeah, I think only balance sheet question, I guess. No, we did it in class. Similar to that. Okay, shall we go? December 2022, Allah. See, here only. Hey, I've done the analysis here only. I'll tell you which is that final accounts question. Final accounts here. Question number 7, balance sheet. Rectification and then balance sheet. It is question number 17 from Yashas Material. We have that answer in Yashas Material only. I'm sure. It was there in class. We've done it in class. Have we? Something like that. 17th one. Supper. P&L account rectification would have to do and then do balance sheet. 17 in Yashas Material. There I don't know the number. 7, huh? Maybe. You have Yashas Material with you? Soft copy? No. Hey, okay. Can we start with final accounts of sole proprietor? In the case of sole proprietorship, objective is to determine financial performance and financial position. To determine which we prepare manufacturing, trading, P&L appropriation and protection. When we do manufacturing account, we might have to do trading account also. Are you getting this? Because a manufacturer will also be a trader. It is not manufacturing or trading, it is manufacturing and trading account. So once you manufacture the goods, you have to sell it also. If you are a manufacturer, you prepare manufacturing account and trading account. If you are only a trader, you buy and sell. Then you won't prepare manufacturing account, you straight away prepare trading account. Got that? Then, so there are 3 variants of inventory. Raw material, work in progress, finished goods. In our manufacturing account, we write raw material, work in progress. Finished goods will be transferred from manufacturing account to trading account. In trading account, we'll write only finished goods. We will not write raw material, we will not write work in progress. Manufacturing account, opening will be work in progress. Opening stock on the debit side will be work in progress. Closing stock on the credit side will be work in progress. And throughout the period, what we do is we consume raw material. How much did we consume? Opening plus purchase minus closing. This is how we determine how much of raw material is consumed in production of finished goods. If you keep raw material and then cheap boomba, it will not become finished goods. You have to incur expenditure. Such manufacturing expenditure will be debited to manufacturing account. After this, what comes out is goods which are manufactured and transferred to trading. In this process, if there is any scrap and it is sold, it will come in credit side in manufacturing account because it is a decrease in the cost. So if you imagine manufacturing account, opening work in progress, closing work in progress. Consumption of raw material, manufacturing expenses, sale of scrap, finished goods transfer to trading account. What does it come in trading account then? In our trading and in manufacturing account, direct expenses, ma'am. Listen to this very carefully. Whenever there is depreciation on plant and machinery, it will go to manufacturing account and not P&L account. Are you getting it? Whenever they give question, there was one question, no, that manufacturing, trading, P&L and balance sheet. In that question, there was depreciation on plant and machinery. Majority of them wrote it to P&L account. Should have written the depreciation on plant and machinery to manufacturing. Be cautious. Wages, manufacturing wages, factory rent, factory lighting, heating, everything will go to manufacturing. Office rent, office lighting will come to P&L. Warehouse rent, warehouse lighting, heating and all will go to trading. Then we'll prepare trading account. Trading account, you know the format, don't you? It is determined, it is prepared to determine GP. In our trading account, we'll write opening stock of finished goods on the debit, purchase of finished goods on the debit. If it is manufacturing entity, you will not have purchase of finished goods. In the place of purchase, you will have manufacturing account. Goods are transferred from manufacturing to trading. We write that, below that we'll write GP. To find GP, we should write sales and closing stock. That's how it is. See here, opening stock, purchases less returns, manufacturing account. If goods are manufactured in-house, I'll write sales less returns and closing stock. That's how I'll arrive at GP. Sound ಜಾಸ್ತಿ ಆಯ್ತಾ? ವಿಂಡೋ ಕ್ಲೋಸ್ ಆಗಿದೆಯಲ್ಲ, ಕ್ಲೋಸ್ ದಟ್ ವಿಂಡೋನ. Answer. Okay, instead of writing here, you're saying instead of deducting this closing raw material here, you wrote it here. Then this will be wrong. You might still your cost of manufacturing goods will be same, but your consumption of raw material will be wrong. You might lose 1 mark for that. So be little cautious. That is the reason leave one line extra. See, even when I typed, I left one line here. I left one line here. One line. I don't have to. I can always insert line and then write. But I did it because firstly it will look nice also, and even if you're making changes, you can make it more easy. So remember to leave one line. What she's asking is, in consumption of raw material, we should do opening plus purchase minus closing. No. If I forget to write closing raw material and then write this item right here, can I write this closing raw material here? We don't have an option. We have to write, but we might lose 1 mark for the same. The reason being, our consumption of raw material will become wrong if we don't write. Okay, now say something. Very good. So trading account you understood. See, my throat is also very dry. I also would love a break, but unfortunate. Can't tell. I don't mind giving break, but it's already 3:30. We are winding up at 5 o'clock. I have 1.5 hours. So I am also pushing myself. Okay, fine, it's okay. Pull it off and then try to finish types. So show some energy. Yeah. So trading account you understood. No, you do that way. Next comes P&L account. Whatever is GP in trading account will be later transferred to P&L. P&L may we bring down the GP what is transferred, write all the indirect incomes on the credit, indirect expense on the debit to arrive at net profit, which should be transferred to appropriation. You don't have any questions on appropriation in CA Foundation in final account. You have it only in partnership. So net profit from P&L will straight away go to balance sheet capital addition always. So got that. But when you talk about expenses in P&L account, there are some important things that you need to be cautious about. First one, remember that expenses are to be written on accrual basis. That is, as and when the expense is incurred, you would have to write, not when it is paid. So these outstanding prepaid items would have to adjust. Lot of you might have the habit of adding, deducting and all. My personal recommendation is open ledger for expenses. If it is outstanding or prepaid, treat them as asset liability expense income. Don't write plus minus and then do it. Plus minus might give you instant answer, but you might not follow double entry. You might forget to put it to respective balance sheet. That's my only reason. That's the only reason why I'm asking you to prepare ledger. Remember it this way. For expenses, prepaid means paid before incurring the expense. Outstanding means expense is incurred but not paid. Outstanding means expense is incurred but not paid. Prepaid is expense is paid but benefit is not taken. Prepaid expense is asset. Outstanding expense is liability. Prepaid expense is outstanding expense is asset, opening balance debit side, closing balance credit side. Liability, opening balance credit side, closing balance debit side. Income opposite. For income, it is not outstanding and prepaid. It is pre-received and accrued. Pre-received means you have not given them the service or you have not given them the, say, provided the product, but you have taken the money. It is pre-received, received before earning. It is liability. Next one is accrual, meaning you have given the service, but you have not collected the money. That is accrued. That is asset. Accrued income, asset, opening balance, debit side, closing balance, credit side. Pre-received income, liability, opening balance, credit side, closing balance, credit side. You write whatever is received. You will identify what is currently account. You don't have to remember also. You just write them in the asset expense category, and then plus minus will automatically happen. The reason why I don't insist on doing plus minus in here as well as in NPO topic is whenever you do plus minus, you want all the data at one place. For example, you want opening balance, opening prepaid, opening outstanding, closing outstanding, amount paid, everything if I give, you will do plus minus and then arrive at answer. But in the question, opening prepaid will be given in the beginning of the question, closing prepaid will be given at the end. Pre-received will be given somewhere in between, and amount paid will be given in cash book. When they split the information to different places, to finish that working out, you need to glance through the entire question once. Again, for next expense, again you will glance through the entire question. So that will take too much time and you end up reading the question too many times. So instead, if you open ledger, you go on reading it. When you read it, you will write it. You will not go in search of it. When it comes, you write. If it doesn't come, you will keep that ledger open till the end of the problem. And at the end of the problem, you will close the ledger to arrive at the answer. This will reduce the probability of mistakes, help you comply with double entry, and ensure that your balance sheet will tally. That is the reason I ask you to open ledger in NPO as well as in final accounts. Okay, now any other problem? Very good. So that's one thing that you need to remember. And next thing that I want you all to know is that managerial remuneration. We discussed the same in partnership. Right? Manager, if he's there, he can be entitled to remuneration as a percentage of profit or fixed amount. If it is fixed amount, no problem. If it is percentage, such percentage can be on before charging basis or after charging basis. If it is on before charging basis, simple profit into x by 100. If it is on after charging basis, then we should do into x divided by 100 plus x. We should do 100 plus x in the denominator. The only that will give you correct amount of managerial remuneration. You done questions on this? Yes. After this, we need to be cautious about one last point. Provision and family. Sunday debtors. Your favorite. Balance sheet, we'll prepare it only in vertical format, sorry, horizontal format. Vertical format is only for company. And yeah, order of permanence is what we follow. Fixed assets on the top and then current items at the bottom. Let us quickly see that one part that is there. What is that? Debtors. Sundry debtors is asset. Bad debt is expense. Provision is liability. From debtors, first we should adjust bad debts. First we should adjust, then we should create provision. Now, if bad debt is appearing in trial balance, bad debt is appearing in, it is already deducted from debtors. It is already deducted from, we should only transfer to P&L. If bad debt is appearing in adjustment, it is not yet deducted from debtors. Should deduct from debtors and also transfer it to P&L. Let me repeat. If bad debts is appearing in trial balance, what does it mean? It's already deducted from debtors. We don't have to deduct it. Got this? We should only transfer it to P&L. If bad debts is appearing in adjustment, it is not yet deducted from debtors. We should do deduction from debtors as well as transfer to P&L. Provision. Already it will be there in trial balance. If it is already there in trial balance, what you do is you have debtors, you deduct bad debts, you get debtors after bad debts. On that you apply your provision percentage, arrive at the provision to be maintained. This should be the provision. You compare this with the provision already there. If already provision is not there, then beautiful. Debtors minus bad debts, whatever you get, you apply percentage. What you get is provision. Write it in P&L account, deduct it from debtors. Over. However, if there is existing provision, then what do we do? Let us say debtors is 1 lakh. How much is debtors? Provision is to be maintained at 2%. How much provision should be maintained? 1 lakh into 2%. 2000. So provision should be maintained at what amount? 2000 rupees. Let's say already there is provision of 500 rupees in trial balance. Meaning already provision is there to the extent of 500. That provision of 500 should be restated to 1500. So what should we do? Create additional provision of 1000. Create additional provision of, let us say, provision to be created is 1500. 1 lakh is there, 1.5% provision, or 1 lakh is there, 1% provision, 1000 rupees provision. In trial balance, provision is there for 1500. 500 rupees, there is excess provision, we need to write on. So, if there is no provision in trial balance, very simple. Whatever provision you compute, trading P&L account debit side and balance sheet asset side deduction. If in case there is existing provision that you computed, compare it with the provision that is there in trial balance. If the provision that you want to maintain is more, difference amount you should debit to P&L. And new provision will be deducted from debtors. If provision that you want to maintain is less, provision already there in trial balance is more, difference will be credited to P&L income, and this new provision will be deducted from debtors. Either ways, the new provision should be deducted from debtors. Difference between old and new provision, if it is created, expense; if it is written off, income. If you do this, your debtors part will also be over. Remember the last point on debtors family. Bad debts recovered will not affect bad debts, will not affect provision, will not affect debtors. Journal entry for bad debts recovered is cash account debit to bad debts recovered debit to P&L. This entry, cash account debit to bad debts recovered debit to, will it affect our debtors account? No. Will it affect our bad debts account? It will not affect anything. Remember. Okay. This adjustment will come in your rectification of errors also, no, sometimes. And rest of it is nothing else. If you are getting tensed at any point on bad debts, you please see this. Between 11th and 12th question, we've done 7 small cases on bad debts, various types of adjustments. You do that, you will get full-fledged confidence on the topic. And there is nothing much left in the chapter of final accounts of sole proprietorship to be discussed. Yeah, and this tougher question was one that was asked in the recent exam. Unique question, not something that people had expected, but it was still done in the class. It is not like exam question came and then we put that question in the class material and then we solved. No, that was there in the question, in the material. That is there in the ICA study material also. Very rarely a unique question comes in the exam. Otherwise, usually it will be there some or the other place in the material only. At least at foundation level. ಏನಾಯ್ತು ಗುರು ಏನ್ ಮಾಡ್ತಿದ್ದೆ ಲಾಸ್ಟ್ ಹೇಳಿಕ್ ಸತ್ಯ ಲಾಸ್ಟ್ ಬೇಜಾರಾಗ್ತಿದೆ ಪುಟ ಕಾನ್ಸಂಟ್ರೇಟ್ ಮಾಡ್ತಾ ಇದ್ದೀನಿ. He used to be the most fun loving guy. ಅವನಿಗೆ ಸೀರಿಯಸ್ ಆಗ್ಬಿಟ್ಟಿದೆ. ಸೊ ಈ CA ಕೋರ್ಸ್ ಅನ್ನೋದಿದೆಯಲ್ಲ ಎಷ್ಟು ಕೌಂಟರ್ ಆಗ್ತಾ ಇದ್ದ, ಹೆಂಗೆ ಜಂಪ್ ಮಾಡಿ ನಗ್ತಾ ಇದ್ದ, ಸೈಲೆಂಟ್ ಆಗಿ ಕೂತ್ಕೊಂಡ್ಬಿಟ್ಟಿದೆ. I am disappointed. Next, what do we do next? Bills of exchange. Bills of exchange and then NPO. ಉಳಿದಿರೋದು ಎರಡೇ ಅಲ್ವಾ? Bills of exchange, NPO, average rate account current. First NPO and then bills of exchange. I need a small break. Let's take 5 minutes break. It is 3:38, 3:40, 3:45 we'll meet. And when we meet, we'll do NPO and then bills of exchange. Aage madi. Come on, guys. Let's get started. We'll start with not-for-profit organization. Can someone just pull the door? Thank you. One of the most hated chapters of your syllabus. Usually for the length of the problems. But this is again a chapter which you don't have to revise the day before exam. If you get that concept of classification of items into asset, liability, expense, income, debit, credit logic, this chapter can be fit in just straight away in the examination. And this is nothing but final accounts. Only point here is that The questions that they give on this chapter, they test your basics of accounts to the core when it comes to expense, income, asset, and other things. Am I right? Let's quickly first see the weightage of the chapter and then start. Not for profit organization. Usually 10 marks. Very rarely 15 marks also has been asked where the question was little longer. Don't get into any templates. Don't get into any mucking up when it comes to NPO chapter. The reason is there are four financial statements what we prepare when it comes to not for profit organization. Number one is income and expenditure. Number two is receipts and payment, and two balance sheets, opening and closing. Opening balance sheet has to be prepared only and only when opening balance sheet is not given in the question, or capital opening balance is not given in the question. If they give it, we won't prepare. If they have not given the opening capital balance, then we'll prepare opening balance. Are you getting it? Receipts and payment is nothing but our cash account. Income and expenditure is nothing but our P&L account. And if the question gives us receipts and payment and opening balance sheet, they would expect us to prepare income and expenditure and balance sheet. If the question gives income and expenditure, they expect us to prepare receipts and payment and balance sheet. There is a very, very rare possibility of 20 marker question from this chapter where they would want us to prepare opening balance sheet, closing balance sheet, receipts and payment, and income and expenditure. We call this as master problem. One such master problem video is there on YouTube. You can watch it. I think I've put all varieties one question of NPO. Last batch में people had asked. One question where receipts and payment is required to be prepared. One question where income and expenditure is required to be prepared. One question where receipts and payment, income and expenditure, opening balance sheet, closing balance sheet with the PRS adjustment. That question is also there. You can watch it. There are four, I think 3 or 4 videos of NPO is there on YouTube. Detailed understanding step by step in a slow manner, not fast like this. I think about 40 minutes, only one problem. 30-40 minutes video, one problem video is there. So you can watch that. If I have to make you understand the overview of the chapter, what we are trying to do in this form of organization is not to make profit, not to sell goods. We're trying to promote a cause, fight against a social evil, or preserve a specific culture, form of art, music, dance, or anything of that sort. Fighting against illiteracy, fighting against what to say illiteracy about cricket. PCCI, not for profit organization. They promote cricket, teach people about cricket. Or there is exploitation against children. So to preserve that children, give them some learning and all, there is one kind of organization. Exploitation against animals, there is one kind of entity. So all these forms of organizations which run with a specific cause, promoting dance, a specific form of dance, 1 minute dance, specific form of music, specific form of drawing, some tribal art, or some culture. They create this not-for-profit organizations. They would not make profits. They would have income, which is more than their expenses. They create that shows, they sell the ticket. If the ticket's money is more than the expense incurred, it will become surplus. It will not become profit. In a trading organization, it is profit. Here we call it excess of income over expense is called as surplus. And if in case your income is less, expense is more, it is not called as loss. It is called as deficit. And here we don't call it capital. Usually we call capital. No? Here it is capital fund, because there is no one person who's interested here who takes. The money is received by way of donation or any other form, and it is we create a fund for it, and that fund will be used in the business. Usually in normal business entities, we follow accrual accounting. Here we follow accrual accounting along with fund. We call it fund based accounting. What do we call it? Fund based accounting. This is same as our normal business, but I'll tell you what is difference between fund based accounting and accrual. Usual business mein capital comes in, capital money is used to buy assets. Here, if you have to buy one asset, you raise one fund. Now you want to construct one library in a college. What do? You collect one library fund from the donors, from the students, from the teachers, from politicians, sorry, from people who are contributing. You collect money and call it what? Library fund. You collect money, balance sheet, cash will increase. Liability side, library fund will come. Library fund will be like that only in the balance sheet. This cash is spent, cash will decrease, library building will come. Are you getting this? So this library fund, what is there in the balance sheet, it is like capital. But usually in your business, you introduce capital. Here, this is not business. This is nobody's business. So everybody will contribute as capital. Are you getting it? One fine day, this library building will be depreciated, 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 it will become zero. But library fund will still be there in the balance sheet. Like building will fall, but in the front of that building, they would have put one board, no, contribution 10,000, so and so percent, 5,000, so that will be still there, but building will fall like that. Library might fall, but the contribution made by each of the person will still go. Again, you want to construct one more building, again you raise fund, again library fund will. So that's fund-based accounting. It is like capital, but usually in a business organization, interested party will contribute capital. Here, no one is interested. Sorry, everyone is interested, so everyone will contribute capital. Got it? Yes or no? That's how it works. All you would have to do here is instead of cash and bank account, you prepare receipt and payment account. Instead of P&L account, you prepare income and expenditure. Profit is called excess of income over expense. Loss is called excess of expense over income. Balance sheet is balance sheet. Capital becomes capital part. And we do this same fund-based accounting like I mentioned. And the logic of prepaid expense, outstanding expense, accrued income, pre-received income, what we learnt in the chapter of final accounts, same holds good here also. And what you would have to do is, you would have to prepare expense account like this. You people usually do know expense paid minus prepaid, add outstanding. Don't do that. If it is prepaid, opening prepaid is asset, debit side. Closing prepaid is asset closing balance, credit side. Opening outstanding liability, opening balance, credit side. Liability closing balance, closing outstanding, debit side. Once you write this, if the expense paid is given, meaning in the question receipts and payment is given, you are supposed to draft income and expenditure. You will write this expense paid. You will arrive at this as balance. If the question says receipts and payment is not given, they have given income for the year, sorry, expense for the year, you will find this as balance. Why I am pushing this ledger account to you people so much more is not because I can't do plus and minus, but plus and minus has become like formula that you people mug up. And the formula is not one. Formulas are 4, 5 of them. Why? If the amount paid is given, you add opening prepaid less closing outstanding, add opening outstanding less closing prepaid. What if the question may they've not given expense paid, but they've given expense for the year? Then ulta. You will deduct, I will add opening outstanding, deduct closing prepaid, less opening outstanding, deduct, deduct closing prepaid. Ulta. So isn't it like two different formats you learn for expenses? You learn again two different formats for income also. Isn't that confusing? Don't you find so? So I say ledger is more simpler. Can't you identify whether expense is prepaid or outstanding? They'll give in the question only. Can't you identify whether it is asset or liability? You write it, you will get that. That's my suggestion. Rest is upon you. Same you do for income account, and then you go on solving them. Should not be very difficult. Practice is what is required. I've already shared master problem videos on receipts and payment, income and expenditure. People have been asking for subscription account based ones. So what I will tell is not possible today, not possible tomorrow, not possible day after. Monday, Tuesday, by Wednesday, Thursday, you should see some two videos. One on basics of NPO before we start subscription. Second video on some 3-4 problems on subscription account in 1 hour, covering all the variety of problems. I'll upload one short video, about 1 hour video on NPO. If you are finding it difficult to do subscription account, you can watch that. If you are convenient and comfortable doing subscription account, continue doing it that way. Don't watch it. Is that fine? Free to watch video will be uploaded on SS Academy's YouTube channel. All right. So, okay, now one subscription account. And rest upon what's here is our usual logic. And the same thing. See, this is how I think few of you might have been doing. And this is how I've been asking you to do for expenses. And you might feel like this will take more time, ledger. It will take same time. It looks big because if you analyze and then right now there is so much of gap here. Illi gap ide. That is the reason it looks big. Actually not. And the only advantage is you don't have to have all the information at once. You can write it in little information. Whenever you get the information, you can write it. So that's the reason. Yeah. And this chapter was usually there in CA intermediate. In the last 4 years, it's come to CA foundation. People have been doing something great. and continue doing great. Next, incomplete records also will come from CA intermediate to foundation. That is even more interesting. You have NPO, you have single entry, that is sorry, not single entry, what is it? Final accounts. That is a single entry system. So intense it will be. Each problem 1 hour, 1.5 hour it will take. Each problem to do in the class. Once you become good at it, you will be able to do in 25 minutes. That chapter will come to foundation, and that will replace your average due date, account current, food sent on return or approval. Three small topics will go, one big chapter will come. Partnership right now it is nice. Then dissolution of partnership will come. Admission is like this, retirement is like this, death is like this, dissolution will be like this. You understand? It is not the dissolution that you do in second PUC. No way close. ಈ ಕಡೆ ಆಗಲ್ಲ. It is not ledger account only. There are two intensive things. One is piecemeal distribution. You do one big table. You used to do like, you will sell all the assets once and you pay all the liabilities. Usually angagal. You will sell one asset. You will pay little liabilities. You will sell one more asset. You will pay little liabilities. Which liability will you pay? All the liabilities, little you will pay. If you have four liabilities also little you pay from each realization. So that is what we call as piecemeal. That will come. And there's something called as Garner versus Murray. It's a case law what should be applied on the problems on dissolution. This will make your foundation journey very, very difficult. So you do it with biggest amount of push only because you don't want to write your foundation again. It's not going to see. There are some things what will make you study. There are some things which will make you not study. There are some things which will ensure that you have to study and you don't have any option. So feeling motivated to study is good. Being scared to run faster. It's like this. You are running a race. You run good. You are running when the dog is chasing you. You run faster than how you run in a running race. So all that I'm trying to do is I'm trying to loosen that dog and then leave behind. Because if you, it's okay, you feel like, okay, fine, I third place bandru parvagilla running race ali, bronze medal will come. Here, dogs with a race ali, if you stop, then the dogs will bite it. You get it? So run for your life. Don't run for food. Tom and Jerry, when they fight now, always Jerry will win, Tom will lose. The reason is Tom runs for food, Jerry runs for life. So if you run for life, the way you run will be much different than how you run for food. Don't see like CA pass ಆದರೆ ಒಳ್ಳೆ ಸಂಬಳ ಬರುತ್ತೆ. See like CA pass ಆಗಿಲ್ಲ ಅಂದ್ರೆ ಜೀವನಾನೇ ಇರೋದಿಲ್ಲ. Just imagine like this, okay, ಮದುವೆ ಸೆಟ್ ಆಗಿದೆ and your husband or wife has already passed the exam and you have to pass and you don't have an option. Work for me will work for you. Okay. My wife cleared the exam. He had not cleared. Talks are full intense. Now I have to clear. No option. Yeah, it was. That's so intense it was for me. Work for me. Just hoping that it will work for you. Shall we now discuss bills of exchange? Bills of exchange ಇನ್ಯಾವುದಿತ್ತು? Bills of exchange ಆದ್ಮೇಲೆ account current average due date. Okay. Silence. Hey, lot of things. Listen. Lot of things I told I'll share this, I will share this, I will share this, I might have told. Yeah, like a politician. I will live up to it. If in case I forget, ಹಿಂದೆಗಡೆ like opposition party ಅವರೆಲ್ಲ ಹೇಳ್ತಾರೆ ಮಾಡಲ್ಲ ಅಂತ ಹೇಳ್ಬೇಡಿ. You straight away send a message to me asking, sir, you were told you will share this, please share this. You tell, I will share. I am not contesting in elections. I am not made any fake promise. Yeah. Huh? Comment ಮಾಡ್ತೀರಾ? Send ಏನಪ್ಪಾ? ಫಿಲ್ಟರ್ ಹಾಕ್ಬಾರ್ದಿತ್ತ? ಹಾಗೆ ಚೆನ್ನಾಗಿರ್ತಿತ್ತ. Light was dim. Okay. Listen. For a cash transaction, it would be somewhat like this. You have purchased goods or you have sold goods, that customer will give you money. Khatam. This is a cash transaction. What happens in a cash transaction? You sell goods Customer will give you cash. End of the story. But what if the customer says that he cannot pay the money instantly? You will sell the goods to customer. Customer doesn't have money to give immediately. Customer will say that he or she will pay little later. When he says that he or she will pay little later, you will wait. After some time or after some months, when you go to the customer and then ask, "Hi, how are you?" They'll ask, "Hi, who are you?" You are so upset not because they didn't recognize you, but because you are going to lose the money. It's going to become bad debt. Not fair, no? Next time you will not be willing to do credit transaction solvents. To promote healthy credit atmosphere, what you do is you sell the goods to them. When they say that they will pay after 1 month, you will not say no, 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 cash and carry. You will not tell them. What you would do is you would send one document with them. You would then send one document along with the goods. In this document, what have we written? Read it. I unconditionally order you to pay me a sum of rupees 10,000 after 30 days. You give this to that person and you say, first sign, then touch the goods. First sign, then touch the goods. Our buyer or customer, what will he do? He will sign that document and then send it back to us. Same document, finally, signature, Rai. Rai is his name. Rai is his, our name is drawer. Our name is, why? We retrieve the document, no? So we call ourselves drawer. Drawer is the one who will draw the document. Drawee is the one who will code the document. Is codable. So we draft the document and then send it to him. He is coding the document. Is codor ಹೆಸರಲ್ಲಿ E ಇರುತ್ತೆ. Transferer, transferee. Payer, consigner, consignee. Understood? Very good. So the drawee will sign it and then give it to us. After 30 days, buyer cannot say, "Who are you?" Will say, "Signature, yaar. You signed, no? See this, give me money." Or if he doesn't pay, we can sue him. We have his written signature there. Are you getting what I'm trying to tell? Yeah. So this paper, what we send it to our customer along with the goods when it is sold on credit, take his acceptance in signature is called as bill of exchange. What is it called as? Did you understand bill of exchange? So what is bill of exchange? It is an unconditional order. It is an unconditional order means when I sell the goods to you, I give the document to you. Can you change the terms, change the date, change the amount, change the days? Nothing. Sign madbeki. Only place where you will touch in the paper is signature place. Nowhere else. So I am not requesting. I am not asking you to promise. I am ordering you. And that order is, you can't say, I will sign if but two is not there. Sign. That's it. It is an unconditional order. It is an unconditional order. See here, I unconditionally order you. Okay. This unconditional order is made by drawer. Who's drawer? Seller. Seller. See here, drawer. Seller is doing it. Made by drawer. Who accepts it? Drawee. Acceptance means signature. See here, he accepts it. So this guy is drawer. This guy is drawee. Accepted by drawee. ಅಲ್ಲಿ ನೋಡಿ signature ಮಾಡಿದ್ದಾನೆ. Tick mark. Signed. To pay. What is it? To pay a specified sum. You can't say, I unconditionally ordered you to pay whatever I ask. No. It should tell the amount. See, in that bill of exchange, we mentioned how much? 10,000. Unconditionally order you to pay a specified sum. And it should be on a specific date or at the end of specific period. In our bill, we mentioned 30 days. What have we mentioned? So bill of exchange should mention when should we pay? After 30 days. Or I should mention the date. You should pay on 1st of January. Are you getting it? So either on a specific date or at the end of specific period. To drawer or his order. Meaning drawee is there. No, drawee has to pay money to me. Or if I don't want to receive money, I will say drawee. Hey drawee, pay it to my friend. And the drawee should pay to my friend. Are you getting it? So money can be either collected by me or it can be collected by someone whom I order. Drawee has to pay to that person. So to pay me or my order. Yeah, that's it. So this is the definition of our bill of exchange. And the one who's paying money is this guy. So drawee, payer, buyer. And receiving money has to be me or somebody else. So I am receiving money. Is kodadu. I will become payee. Will I become? I need not be payee, but I can be payee. Payee can be me or Somebody else. Payee can be me or understood. Next, what are the various dates involved in bill of exchange? Number one, it is called as date of drawing. Date of the date on which drawer drew the bill. The date on which drawer prepared the bill. That is date of drawing. This is the date that will be mentioned on the bill here. So have a look here. In this example of ours, here it is there. No? This is date of drawing. 1st of December 2023. Next, date of acceptance. This is the date on which drawee will sign the bill. I will give the bill to my drawee. What date will he sign? Now, if you come to this example, he has signed here. Below that, you will write date. I sent the bill to him on 1st of December. He signed on 3rd of December. 3rd of December will be very good. Date of acceptance. Understood this? Then let us understand the next one. That is bill date. Bill date will be either date of drawing or date of acceptance. Depends upon the type of bill. Bill date will be date of drawing or date of acceptance. Depends upon the. So there are two types of bill that we call as bill after date and bill after sight. If it is bill after date, bill date is date of drawing. If it is bill after sight, bill date is date of acceptance. Very short. Date of acceptance. Understood? Okay. The date on which he signs, it will become bill of exchange for bill after sight. For bill after date, the date on which I drew only, the bill will become, how to say, it will become a bill of exchange. Are you getting it? How do we get to know whether it is bill after date or bill after sight? You should mention, is it bill after date or is it bill after sight? Or if it is in the exam, question will mention to us if it is bill after date or bill after sight. Okay, now what's after this? Next, we're going to discuss due date. What is due date? It is the date on which bill is due for settlement. Date on which bill is due for. This again depends upon the type of bill. So there are two types of bills. One, bill with specific period, bill with specific date. In the bill, I mentioned 30 days. That is bill with specific period. In the bill, I mentioned 1st of January. That is bill with specific date. If it is bill with specific period, at the end of that period, it will become due date. Bill date plus bill period. Here, 1st of December and 30 days. So I will take bill with specific period it is. So I'll take due date as 1st of December plus that date. 1st of December plus 30 days. How much will it become? 1st of December plus 30 days is 31st of December. 31st of December is our due date. What if it is bill with specific period? Specific date. In the bill, I would have to mention date. See here. Pay me or my order sum of rupees 10,000 on what date? Date is mentioned. That date is due date. That date, what is already mentioned is. Very good. Next thing that you should know is maturity date. Is maturity date and due date same? It can be same, but it need not be same. Are you getting it? Okay. It depends whether it is bill with specific date or bill with specific period. If the bill is bill with specific date, then the same date is due date, same date is maturity date. If it is bill with specific period, then after due date, there is 3 grace days given, then it will become maturity. Due date is not maturity date. Due date plus 3 grace days is maturity date. Very good. Now, the next question that we need to discuss is about holidays. What if maturity date falls on a holiday? Hey, remember, if due date falls on a holiday, we don't care. If due date falls on a holiday, we don't care. What we care is maturity date falling on a holiday. If maturity date falls on a holiday, we should again check, is it bill with specific date or bill with specific period? You should check if it is bill with specific date or specific. If it is bill with specific date, that date itself is maturity date. We don't care about holiday. If it is bill with specific period, then holiday comes into. Okay, two types of holidays. Known holiday, unknown holiday. Known holiday, how many are there? Christmas, so Gandhi Jayanti, Children's Day, Kanakadasa Jayanti, our message ಮಾಡ್ತಾ happy Kanakadasa Jayanti. What are you doing? Texting? You and me. I can see. Texting. Throughout you are laughing and talking. I ignored. Now you people are texting. What is this? Keep your phone inside. It's online students, so you. Phone. You, ma. Keep it inside. Desk is not inside. You have no clue. Guys in the class, if they use phone, I'll ask them to open the zip, keep it inside, and then start the class. I won't even accept it if they keep the phone in the pocket. Mm. Known holiday and unknown holiday. Oh, Guru is back. Em Guru, em samachara. ಸ್ವಲ್ಪ time. We'll talk. Yeah. Known holiday. How many known holidays? What are the known 5 known holidays? Independence Day, Republic Day, 1st of April, 1st of April, 31st of March, 30th of September, and all Sundays. How many? 5. 26th of January, Republic Day. 15th of August, Independence Day. 1st of April, beginning of financial year. 30th of September, half yearly closing. All Sundays. ಏನಾಯ್ತು ರಜೆ ಇತ್ತ ನಿಮಗೆ ಕಾಲೇಜು? They both are excited. They're planning. College ರಜೆ ಇಲ್ಲ. Bills of exchange, maturity date if it falls. They're like planning all Sundays. Not for us. Then, if it falls on a known holiday, then the day before this will become maturity date. The day before. If it is unknown holiday, that is any day other than this, then the day after. The day after. Usually you don't have to worry. Other than these 5 holidays, if there is any other known holiday, they will tell. Some date. Okay. Sunday also you don't have to remember. If 29th of August is Sunday, you don't have to mug up the calendar and go. They will tell in the question 29th of August was Sunday. Or they'll tell, sir, they have not told, sir, but I know, sir, I know that day very clearly. What happened on that day, I can't forget. You don't forget. I don't have a problem. But don't apply that in the exam. Exam only and only if they tell it is a Sunday, it's a Sunday. Otherwise, it's not a Sunday. Are you getting it? If it is any unknown, second Saturday now. Okay. If it is an unknown holiday, then what do we do? The next working day. Next, anyone has some question, we're like, okay, sir, first there will be one unknown holiday, that next day will be one known holiday, the day before that also will be one known holiday. Anyone like any question like that? No, sir, 16th of August was unknown holiday, sir. 15th of August, Independence Day. 17th of August, Sunday. Now tell. You tell me when is the maturity date? Maturity date ಯಾವತ್ತು 14th 15th ಯಾವತ್ತು ಬಿದ್ದಿತ್ತು? What if maturity date is on 15th of August? 14th is Sunday. 13th. 13th was strike. 12th. Next working day. 15th ಆದ್ಮೇಲೆ 16th. Sir, 16th is Sunday. Hey, 14th is Sunday. 16th is Sunday. How many days go? Not over. Not possible. One day you will work, no? That day. Got this? And they won't use that much use. Okay, now listen. Got this part? Yeah? Okay, there are types of bill. Listen to me carefully. Based on, what to say, type of bill date, it is called as 2 types. 1, bill after date, bill after sight. For bill after date, bill period starts after date of drawing. For bill after sight, bill period starts from date of acceptance. Based on maturity date, there are 3 types of bills. Number 1, bill with specific period, bill with specific date, and bill on site. Not bill at site. Bill on site, or bill on demand, or bill on present. Bill on site or bill on demand or bill on presentment logic is whenever they ask, then only we should honor. There is no due date, there is no specific date, there is nothing. Like they will write, I unconditionally order you to pay me 10,000 rupees on demand. The moment you sign it, till the time you are liking my Instagram post, all good. The day you put one haha smiley, or the day you put one comment, I'm like, no, give me my money now. You get this? Like that. Like it's like between them terms. Or every time I'll ask, hey, can I ask you for money? Do you have? Oh, I don't have. It's okay, pay me next week. Hey, do you have money? No? Okay, fine. It's okay, pay me next week. Then next week I see you full partying Friday night. Pay me my money today. Today, I'm sending you the bill. No, I'm not listening. I'm not listening. Over. Cut. Over. Cut. That's it. That is bill on site or bill on demand or bill on presentment. You do that now when your friend is talking, you don't want to listen. Don't tell me anything. I'm not listening anything. I'm not listening anything. I don't know. That's it. So we have discussed this part. Then they will ask you to do journal entries in the books of drawer, in the books of drawing. Be prepared for both. There are Three options that is there with the drawer. When the bill is drawn, acceptance is received. Number one, he can hold the bill till maturity. Wait till the maturity date and then give the bill, collect the money. Option number two, discount it with banker. When you say discounting it with banker, you will give the bill to banker. Banker will deduct a part of money towards discounting charges and give the balance money to. On the maturity date, banker will ask the money from drawee. If the drawee pays the money, good. If the drawee doesn't pay the money, banker will come back to us, collect money from us. We have to then collect the money from our drawee. This is called dishonor. This is called third option is called endorsement. What is it called? I have sold goods to my customer. My customer has accepted the bill that I have drawn. I can wait till the maturity date or discount it with banker, or I have to pay money to my supplier. My supplier is about to raise a bill on me which I should accept. I'm like, "Shh, wait, tamba. Don't draw a bill on me. My customer has accepted a bill. I give this bills receivable to my creditor. And I'll ask him, you collect money from him. What is this is called as endorsement. I am seller, he is buyer. This guy supplier. And I am drawer. My customer is drawee. My customer will become payer. I will not be paying. Why? I am not keeping the bill with me. I am giving it to my supplier. When I give it to my supplier, we call it endorsement. What do we call it? Endorsement. In this endorsement, I am giving it. Endorser. He is receiving it. He is endorsing. And our endorsee will be payee. Why? He collects the money from our customer. If our payee doesn't pay the money to our endorsee will say, "Hey, my endorsee will give the bill back to me. Dishonor. He will give it to me. Don't club the entry from here to your bills payable to bills receivable antela paribedi. Right from endorsee to us. I will receive the bill from endorsee. Bills receivable to endorsee. I will give it to my drawee. Drawee to bills receivable. Understood? Root it step by step. And these are the three options. In this case, whenever there is dishonor, whenever there is something additional called as noting charge. Noting charges will be paid by the person who has the bill in hand on the date of maturity. On the date of maturity, if the bill is in with banker would have paid noting charges. On the date of maturity, if the bill is with endorsee would have paid noting charges. On the dishonor date, if the bill is with me, I would have paid noting charges. Banker, endorsee, or me, one of us would have paid it. But one of us nahi, all of it together, I would have to pay both of them, banker or endorsee, and I have to claim it from my drawing. Why? Whoever did the mistake should get punishment. Noting charges are paid because bill is dishonored. Bill is dishonored because our drawee did not pay money. So drawee should not just pay the bill amount now, he is liable to also pay noting charges. Noting charges is expense to drawee, paid by drawer or banker or endorser. It should be passed to drawing. Everyone. Okay. Then, last part. There are two things that can happen against a bill of exchange. One is retirement, second one, renewal. There is a bill date, there is a maturity date. You sign the bill and accept it on the due date, sorry, bill date. You settle it on the maturity date, no problem. But some people can't settle it on maturity date. Or they want to do it on a date other than maturity date. If you settle the bill before maturity date, it is called as retirement because bill will die before maturity date. Second one is called renewal. Maturity date came, bill is still not settled. You will ask for extended period. Now, I am drawer, you are drawing. I am supposed to sell goods to you, you are supposed to pay me money. I have raised a bill on you, you have accepted for 3 months. At the end of 2 months, you want to pay the money to me. Bill period is 3 months. At the end of 2 months, you want to pay the money to me. We call it retirement. Now I am happy because you're paying the money to me before. Some money which I should receive after 3 months. If I'm receiving 1 month in advance, I'll be happy. So I will give you discount. I will give you to draw a discount is expense on retirement. To draw E, discount is income on return. Second thing, there is something called renewal. After 3 months, when I ask you for money, you will say, yo, I don't have money. Give me 1 more month time. 1 more month, the money is getting delayed. No, I am upset. I am upset. I want to be happy. So I charge you interest for delay of 1 month. It might so happen that not the entire money is delayed. You might pay part of the amount and part of the amount you might sign an UB. If the part of the amount is paid, on that part what you pay, no interest. Only the part that you are delaying, on that part which are interest for that extension period. Such interest is expense to you, income to me. Expense to you, drawee. Income to draw. Got this? Very good. Then on the maturity date, it can be honored, dishonored. If it is honored, good. If it is dishonored, we reverse the entry. Sometimes after dishonor, they give that the partner is the person is insolvent, meaning you won't receive money. If you are supposed to pay me money and you become insolvent, to me it is expense called bad debt. To you, it is like income. We call it deficiency. We call it deficient. Last topic in bills of exchange, accommodation of bill. Throughout it is trade bill, meaning I have sold goods to you, you have purchased goods from me, so I raise a bill on you and you accept. Accommodation, ma'am, I have not sold goods to you. You have not purchased goods to me. There is no basis for raising bill. But both of us want money. So what do? I will raise one bill on you for 10,000. You will say, hey, I don't have to pay you money anything. I say, it's okay, sign. You will be like, you will sign. I'll say, wait for some time. I will take the bill from you. I am drawer, you are drawing. I go to the banker and then discount it. Banker will give me 9,000 rupees or 9,500 rupees. 500 rupees discounting charges. Banker gave me 9,500. I keep 4,750. I give you 4,750. Happy? Both of us have money now. On the maturity date, banker will come and ask you money. How much? 10,000. I will give you 5,000 from my pocket. You will put 5,000 from your pocket. Together, we'll give 10,000 to banker. What happened? We discounted the bill with the banker and got 9,750. We share it among us in 50-50 ratio. Got this? We raised a bill for 10,000, received 9,500 from bank, shared it 4750, 4750. On maturity, we are supposed to pay bank 10,000, we share that 5,000. So I received 4,750 from bank, paid you 5,000. So my expense is 250. You received 4,750 from me. You put 5,000 from your pocket to pay to bank. Your expense is 250. 250 expense, 250 expense, together 500 discounting charges paid to me. Both of us got money as credit. Are you getting this? This is called accommodation. If it was just this, it would have been nice. The problems in the exam will be like, I raised a bill on you for 10,000, 1:1 ratio. We got 9,500. We shared 4,750, 4,750. On the maturity date, you dishonored the bill. Bank came back to me. I paid 10,000 to bank. My 5,000 I paid. Your 5,000 also I paid. So I should recover 5,000 rupees from you. I will draw one more bill on you for 10,000 and then discount it to banker or 15,000 kabil. That again will split. On the maturity date, again you fail to pay. You are considered bad. Then I end up paying the entire. That is the questions on this topic. ಆಯ್ತಾ? Or it can also, mic is battery ಆಗೋಗಿದೆ ಸರ್. ಇದಕ್ಕೂ ಬ್ಯಾಟ್ರಿ ಆಗೋಯ್ತು. ನಾನೇನ್ ಮಾಡಿ. So the next set of ಇದು ರೆಡ್ ಅಲ್ಲಿ ಇದೆ. ಅಂತೆಲ್ಲ ಮಾಡಬೇಡಿ. ಕ್ಲಾಸ್ can't hear. I would have to shout. If I shout, then I will be calm. ಇಲ್ಲೆಲ್ಲ ಚಿಕ್ಕ ಬ್ಯಾಟ್ರಿನೇ ಇದೆ. We need AA batteries. There is no AA batteries here. Hey, silent. Check, check, check. Yes. Back. Hmm. Nothing happened. Kidding, kidding. ಅಲ್ಲ ಶಾಕ್ ಹೊಡಿಯೋ ತರ ಮಾಡಿದ್ರೆ ಅಖಿಲ್ ಓಡ್ ಬರ್ತಾನ ಅಂತ ನೋಡಿದೆ. ಅಖಿಲ್ ಅಲ್ಲೇ ನಿಂತ್ಕೊಂಡು ಮಜಾ ನೋಡ್ತಾ ಇದ್ದಾನೆ. Yes. ಹಾ, listen, listen. Please listen. Some questions will be like, I am drawer, you are drawee, we accommodated the bill, discounted and then shared the proceeds. Some questions may, dishonor is not done by drawee, but drawer, I am supposed to pay you 5,000, no, I failed to pay. I failed to pay you 5, you pay entire 10,000. So then you will draw a bill on me. Drawee will become drawer, drawer will become drawee. And pre-agreed ratio will be given. Based on that, you will do this problem. The only simple way to do problem on this topic is you need to draw a very clear working note. Then the problem will become as smooth as makhan. Sir, you know this? ಬೆಣ್ಣೆ ಎಷ್ಟು ಸ್ಮೂತ್ ಆಗಿರುತ್ತೆ ನೋಡ್ಬೇಕು. ಹಂಗ ಸರ್ ಹಂಗೇನೆ ಹೇಳಿ. I'm telling it in my voice, okay? No psycho. See, this is a kind of table. If you prepare a table like this, total amount, drawer, drawing. What is the ratio? What is the bill amount? What is the discount proceeds? What is the discounting charge? If you share like this, it will be very, very easy. If you draw one table like this, one bill is one table. There are questions with two bills, no? Bill number one box, bill number two, one more box. If you draw these two tables, any number of journal entries from any person's perspective, whether it is from X perspective or Y perspective, it will become very easy. So this is what you guys should practice. I think in ICA material, they don't do working note like this. They straight away start with journal entry. But they might not allot any marks to you for doing this working note. But this working note will ensure that your journal entries will flow butter flow. Like flow like butter. Easy, smooth and nice. Are you getting it? So I'll share this file with you people, which has solutions to all the questions of Yash's material. Those of you who don't have it for them. Rest of you like sir ನಮ್ಮ ಹತ್ರ ಇದೆ. ನಿಜವಾಗ್ಲೂ ಇದೆಯಾ? ನೋಡೋಣ. ಚಾಲೆಂಜ್ ಅಕ್ಸೆಪ್ಟೆಡ್. ನಾನು ಸ್ಟಾಪ್ ಮಾಡ್ತೀನಿ ಆಕ್ಸೆಸ್. ಹಂಗಲ್ಲ. Kidding. Jokes. I will share this file again in the same Telegram group for the people who don't. ಏನಾಯ್ತು? ಪ್ರಿಂಟ್ ತೆಗೆದು ಇಟ್ಕೊಂಡ್ಬಿಟ್ಟಿದ್ದೀರಾ? ಡೌನ್ಲೋಡ್ ಮಾಡಿಬಿಟ್ಟಿದ್ದಾರೆ. ಅವ್ರು ಸ್ಮಾರ್ಟ್. ಸರ್ ಈ ತರ ಹೇಳ್ತಾರೆ ಅಂತ ಗೊತ್ತು. ಹೌದಾ? ಹೌದು ಮಾಡಿ. ಇದೆ ನಮ್ಮ ಹತ್ರ ಡೌನ್ಲೋಡೆಡ್ ಎಕ್ಸೆಲ್ ಶೀಟ್ ಅಲ್ವಾ? So what I would do is I'll again share the link with all of you people so that whoever wants to access can access the answers. Yeah, share the PDF of that I already shared. Which PDF? Presentation cannot be converted to PDF. That is a very big file. TY question file already shared. I will share all the past exam papers analysis. I will share all the class file entire file ka answers. And I have shared compiler I have already shared, and so far I have already shared. True or false answers on all the chapters I have sent link chapter wise. Do take that. It's on Telegram. Oh, you guys have not joined Telegram group. All you have to do is everyone take your phones out. I'll tell you how to get TOPA. Shall we? Weightage for this chapter. Let's quickly see the weightage and then go to the paper. That is the last time I came for 15. This chapter, company accounts. No, we are discussing. Yes. This chapter, people didn't expect. Bouncer. See, usually it doesn't come. 15 marks accommodation of bill in December 2022. And December 2021 में bills for collection, retirement and renewal had come. Accommodation of bill 10 marks and renewal, retirement, insolvency 5 marks in May 19. ಮಧ್ಯಲೆಲ್ಲ dash. We've so far discussed papers of several exams. The most recent examination we didn't discuss, December 2022. So for December 2022, detailed exam paper analysis is there. Each of the question what is there in the exam paper, I didn't want to talk about this from the beginning. I wanted to tell this at the end. Each question, I will tell you where is it covered and how is it covered in our class material. Question number 1A, true or false was there. 1, 2, 3, 4, 5, 6. All the 6 questions, I can tell that it is covered in class. Except one question, rest everything, 4 of them were covered in APTA. We have something. Now you took the TOEFL, no? True or false answers. Something similar we have called as APTA. APTA is also there on almost all the chapters, except for 3 chapters. I made it on each chapter. Each chapter may 50 marks, 60 marks, MCQ kind of a test. MCQ, true or false, match the following, fill in the blank, CRC on the test form. This can be taken online, Google form. The link is again there in the same group. If you don't find, ask there, sir, what is APTA? Question mark. You send message. Before I could reply, everyone will send the link of that. 1 week while you get. That APTA may you can take chapter wise. What you can do is after you finish reading any chapter, to evaluate how well you understood that chapter, you can take APTA test. So out of the true or false that was there in the examination, 4 of them were covered in APTA. That one question NPO was covered in TOEFA, and company accounts we had covered it in the class debentures part. I had made them right types of debenture part. So all the 6 true or false questions what was there was known and then discussed in the class in detail. Yeah. And next part, I'm trying to tell you about the second question number 1B and 1C, theoretical framework question. Provisions and contingent liabilities. People got tortured for this question. Every random time, whoever comes late, stand up. What is provision? So that question was there in the class. We have discussed it and we have written in the class. And change in the method of depreciation, same to same question was question number 14 in our class. And last batch we did something, one contest called 10-10 or 10-10. 10 days straight, every day one question was given as test to people. Whoever answered all the 10 questions correct on the 10th day got a gift. Unfortunately, no one from Jainagar. Yeah, 5-6 of them won it from Shishan. So they all got it. That's called 10-10 or 10-10 contest. There also the same question was covered. And a similar thing, BRS question, same to same question was covered in class with different numbers. And accounting process rectification of errors, same. So I will not boast much about it, but you can see I have written where is it covered and how. You can check it from our class notes. You get that? So that's how it was for the last batch. I hope I get to do something so cool for June 2023 examination, saying that see, this, and all we discussed and everything has come in the exam. I hope to say that. And what ultimately talks is results. No matter how much we talk about what we teach, what we do, and everything. So the icing on the cake comes our December 2022 answer paper of one of our students. You guys know him? Too many people had scored well, but only one student's paper I took. Hey, can you see corrected answer scripts? Yes, 11th. So this is how your answer paper will be scanned and then sent. This right side part, whatever you would have written, wherever you would have written your roll number will be cut. They will not show. So they put one barcode here. By this they'll understand. And here there is this box. You need to tick whatever answers you have written. Don't tick 1A, 1B, 1C, 1D and all. Should only tick whether you written question number 1. 1 ಬರ್ದಿದ್ರೆ 1 ಪಕ್ಕದಲ್ಲಿ tick. 2 ಬರ್ದಿದ್ರೆ 2 ಪಕ್ಕದಲ್ಲಿ tick. Some people get scared because they have not ticked. It is supposed to be ticked. If you don't tick, it doesn't mean that they will not correct. Just for them to check. Now, for example, they correct 1, 3, 5, 6. You have ticked second one. Then they check, hey, second one tick ಮಾಡಿದ್ದಾರೆ. As he written, they will check. It is not like you don't write second one but put tick mark and then confuse them. It will not work. Just as a secondary check, you do that. Okay. Done. And then the marks will be allotted here. So this is the first page. Behind that first page where the marks will not be given. And illi tick mark ಬರುತ್ತೆ, ಇಲ್ಲಿ marks ಹಾಕಿದ್ದಾರೆ. ಇಲ್ಲಿ tick mark. It's not getting completely visible because from the website I have taken a scrolling screenshot and then downloaded this file. So usually there will be one tick mark here. The white box is a tick mark or into mark become. So 2 marks is allotted for this question. For each question they'll allot marks. Every new answer is supposed to be started in a new page. Then true or false, you don't have to start in new page. True or false, one page, 6 pages now. True or false in the same page. Other than that, every question you start in the new page. You can change the order of the questions, but you cannot change the internal order of the questions. You cannot change in the ICA ಹೇಳ್ತಾ ಇಲ್ಲ Rajavardhan sir ಅಷ್ಟೇ. You can write 1B, then 1A, then 1D, then 2C. You can write like that. But I would say don't write. It will be frustrating for the people who's correcting the paper. If you don't know if you don't know 2A, but you know 2B, 2C, 2D, you know what do? Leave space for 2A. Then write 2B, 2C, 2D. Later, if you have time, come back and write 2A. If you don't have time, leave it. No problem. Don't write 2D, 3A, 4B, 6C, 5A, 1A, then 2B, then 1B. Don't do that. If you start one question, cover all the sub questions of that, and then only you can go to next one. Are you getting this? This is a clear instruction. Lot of evaluators who are kind-hearted accept it, but not all the evaluators are kind-hearted. Some people fight with their wife when they come to collective rewards. Remember that. Okay. When you start one question, write all the sub questions and then go to next one. If you don't know answer to some sub questions, leave space for them. Leave space and come back and fill it later. Leave more space than required. It is okay. I've already told you. Tree is already cut. So all the questions you got full entire 2 here. And same here also. All the true or false. Writing the reason is also more important. For something, the reason is only 3 lines. For something, the reason might be 4 lines. For something, the reason might be 1 line also very rarely. Don't worry about the length of the answer. Are you getting it? If you think the reason is only 2 lines, write only 2 lines. Understood? Okay. Then this for difference between questions, always 2T table. Write separately. Don't write paragraph. Write T table. And it's okay if the point is very crisp. Only one line, small point. Don't write repetitively and then write the same story, direct speech, indirect speech. Do not become exam. If you have only 3 points, write only 3 points. You'll be awarded full marks. Provision contingency differences. Language is exactly same if you observe. See, it is a present obligation arising from past event resulting in outflow of events embodying economic benefits. Remember, we discussed the same definition. So if you remember it like this, and all, no, language will be exactly same to same. Word to word, you will be able to vomit in the exam. Not just the student who scored 97. People who scored 60, 50 also, I will show you the answer. One student ka 44 ka answer sheet I have. So there also I have seen. Though they've scored very less, whatever they've scored, the language is perfect when it comes to theory. At least that much drilling is done when it comes to theory part in accounts. Yesterday also we've stressed good on that. So you'll be able to ace it, guys. Don't worry. Okay, only 4 differences he wrote. Didn't try to stress it too long. And then ledger account, if you observe, journal folio column is written very small. Even if you skip it, it is totally okay. And date column for management, what you do is, you don't have to write DD, MM, YY. In the beginning of the ledger, you write the year. After that, you only write date and month. See, it is 1st of April 2019. Repetitively than writing everything, in the beginning, you will write 2019. Then write 1st of April, 1st of April, 1st of April. This will work. This will save your space. You can do this one. And you don't have to write totals here. 1,50,000, 1,50,000. Just draw 2 lines. It will be more than sufficient. Ledger total. And lines are be not neatly drawn here. Full neat again lines hakil. It is not very much required. Even if you don't draw lines, if the alignment is nice, you will get full marks. If you start from Mumbai, end at Chennai amount column, then alignment should be straight. If you keep that straight, it doesn't matter whether you have drawn lines or not. Working notes are part of the answer. If you don't write working notes, you will lose marks. So be little cautious. Please do working notes. Got that? Then second question. This is on PRS. This is where this guy has lost marks. He forgot that one adjustment. Bank interest and bank charges was there in the same adjustment. He wrote bank interest, bank charges forgot. Went to next adjustment. That adjustment is wrong. 1 mark cut. End answer is wrong. 1 mark. ಇನ್ನೊಂದು ಮಾರ್ಕು ಹಾಗೆ 98 ಕೊಡೋಕೆ ಇಷ್ಟ ಇಲ್ಲ 97 ಕೊಟ್ಟಿದ್ದಾರೆ. They have deducted 3 marks in this BRS question. Otherwise, if you see everywhere else, full marks is got. And this is journal entries that Hare Rama and Sons. This was rectification of errors question. Been allotted full 8 marks. Amounts are written. Narration has to be written for every journal entry. Journal entry based questions will come from only 3 chapters. 1 is rectification of errors. 2 bills of exchange. 3 company accounts. In all the 3 chapters, please do write narration. Some cases in rectification, they will tell in the question, need not write narration. They will tell. Only if they tell, you don't write. If they don't tell, you should write narration. You will lose marks for not writing narration, though your answer is correct. So please be cautious on that aspect. And you will not write anything in the margin column. Marginal enu bariyalla, except for question number. And once you write question number on left side, in the middle of the paper also, once you write solution to question number 2B, solution to question number 3B, write it in the middle of the paper and then continue. So that sometimes your question number mismatch, you will check twice. What if you write the wrong question number and then right answer? So if you write 2 times, there is a good possibility of checking once though before you write. That's the logic. And ಸ್ವಲ್ಪ ಜಾಗ ಇದ್ರೆ don't start the new answer here. Go to next page and then start the new answer in the new page. And don't forget, for every question, depreciation, company accounts, NPO, in the beginning you write in the books of whose books are you doing these entries? Write their name and then start the answer. Don't forget that aspect. And what else do we have? That's it. This is the exact same thing. Philosophics. I showed the table. Same working note. This working note, this type of working note is not there anywhere else. You see any author material, ICA study material, any other person, they won't do working note like this. They straight away in journal entries only they try to do adjustment. It is complex. Do one working note, journal entries will be able to do much faster than before. Are you getting it? So one bill, one journal, one bill, one table, one more bill, one more table. Two bills, two tables if you do, done, sorted. Journal entries will become very easy. Working notes are part of the answer, but not the answer. What you do is you leave one entire page or 1.5 page for journal entries. In second page, second half, you do working note. Then come back to first page and then write journal entries. Got this? Whatever they ask in the question, you should give them first. Whatever you want to do extra working note, do it after the answer, not before the answer. Then this is the question on bills of exchange. Very, very easy one. Here you be cautious whether you take a period as days or months. If you take days here 365. If you take months here, 12. Yeah, average rate account current we didn't discuss in detail, but I hope you will pull it off. Very good. So then any there? Revaluation account. This is partnership accounts question. Very easily possible. See, partners capital account managed. General reserve by general reserve account kelagade. So this small adjustment you can do. Full marks has been allotted for this question also. And they don't just give marks randomly or they won't deduct marks also randomly. There is specific allocation. 2.5 marks was allocated for revaluation account. Correct either 2.5 full marks. It is not even 2. Based on each item, there will be marks. There will be mark for this plant. There will be marks for stock. There will be marks for furniture. Each of them will have marks. Maybe half of mark for each or somewhat like that. So don't get disheartened. Even if your balance sheet doesn't tally, you will still get. I've seen people, none of the balance sheets have tallied. This is not even in foundation. At CA final level, not even one balance sheet tallied. Still scored 70 marks. Possible. Possible. Are you getting this? You don't have to get the 100% of the answer right. Even if you get 80% of the answer right, it is more than sufficient. And strive to write all the questions 80% rather than writing 4 questions 100%. 4 questions 100% ginta 6 questions 80% will give you more marks. Remember that in mind. If you think you got stuck at one question in a specific place and you think like additional 2 minutes might not help you close that problem, don't waste time on that problem. Leave that problem there, go to next problem. At the end, if you have time, come back to that problem. Got it? Then you have a question on incomplete record something. Not for profit organization here, receipts and payment account and balance sheet, opening balance sheet, closing balance sheet, both are there. See here, space bitilla, Madhidal one line bitilla. So this 23,530 is wrong. Didn't have the place to write 18,530. Scratched and then written. If you would have left one line gap in between, it would have become much more easier and it would have looked, now it is very clean. It would have looked more clean. So leave one line. It is okay. You don't have to prepare balance sheet in 4 lines only. You do balance sheet half page. Or you do only opening balance sheet in this page. Do closing balance sheet in next page. It is much more nice. It will look much more clean. Are you getting what I'm trying to tell? See, no matter how smart you are, you might do some errors. Examination makes you do that. But give some space or give some room for making these errors. Yeah. Yeah, it is okay to do mistake. Remember, you will do errors in the exam. You will not be like flawlessly. Ondu scratch at the exam ali bariyak agala. You will end up doing small mistakes. But have you given yourself some bandwidth to correct that errors? Is the point. If you have not given yourself any bandwidth to correct the errors, then you should correct. Otherwise, you don't. See your white box you see, no? All those are tick marks. So each item is ticked. Opening balance, cash, Mohan, every item they'll check. Don't think randomly you'll write marks. It won't come. And if you've written things correctly, even if your end answer is wrong, you will still get marks for each entry that you've written. Stepwise marking is always there in the examination. And yeah, this computation of goodwill, one small question that was there towards the end. And P&L account, this is question on, yeah, that final accounts based question was there, no? That one also he could do. That not many would have done. See, 10 marks, they have given, 20 marks. That's it. And in the empty last pages, please do draw a line. If you have time completely, you draw a line on every page. If not, you can stop. Yeah, that's it. In North Idea. Why are you scrolling? End. And later, this is how the result will be given. Each question, how many marks has been allotted? 19 marks has been awarded out of 20. Or somewhere 1 mark is lost in true or false. One true or false question, 1 mark they've cut. And one BRS question, 2 marks they've cut. Rest everything 10, 10, 10, 10, 20, 25, 5, 10, 10, 0. This is 6th question, Bardila. 6th question is left in choice. And if there is extra time, should you write extra question? Yes, you can write. When you write extra question, what will happen? Will they correct the first five or best five? Best five. They'll correct best five. But you whether to write the sixth question or to check whether one of your question is correct or not is at your mercy. Once you're done with five questions, think, should you write sixth one? Will you be able to complete it? If you don't think you can write 20 marks of sixth question, don't do that. Come back and then check if you written existing five questions correctly. If anything is wrong, is here. If anything is wrong anyway, or you can correct it. Because five questions you written for 20 marks. Another 10 minutes is left. Sixth question you start. You write only 5 marks of sixth question. That question will be corrected, but that marks will never be more than the existing ones. No. So don't waste time on that. Instead, use the time to check if the existing answers are correct, if you can beautify it, if you can draw lines. In theory, if you can underline some important points, that's what you guys should be focusing on. Got this? This is with regard to this paper. I hope I was able to add some value to your preparation in these days. Was I? I would like to tell you a very small story. This is a very, very important thing that I ever read. So, have you all heard of the story of Ramayana? In the story of Ramayana, we know the entire story like, okay, Sita will be kidnapped, Rama will go, Jatayu will come, Lakshmana will come, Bharata will go, so much of story. I am going to tell that part of Ramayana which is very, very light-hearted, very less spoken about, which touches my heart very deeply. So this is at the end of the entire Ramayana, meaning like end of the battle between Rama and Ravana. Rama kills Ravana. Ravana falls on the floor. He's about to die. He's taking his last breath. Ravana, no matter what you call with regard to the human characters, is an epitome of knowledge, epitome of wisdom. Man who was a musician, man who was a scholar, man who was a scientist, man who had every skill in him. It was great loss for the planet for a man of that great stature to die. So at this point of time, Rama runs to Ravana, holds him up, lifts his head, keeps it on his thigh, and then says, "My lord, you are a man of great epitome knowledge. Please don't let your knowledge go into the mud. Please give me your words of wisdom." That's what Rama asks Ravana. Ravana is deeply touched. At the end of a battle, after killing the enemy, the man has the what to say vision to come and ask for, seek for knowledge. Such is the striving for knowledge should be. At that point, Ravana tells Rama a very important dialogue. So this dialogue, don't see it like a dialogue what Ravana tells Rama. See it like a dialogue what is something that I am conveying to all of you. So Ravana tells Rama, and Rajavardhan sir is telling all the students who spent 2 hours, 2 days of time with them. We think life is too long. We run behind things which are not good for us very crazily. Very tirelessly, we run behind things which are not good for us. But we don't appreciate the things which are good for us. We don't appreciate the things which are really good for us. And I could have done so many nice things when I was alive. But unfortunately, I didn't. I didn't. If there is one piece of advice that I can give to you, is that whenever you are running towards something, check, is it good for you or is it something that you want to do? If it is good for you, no matter whether you like it or you don't like it, do it. If you want to do it, check whether it is good for your life. So he only tells that we as a human mind run towards things which is not good for us very badly, but what is good for us is something that will always neglect doing. So this is the last words of advice what Ravana gave to Rama, which I would like to give all of you people. I hope this is my last words. I hope I was able to add some value to the time that you people spent here. That is the most crucial resource at this point of time in your life. Now, if I ask you people to say give some amount of money, you would not be able to give because what you people have right now is resource. The only resource that you have is time. You don't appreciate the resource of time that you have in your hand. But remember that the most vital resource that's there in your hand right now is time. So anything else can be earned back. I appreciate the factor of time that you spent here to be the utmost point. I hope you people also appreciate the time that I spent here to make you people feel good about the topic. And I hope it has added some value to your preparation. Only way of paying back is you guys doing really well and clearing foundation and going forward. So I teach with commercial aspect in mind. Every one of us do for our livelihood. The reason I picked teaching is what I ask myself every day I walk into class. I started doing chartered accountancy to teach chartered accountancy students, not to start practice. And even if I wouldn't have picked commerce, if I would have picked science, I would have become a science teacher. So I wanted to become teacher at first place, and later I decided which subject to teach. So what pushes me to wake up next morning is to teach. And what makes me not sleep in the night is a student not passing an examination. And I am one of the most unhappy persons that I have seen because I don't get satisfaction. The reason is the course that I've picked. Maybe I should have picked something more lighter to teach. The course that I've picked is so bad that I know in a class of 100 whom I teach, only 30 people or 35 people pass and rest 65 don't pass. That gives me restless nights. And that keeps me awake in the night and trying to do things to help people, more people pass the examination. Because I was sitting in the place where you are all sitting today, and I know how bad it was to pay. And everyone fail for the first time once. That first time failure will hit really hard. So it had hit me hard also, and I can't see the same thing happening to a lot of you. So postpone it longer the better, and that's not something very nice to see failure. So I'll do what it takes to help you all pass, not just these two dates, but also after this date also till your examination. And I'll definitely include you all in my prayers in the morning. So I hope you'll all put in your efforts for the rest of the day, and hoping to see you all at Inter. I am not asking you to join here. Wherever you are, whoever came to me for advice also, I never asked you know if anyone of you joined. Right? Good. Right now, don't worry about Inter. Wherever you are, you should be good. You should study well. And the only reason is if you end up becoming a chartered accountant, no, trust me, not just your life, your entire family's fortune will change, and entire community will change. So you people can bring such big difference just by transforming yourself. So don't just see like you're working hard for yourself. I want you all to work hard, because if I can make you people study little harder and you people clear, no, after that you people blossom and you'll create impact on much more lives. So only way to ensure that much more lives are impacted is to give a very big impact on you people for you to do really well in the examination. So this is all from my side. Thank you all for your time. Please spread across the good word in people as to how this session was, so that next time when we do marathon revision also people do come in. If you have any juniors who are taking their course, I am not asking you to tell them to join Ishis Academy. Wherever they join, aspire them to study well. Ask them to not kill time. Ask them to spend much less time on TV, internet, social media, and everything. Push them to study at every point of time. When you try to force their opinion on them, asking them to do specific things, they will not take serious things from you. Tell them what's important. What can be done at any place, you leave it to them. So this is one piece of advice that I would want you to aspire, give it to the people whom you believe. You people think you are looking up to a lot of people here, people who teach, people who are at CA intermediate, or people who are at final. What you are forgetting to notice is you people have already achieved much more things in life than what you think you have. And there are a lot of juniors at your college. Now you people have finished your second PUC, come to degree. People who are juniors to you in college are all looking up to you. They all want to become someone like you. You don't know. So you guys can't fail. You guys can't do nasty things, because some people's know are looking up to you as inspiration. So you should not fall in their eyes. That younger brother of yours, that younger sister of yours, that far cousin of yours who's in school will be looking up to you and then say that I want to do CA like that cousin brother or cousin sister. So don't disappoint them. Yeah, you might disappoint yourself, and you might also kill the interest of one such person. No negative talk about the course. No negative talk about the I would say the course that you're doing or the course that you pick. So talk positive. Least you can do is don't talk, but don't talk anything negative, or don't make fun of the course, fun of the pass percentage and everything. So that's one simple request. And if you go on to do that, trust me, guys, we'll definitely. Right now, we see 250 CA foundation aspirants, not even CA aspirants. CA entry nu pass agala nivella. CA foundation aspirants sitting in the class. It is not much of a time before which we will be seeing 250 chartered accountants as a group. So stay connected, network among yourself, know each other, because very small family of CAs we have. So we'll definitely meeting these very faces at inter, at ITT, at orientation, at inter classes, at final classes, practice. Maybe you guys might become colleagues. You might guys might become partners. You might work in the same industry. You might need each other's services at a later date. One is law expert, one is tax expert, one is company law expert. So don't just leave this all in next 5 minutes. Network each other and then try to build one community wherein you at least stay in touch with each other, not to say good morning, good afternoon, good evening, happy Sankranti, happy Eid or something, but to help each other in the hour of need. So one last request from my side is, please do go to HS Academy on Google Maps and then on the review where you have, please do rate. I am not telling you what to rate. You rate what you felt like, and then please do write a honest opinion as to how the session for last 2 days was. Yeah, please do write about marathon revision on accounts, and that's the one place where I can read from and understand how it went. So remember, life is not a battle to be struggling; it's a game to be enjoyed. Till the time you're learning something, you're having fun. It's all good. The day you guys either stop learning something or stop having fun, trust me, you might start struggling because you might be in a. So the thumb rule to stay happy is pretty simple. It is to stay in the game. So for one last time on this day, I have just one simple question for all of you. Shall I record a video? Let's go on a video. ಎಲ್ಲಾನು ಕಾಣಿಸ್ತಾ Okay, okay, okay. So for one last time on this day, I have just one simple question for all of you. How is the game? The game. You want guys on the top of your voice? How is the game? Bye guys, Tata, take care, bye bye. See you all in CA Inter. Thank you. That's it, guys. Thank you. I will pack up. I will leave. Hoping to see you all very soon. Do well in your exams. One stop late for all our contact. You do have it. Two things to remember. Don't waste time. Reduce your video visuality. Stop those 1 minute videos very importantly. Huh? And what happened? And whatever good things you learn today, incorporate it in the next 24 hours, because if you don't do it in 24 hours, you might not do it. And before you leave this hall, please do write the review, because if you go out, you will not write. So many things will kick in. So simple one rating, one review. Do it before you leave the hall. You get this? I will not check and then send. You put 1 star, not a problem. But if you think 1 star is what it deserves. Chalo. Bye guys.